military force to somehow get it. That's one piece. Then there's the Panama Canal, and then there's Canada as the 51st state in the United States. What do you think is even realistic there? And let's even talk about the political implications of all this, which is to say, the way Canada, for example, or even the folks in Panama right now are reacting to all of this.
They're about to, I live in Miami. My county commissioner, Kevin Cabrera, is about to be the Panama, or the ambassador for the United States to Panama. And so he's going to have his hands full. I do think that out of the three scenarios you laid out here, Trump is most concerned about Panama, not only because of China's presence as a global power, trade superpower, but also because of the Darien Gap, which is the only land bridge connecting South America with Central and North America, therefore. And that has been a major migrant throughway. And so Donald Trump, who is keenly concerned about trade, about China, and about immigration, is looking at Panama and is very concerned about it. So I think out of the three that we've discussed here, that is the most likely for him to devote more time, policy, and resources toward.
What about the Canada piece, though? Because they are our neighbor. They have been an ally, a great ally, and there are now concerns. You read the papers in Canada, turn on the TVs there. I was reading or seeing some video that was coming across on social media, and they're, it sounds like they're apoplectic about what's happening.
I imagine they are. And Canada, for its entire history, has lived in fear of its barbaric brother to the south, the United States, invading it and taking it over. It opted not to become part of the United States, even though a number of our early founding fathers and our early presidents wanted it to. The conservative leader of Panama, and I must say, or better said, of Canada, whose last name is French, and I therefore can't pronounce it because I too am one of these barbarians, he's even discounted this. So this one is a little harder to see out of all of them. The Greenland piece is hard for me to see. The Panama piece is less hard to see out of all three.
Mark, real quick, just finally, and you're talking about the people around him wanting to help him accomplish these things. There was a sense in 2016 that there were people around him who didn't want to help him accomplish things
Correct.
that he talked about. And so that they were almost blocking or preventing certain things or slow walking things. How different is that today, and how should we think about that?
I wrote in Axios on Monday that his incoming chief of staff was his campaign co-manager, Susie Wiles, who's been with him, stuck with him through thick and thin. She has the understanding of letting Trump be Trump and trying to execute on his vision and hiring people who are loyal to him, loyal to his mission, and believe in getting things done for him and not undermining him. That's why, for instance, we haven't seen what we would have seen in the past, which would have been anonymous staff leaks saying, oh my God, this guy is crazy. There's no way we're going to do that. Not hearing that anymore. So that's one of the reasons that we have to take the Greenland, the Canada, and Panama pieces more seriously, is because his staff does.
Mark, I want to thank you for joining us this morning. We will see what happens, and in the meantime, I'm sure we'll talk a lot about it.
We will. Thanks.
Thanks.
Coming up, the state of Alaska is suing the Biden administration over oil drilling leases. Details after the break. Then later, more on the comments by NVIDIA's Jensen Huang that are dragging down quantum computing stocks right now. We'll be right back.
washboardcare.com.
State of Alaska sued the Biden administration for what it calls violations of a congressional directive to allow oil and gas development in a portion of the Arctic National Wildlife Refuge. The lawsuit concerns leases for 400,000 acres of land set to be auctioned to oil and gas drillers this month. Alaska says the leases come with restrictions that make it impossible or impractical to drill on the land. As a result, Alaska says it expects to receive just a fraction of the $1.3 billion the CBO estimated it would get in direct lease-related revenue from energy development there.
When we come back, shares of NVIDIA are rebounding after yesterday's 6% drop. We're going to dig into the comments by CEO Jensen Huang with Morgan Stanley's semiconductor analyst. That is next. You can see this morning that stock is up by about 1.1%. We'll be right back.
Make money.
You kind of said 15 years for very useful quantum computers. That probably be on the early side. If you said 30 is probably on the late side, but if you picked 20, I think a whole bunch of us would believe it. But what we're interested in is we want to help the industry get there as fast as possible.
That was NVIDIA CEO Jensen Huang with his outlook on the quantum computing timeline. Shares of NVIDIA actually rebounding slightly this morning after sliding more than 6% yesterday. By the way, what he said about quantum computing managed to take out a lot of those quantum computing stocks, some of the smaller ones like IonQ, Quantum Computing, Rigetti. Joining us right now for more on all of this is Joseph Moore. He's Morgan Stanley semiconductor analyst. And Joe, I just want to get your take on this. I've been reading a lot of stuff. I mean, after Jensen Huang made his comments the night before last, we actually saw shares a little higher in the morning. Maybe not by a lot, but it certainly wasn't giving back the pullback that we saw later in the day. There were a lot of the tech stocks and other big high flyers that pulled back, though, after we got stronger than expected jobs numbers, just in terms of what the BLS had in terms of jobs openings, those JOLTS numbers. That had people suspecting that maybe the Fed is going to be more reluctant to cut rates anytime soon, and that caused all of these big high flyers to pull back. So do you think the pullback in NVIDIA shares yesterday was more related to what Jensen Huang did or didn't say, or just more related to the overall idea of watching the Federal Reserve and seeing how the economy's doing?
I mean, I think both of those play a role. I think there were also very high expectations around the keynote at CES. And, you know, CES is a trade show oriented around consumer and automotive. And there were some really important developments that came out of the keynote around those markets. But data center is 85% of the revenue. And I think, you know, there may have been expectations that people wanted to hear more about that. So I think you have some of those issues. But, you know, overall, this is still a company in a very strong product cycle. And data center wasn't the focus here. It's investor focus, but you know it's still very strong. So I think it's a combination of some of the market issues that you talked about, as well as maybe some expectations issues around the trade show. But there was really nothing negative to take away from it.
Yeah, what could he say in terms of the data center that the street would really like to hear? I know that the revenue is expected for the year, the fiscal year that ends this month, to come in at 113 billion, ramping all the way up to north of 200 billion. By the fiscal year that ends in January of 2027. What do people want to hear on that front?
Well, you know, expectations are high. I think we're 2 months into the Blackwell cycle, the new products that they just started shipping. So I think to think that we were going to get any color on, you know, GB300 or incremental Blackwell products was probably just not going to happen. This wasn't the forum for that anyway. And I think, so from a product standpoint, I think we know everything that we need to know. From a revenue standpoint, you're facing a little bit of a transition here. That you have Blackwell demand is very good, and you've heard these comments from Jensen in the past on CNBC talking about, you know, the level of Blackwell demand being insane, and he didn't really repeat those comments. But I think the issue that you're dealing with is Blackwell demand is really strong, but it's supply constrained, and Hopper, the sort of legacy product, still is the largest portion of that data center business. And so I think we'll still have a couple quarters here where there's meaningful upside, but I think the real upside is kind of into the back half of the year when you start getting that kind of full-blown Blackwell ramp. So I think, you know, people would like to hear that, and I think they did hear that in some sense, but I think, you know, they're trying to avoid those kind of really strong statements about Blackwell because it's not the main driver of the quarter. I think that's the combination of Blackwell and Hopper. So still quite optimistic about how this plays out, but I certainly see the upside being stronger in the second half of the year.
I mean, I guess the question is, with the stock that has done so well, tripled in value last year, how much of this is priced in, how much isn't? Where are you telling people, what's a price target that makes you feel comfortable? Yeah. What's a price arena?
Yeah, well, you know, at some point this is less about the sort of phenomenon that this stock has been and a little bit more on valuing a growth company on its growth prospects, right? And the stock trades at about 29 times our estimate for calendar 26. That would be high if there were any kind of deceleration in the business, but I don't think there is. Even when we sort of go through these transitional challenges, if you will, challenges maybe overstating it, but as you move through these transitional issues, you're still beating and raising. Those numbers are still quite likely to be moving higher. So I still think the stock is reasonably valued with good growth prospects this year and beyond. And again, the data points that support that are the strength in the Blackwell demand, and I think it's going to take a while for supply to catch up to that.
Okay, Joe, thanks a lot.
Hey, thank you.
It is just after 7:03 exactly right here on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin along with Bill Kernan and Becky Quick. Got a whole bunch of big stories this morning, perhaps a couple of biggies. Delta Airlines is going to start linking its SkyMiles loyalty program to Uber this spring, and that ends a longtime partnership with Lyft. Members will be able to earn 1 mile per dollar spent on Uber X airport rides, 2 miles for every dollar spent on premium rides such as Uber Black, and 3 miles per dollar on Uber Reserve trips. Meantime, OpenAI CEO Sam Altman denying sexual abuse allegations made by his sister. These came yesterday. Ann Altman has filed a lawsuit claiming her brother abused her regularly between 1997 and 2006. She's previously made public accusations against her brother. In a post on X, Sam Altman says the claims are, quote, utterly untrue. His mother and brothers also say the allegations are false. It was the whole situation is a very sad story. Meantime, California Governor Gavin Newsom declaring a state of emergency as powerful winds in the Los Angeles whip up wildfires. At least 30,000 residents have been forced to evacuate as the Palisades fire continues to grow. And that is some scary video, and not just video, but a real situation that a whole bunch of people are living with right now.
Checking the futures this morning, doesn't matter much. It hasn't anyway. What has been going on early on, there seems to be some selling that comes in later in a lot of the sessions. We're seeing a little bit of it already. Nothing to be concerned with at this point, but let's get to Dom Chu with a look at this morning's pre-market movers. What's going on, Dom?
All right, so Joe, Becky, Andrew, we're going to start off with a check on those quantum computing stocks that you just spoke about a little bit. This is all falling sharply after Jensen Huang's latest comments at CES, the NVIDIA CEO saying that useful, quote-unquote, quantum computers are likely still decades away. But that red-hot sector was soaring in recent months amid excitement on that technology's potential, especially following breakthroughs on Google's Willow chip. But IonQ, Rigetti Computing, D-Wave Quantum, Quantum Computing, Inc., many of these names were small to micro-cap companies just about a year ago, and thanks to hundreds of percent gains or even 1,000% plus gains, these names are now over $1 billion plus in market value, so they're all now sharply lower for this. Turning now to Palantir, extending losses this morning as multiple funds run by Cathie Wood's ARK Investment Management sold nearly 200,000 shares of Palantir over the course of Monday, at least disclosed so. This on top of a bearish analyst call from Morgan Stanley. Now, Palantir was a big winner, of course, last year of over 300% in that span, but momentum is starting to fizzle a little bit to start in 2025. But Palantir shares right now down about 2.5%. And then we'll end with shares of Novo Nordisk trading higher this morning as UBS upgrades the pharma giant to a buy from neutral. Analysts are saying that the sell-off following more disappointing data on its weight loss drugs is overdone and stands to benefit from higher demand near term. So bouncing back a bit after a 19% drop over the last 12 months. Now, for more on that and other top analyst calls of the day, just head over to cnbc.com/pro. Subscribers get full access to the detailed analysis behind those big calls and stories, Joe. But quantum computing, Novo Nordisk, and Palantir, big news in the pre-market. I'll send things back over to you guys.
Okay, we've mentioned a few of those already, Dom. Thanks. But a lot more analysis there.
That's right. When we come back, Republican Policy Committee Chair Congressman Kevin Hern will talk to us about the push to pass Trump's agenda in one bill. Plus, ADP private payroll data will be out as we get ready for this week's government number on Friday. Squawk Box will be right back.
back to Squawk Box. We're going to take a look at the markets right now. Joining us, Anastasia Amorosa, Chief Investment Strategist at Capital. Good morning to you.
Good morning.
We've been watching sort of this uniquely strange situation where all of a sudden quantum computing in the context of NVIDIA and some of these other AI darlings, and then Bitcoin, risk off, risk on, or maybe risk off right now. What's happening?
Well, it's been a struggle and it's been a tug of war to start the year. And, it makes sense because, first of all, when you look at investor positioning, they're a bit of an impasse right now. You've had the same percentage of bulls versus bears. And I think it has to do with the fact that there's two factors that are battling it out right now. On the one hand, you have this very positive story of artificial intelligence that's clearly carrying itself over into 2025. You have a story of very solid earnings that we're expecting for this quarter. But that has to be taken in the context of what we might get from the Fed and what we might get from the new Trump administration. And that is creating some volatility. So given that setup and given the fact that markets, frankly, have not de-risked enough just yet, that's what we have to go through, is we have to go through this battle. And I think
But de-risked is usually a euphemism for go down.
Yeah, that's right. That's right. And well, we've seen a little bit of that at the end of last year, and we've seen the markets pull back 2 or 3%, but we've seen hedge funds, for example, reduce their positions or rather add shorts.
Right.
We've seen systematic investors also go through a wave of selling. Maybe some private clients did that as well, but I don't think we've seen enough of it, and we're certainly not broadly at oversold levels. Maybe we have a share of new 1-month lows on the S&P that's quite a bit higher than normal, but I don't think we've seen enough. So that's why I can't say, this is the time to aggressively step in the market. I think we have to be patient for the month of January and have these factors battle it out. But on the days where you do have policy-induced uncertainty, I would say like yesterday, I think you look at things to buy. Maybe not quantum computing.
And so then the question is, what do you look to buy if you're waiting?
Well, the first big theme, of course, is artificial intelligence. As I mentioned, it is carrying itself over into 2025, and I think it's broadening. Last 2 years have been about semiconductors. I think this year has to be about AI software. It has to be about AI monetization, but it also has to be about AI power. And it's not just, a number of headlines talking about data centers and how much they consume, and the fact that I think you need 8 times the electricity to run an AI data center. It's an actual real trend, which I also think the Trump administration is going to support as well.
For the additional
additional investments in data centers. So I would look to AI software. I would look to AI power theme. Broadly, I would also look to alternatives. One of the things we talked about in our outlook is if you expect this to be the year of broader outcomes and higher volatility in the public markets, that's why you may want to have that piece in your portfolio that is private markets, where you have typically higher risk-adjusted returns, less volatility, more insulation.
Well, but the question is this the vintage, right? Or are markets, right? Are you going to look back?
Yeah.
If you're in the alts world, in the alternative world where you're playing private markets and you're playing them because the reason there's no volatility is because you don't get to see the volatility. That's really why.
You see the marks on a quarterly basis.
Sure, but the question is, 5, 6, 7 years from now, are you going to look back at this moment in time and say, wow, this was a great time to get in?
I think this is one of those years. 2021 was clearly not that year, because if you were stepping into private equity, venture capital, you're doing so at extremely high valuations. We don't have that anymore. We're not at the same rock bottom valuations we saw in 2022, 2023. We've picked up some, but if you look at private equity valuations, they're still trading below where the public market valuations are. So I think it is a decent point to step in. But for investors who have an allocation to a private equity, or maybe they can buy, let's say, a secondary middle market buyout fund, what they can benefit from, Andrew, I think this pickup in capital market activity that we expect. M&A, IPOs, monetizations, exits. So I do expect solid returns for private equity.
Anastasia, thank you for coming in.
Thank you.
Appreciate it.
And up next, Republican policy. Committee Chair Congressman Kevin Hern is going to join us to discuss President-elect Trump's economic agenda, tariffs, and Speaker Johnson's push to pass a party line bill, a big, beautiful bill, is what the President-elect is calling it. Some people think you need at least 2. And then later, are online sports betting stocks a good bet for investors in 2025? A look at the sector and what it could mean for your portfolio. That's straight ahead. We're coming right back.
Today's Aflac trivia question. What is the name of the world's largest cruise ship? The answer when Squawk Box returns. CNBC. And now the answer to today's Aflac trivia question. What is the name of the world's largest cruise ship? The answer, Royal Caribbean's Icon of the Seas. The ship is 1,196 feet long and 219 feet wide.
Speaker Mike Johnson is looking to pass a reconciliation package through Congress by April. Join us now on the GOP game plan. And President-elect Trump's agenda is House Republican Policy Committee Chair Kevin Hern. And Congressman, it's good to, Chairman Hern, it's good to see you. Will it be one or two, do you think, at this point? What's your best guess?
Well, certainly what's the issue is today, we've been given the gift of the opportunity to be in this place to pass a reconciliation bill and do things like extend the tax cuts, secure the southern border, and get our energy dominance back to where it was 4 years ago. But what we've not been given is the gift of time. We have to get these tax cuts extended by the end of the year, or every single American, every single business will see a rise in cost as money comes flowing back to Washington, D.C. And so if you look at that, the fastest way to get that done in the House is one bill, as President Trump says, one big, beautiful bill, so that we can get everybody's interests taken care of as we move forward.
It would include a debt limit increase, as well as $2.5 trillion in net cuts to spending. Is that possible?
We believe so. We actually have more spending cuts lined up than that. That seems to be kind of the middle of the road, or maybe even on the low end. It ranges from 2 to 5 trillion. Some of that's recension. Some of that is you're looking at releasing, lands to be drilled on, permitting processes that are really important. And so those are all things that are really impactful. A lot of the money that you saw the Biden administration or seeing the Biden administration spend on illegal immigration with President Trump's border policies, that would slow down or even stop. So a lot of spending cuts that we could pull in to help offset some of the cost of extending the tax cuts.
Will we go through the same process where someone decides on what is budget reconciliation? I remember the Democrats love this, being able to, and used it a lot recently. Someone has to decide what can go in there, right?
They do. The budget reconciliation process is really was part of the 1974 Budget Control Act. It was kind of a fail-safe if you couldn't come through with a budget and the authorization and appropriations necessary to hit the budget window of September 30th each year. And so they gave another avenue, but it requires very narrow language. It has to be impactful to the budget. That's a Senate process so that you don't have to have the 60-vote rule and the filibuster. So all the language, the parliamentarian in the Senate will control what actually gets into the reconciliation framework. And then the House, Ways and Means, which I sit on, Tax Policy Subcommittee, which I sit on, we'll be working to make sure that the tax cuts fit into that reconciliation process along with Energy and Commerce and some 10 other committees.
How's the border? Can you guarantee the parliamentarian will let all the border security provisions in there as well?
Well, not all, because we looked at H.R. 2 that the House passed back in March of 23 overwhelmingly, and again, in a very narrow margin. Then we had about a 3-vote margin. Today we have about 2-vote margin. So we're getting kind of accustomed to working with these 99% approval ratings, if you will, to get a bill passed. But there are things in there that are not impactful to the budget. They're more policy. You cannot pass policy in a budget reconciliation process. So we have to strip out some of those ideas that were in there, those bills that passed that we sent to the Senate, and make sure that we get only things in there that will have a budget impact.
So then if it was 2 bills, some of those things would be in the second bill, and then you'd need 60? How would you do that? You can't do that. You can't get 60.
Well, if you had a second reconciliation bill, it might be something that you might have look at something that you didn't get into the first bill, that you could find a different way to present it to the parliamentarian that they might accept it. But that's why it's so important to get one bill done early and start working on that, try to get it done by Memorial Day. This is a lot of work. As I said at the opening, we're not given the gift of time because all of these tax cuts expire on 12/31 of this year. And every single American, every single small business in America will see a major tax increase if we don't get it done. So it's important. This should be a bipartisan process. The Democrats should not want the American people to have tax increases. Yeah. So we're working hard, and we'll see what happens.
Where will corporate rates go? Will there be? Is there a stomach for that to go to 2015 on domestic companies? Is that even possible to do that?
I'm sorry I didn't get all of that question.
Is that
You were
even
asking if the
possible
corporate rate would be.
to go from 21 to 15 on the corporate tax rate just for domestic producers, I guess domestic manufacturing? Is that going to be in there?
We'll have to look at it. That's certainly additional campaign conversations that the president had, just like no tax on tips and no tax on Social Security. Those are things we're going to have to figure out how, if they can actually fit in. And we will do that as we get the legislation moving forward to go into the reconciliation package and see what all fits in there and how we score it. CBO, Joint Committee on Taxation, and others look at those. And so those are really important as we move forward. And so we'll work feverishly and passionately to try to do as much as we possibly can President Trump's campaign promises.
Congressman, just in terms of pay-fors, do you know if there's any agreement or areas where you think you can get agreement on some pay-fors to make up for some of the givebacks and taxes? Like, how do we do it? How do we do that in a balanced fashion?
Well, we saw some of this in H.R. 1 last year. Again, the Republican House passed, which was our #1 priority, which was energy dominance, something that President Trump worked on. We heard President Trump across all the campaign trails that he went to across America, talking about the way we were going to pay and fix our way out of this going forward is using our minerals under our feet, oil and gas and the other mining opportunities that we have. And so looking at how we can release those, right now we're very dependent on the Congo for cobalt and China for processing that cobalt and other rare minerals. And so if we don't use our balance sheet in the United States, we're going to be continuously dependent on China, which is not a good place to be when you have two superpowers competing for world dominance.
Congressman, do you have any realistic expectation that maybe something that would be added to this bill would include either buying Greenland or perhaps buying the Panama Canal, or I don't know about buying Canada, maybe merging with Canada?
Well, I'm not sure yet. We're all going down to Mar-a-Lago over the next 3 or 4 days to share different opinions, thoughts on some of the things that have been discussed.
What are yours?
The president, as he's well, I want to look at this and see what the opportunities are. I was recently in Panama. It's certainly very strategic to the movement of products from the east to the west without having to go around South America. It is very concerning, some of the tolls, if you will, that are being charged to ships. It is, when you go south of the Northern Triangle, the influence of China in South America and Central America is incredible. Taiwan has been pushed out, and for all intents and purposes, America's been pushed out. If you go back and look at 2000, we were the dominant trading partner in South America where we had influence. Today, it's China. So the president knows this, and he wants to make sure that we don't get encircled, whether it be Greenland and Canada or whether it be the Panama Canal, and make sure that we have national security. So one of the things we have the most important role to do in Congress is to protect this great nation.
Congressman, I don't know if you saw, officials in Ontario are now suggesting that maybe Canada should buy Alaska and Minnesota. What do you think of that?
Good luck. Well, good luck on Canada buying anything out of America. President Trump is more popular in Canada than Trudeau is, and so I think that was the writing on the wall of Trudeau's 9 years of socialist agenda. President Trump will push, as we all know. He's a businessman. He will set the boundaries and have everybody think twice before they do something that might be radical, as it was suggested by the folks in Canada.
Alaska. Well, let me ask you, what are they offering for Minnesota?
I don't know.
Well, make me an offer. No, I like the Vikings, actually. Congressman, except for that last game. Congressman Kevin Hern, thank you. Yeah, well, anything can be talked about at this point, as we now know. But you make some really good points. It's a real world out there, isn't it? There's China, and there are things happening that need to be taken seriously. And I don't know. I guess nothing should really be off the table when it comes right down to protecting the U.S. But I appreciate it. Thanks for your time.
All right, when we come back, the outlook for sports betting companies in 2025. Are they a good bet for investors? We'll lay out whether you should hold them or fold them. That's next. And then Dr. Scott Gottlieb talks bird flu risks, the respiratory virus spreading in China, and vaccines. Squawk Box will be right back.
In heaven.
Welcome back to Squawk Box. Mizuho naming DraftKings one of its best ideas for 2025. The analysts there maintaining an outperform rating and a $62 price target. Mizuho saying they believe the company will continue to reduce promotional expenses, thus improving the company's top-line growth and potentially launching in new states this year. Lunching too, but launching is probably better. Meantime, gamblers have plenty to bet on right now with bowl games, NFL playoffs, got college and pro basketball in full swing right now. But the odds, interestingly enough, may be against some of the gambling stocks in 2025, and that's because so many of the winners have turned out to be the winners. Tessa Brewer joins us with more.
So the good thing is that the NFL regular season is over because it was rough for the sports books. The best for customers since online sports betting launched, best in 2 years, the highest rate of favorites winning in 20 years, according to FanDuel. The parent company, Flutter, just issued a warning. It anticipates a hit of $438 million on gross gaming revenue. That, in turn, lowers its estimate for the whole year in the U.S. Jeffries points out it reduced the net gaming margin then to 6.6%, which is the lowest in 2 years. Flutter saw shares rise last year 50% and says its overall earnings thesis remains the same. But of course, all the sportsbooks are dealing with these same NFL outcomes. DraftKings shares up 12% over the last 12 months. Newcomer Fanatics making real headway here in market share against Penn's ESPN Bet. And Penn's shares reflect that, with the pressure on the digital business overshadowing its real performance in regional casinos. Rush Street Interactive now has a bigger market cap than Penn. Last year, its shares grew 285%, and mostly it's iGaming and business opportunities in Latin America. In Macau, there are high hopes that China's stimulus will drive visitors and their money to the casinos. Gaming revenues are still off the pre-pandemic levels by about 23%. Melco, Wynn, MGM, Las Vegas Sands all ended their shares lower in the red for the year. Of that group, Deutsche Bank picks LVS for its undemanding valuation and its potential to grow market share. And that's because a slew of top-notch suites are coming online after major CapEx investment. Jefferies just upgraded LVS to a buy in this new year. And by the way, Las Vegas, steady Eddie, room supply's tight, rates are high, convention business is solid. Jefferies predicts low single-digit growth for the Strip, which of course would benefit Wynn, MGM, and Caesars for the year, guys. But listen, on this Flutter thing, FanDuel,
Right.
one game, Lions versus 49ers was December 30th. It cost FanDuel $74 million because
So
of the
my
outcome of the
question,
game.
but why are typically the house is always the winner? They typically figure out what the line is supposed to be, and they're really good at it. What's happened?
No, I mean luck, right?
Just luck.
There's always, even the house loses. The house always wins if you keep playing, but if you walk away a winner, the house loses. I mean that's the way it works at roulette. That's the way it works at blackjack, and that's certainly the way that it works for the sports books. And what happened was, if you've got 9 different touchdown scorers and they're all favorites, everybody's gone and bet the favorites. Then not only do they win, but then you've got parlays that are paying off for the customer and not the sportsbook. And remember, parlays are one reason why
Yep.
the sportsbooks have started
This is all
holding
kind of a
higher.
sore subject, but baby, even the losers get lucky sometimes. As you know, you've heard that.
Yeah, except for that when you've got a net gaming margin of 6.6%, that still means
You know what happened this last
6.6%
time?
of all the bets. So you're not even getting 50% off.
No one played over the weekend. They didn't play any of the. Did you see the Denver Broncos? You know the Denver Broncos had to lose for the Bengals to get in.
Okay, and
They played the Kansas City Chiefs. You know what the Chiefs' record is? 14-1. Do you know what the score was when the Chiefs put in their high school? They put in the sons of all the players to play Denver and lost like 34-0. Don't worry, that's fine. They saved every one of their players for the playoffs, so the Bengals aren't going. And it was not a game. All the games this past weekend weren't worth watching.
I feel your pain, Joe. I feel it. I'm sitting here. I was at the Jets game. You know, I saw
Jets. Miami had to lose too for the Bengals, and the Jets came through. Right? They took it seriously.
I mean, Aaron Rodgers, his 500th touchdown
That
pass.
was
It was
nice.
remarkable
They
to
beat
see.
the Dolphins.
I didn't bet on it though. I just watched it and enjoyed it
I
for
had
the
the
moment
Jets.
that it was.
I can't believe I took.
So you're
Can't
just
believe
mad that the Bengals aren't in because they didn't play.
No, it was the games were horrible to watch because.
Usually the league would In his latest Washington Post op-ed, Dr. Scott Gottlieb says that while the Biden administration's last-minute $306 million package to fight bird flu is welcome news, there's still much more to be done when President-elect Trump takes office. Joining us right now is former FDA Commissioner Scott Gottlieb. He joins us this morning. Of course, he's also a Pfizer and Illumina board member and a CNBC contributor. And Scott, let's talk this through. When we talked to you in the last week or so, you said you weren't all that concerned about bird flu becoming a huge threat for humans. Has that changed at all, that situation, or your take on this, since we've heard about the first human who died of bird flu?
No, that hasn't changed. I still think this is a low probability risk, but it could potentially be a high impact event and the kind of thing that we want to take steps to help mitigate. And there's things that we could be doing, things that we could have been doing, and things that we could do going forward to help reduce the risk that this could spread into humans. We need to be testing more on farms to turn over the cases, isolate cows that have become infected, and chicken flocks for that matter as well. Do more to help farmers protect dairy workers and be providing swabs so dairy workers can self-swab themselves and diagnose infections when those happen. The thing that you worry about is that people could become co-infected both with this virus and with seasonal influenza, and you can get a recombination between those two viruses that would enable this virus to spread more easily. That's in fact what happened in 2009 with H1N1. That was a recombination between the swine flu and seasonal influenza that happened actually in a pig, and then it became a pandemic strain. So you want to mitigate those kinds of risks. We also want to be doing more on the therapeutic side. We've stockpiled Tamiflu, but we haven't stockpiled the full range of antivirals that could be effective against this virus. And if you look at the New England Journal of Medicine, the case reports that were published 2 weeks ago on the two patients who became very sick, one in Louisiana and one in Canada, the strains in those patients became resistant to Tamiflu as the virus continued to progress in those two patients. And so you want to have Zofluza on hand. You want to probably have amantadine as well, the other antivirals that were given to those two patients. We haven't done that. So there's a lot that we could be doing to help mitigate this risk that we just haven't done, or we've done very late in the process.
Why do you think that is?
I think that there was a tug of war between human health regulators, public health regulators at CDC and FDA and other public health agencies, and state and federal agricultural officials that felt that this was going to burn out on the farms. They didn't want to take steps and interventions that were going to be costly and burdensome to the farmers, and so there was resistance. This is very structural, and it happens all the time between human health and animal health regulators. I had challenges getting my inspectors on produce farms, for example, when we had outbreaks of E. coli on produce farms, because they were reluctant to let federal regulators on those farms to do testing to try to isolate which particular fields were contaminated. And so you see this tension play out all the time. I think there really was a presumption among the animal health officials that this was going to burn its way through the dairy herd and it would eventually be extinguished. That hasn't happened. I think it's become endemic in the dairy herd right now, and we're also seeing it obviously in migratory birds. In fact, the two patients who became very sick, the patient in Canada and Louisiana, had the strain that's in migratory birds, and that's probably because, if I'm speculating here, but it's probably because they got sick by inhaling dried feces from the birds and it got into the lower airways. So far the infections on the dairy farms have been mostly conjunctivitis. It's not getting into the lower airways.
So do you think that the officials, the state and local officials who were, and the animal control officials have changed their mind about the concern level here? Or if they don't, is there anything that will get done?
Yeah, look, I think there are indications they have changed their mind, especially at state level. You see a lot of states doing very aggressive testing of dairy cattle, and you've also seen the implementation in just the last month, in December, of bulk testing of milk at a federal level. And so I think that was animal health officials recognizing that they need to take more aggressive steps on those farms. I think that the other thing we could be doing is increasing the compensation for affected dairy farms. You know, the farmers should not be bearing the brunt of doing the right thing. They're on the front lines of this, and they shouldn't bear the economic brunt of doing the right thing, testing their herds, isolating sick cattle or culling them, and also testing workers, providing testing for workers. You know, when you have absentees because workers are sick from this, those farms should be, I think, should be compensated, and that way they have an incentive to turn over these cases.
Sure. It seems like a lot of people are sick everywhere right now, a lot of different viruses that are going around. Anything to be concerned about, or is this just the time of year after the holidays? Things are really cold outside, and yeah, is it any different than what we would see on a normalized basis?
Yeah, I don't think there's anything different in terms of what's spreading and the proportion in which it's spreading. I think what is different, though, is that in past years we've seen a lower incidence of some of the normal seasonal viruses, in part because COVID crowded it out. I mean, that's been changing in the last couple of years, but this may be the first year that we see sort of a normal incidence of flu and RSV and mycoplasma, and then you have COVID on top of it. And so I think that could be part of what people are experiencing, is that now you're getting back to normal levels of the ordinary viruses, and now we have this new virus as well that also gives flu-like symptoms to a lot of people. And so it feels like there's a higher burden than what there normally was historically, in part because because we have a new virus that's now circulating.
Doctor, am I right to think that even if I'm not feeling well, I don't want to go to my doctor's office, I don't want to go to the ER, I don't want to go to any healthcare provider at this point because I may pick up something worse there?
Well, look, most doctors' offices, good offices, will separate sick patients from those who are, might not have an infection. They'll do some testing before you come into the office. I wouldn't worry about getting infected in a healthcare facility. I would certainly try to avoid going to the ER unless you have to, but I think most primary care physicians' offices do a good job of taking steps to mitigate spread within the office.
I cut my finger and I didn't go in to get it.
Really?
See if I need
Because
stitches or anything. Because
Right.
Well,
just
plus you'll be there
just
late.
going
I
to
woke
the
up in the
emergency
morning.
room in general
Get
is
it.
like, you gotta be
It's a
like,
process.
it's gotta be like close.
They'll
You gotta-
sequester well patients and move them right into
Scott,
exam rooms.
It's not just that. It's a long ordeal.
Getting deja vu. So bird flu. What was the flu where the kids they had nothing else to play with, so they used to toss chicken heads around?
No, it was like
that bird flu or H1N1?
the violet virus, right? Like the one.
I don't know. What was that when they were actually? That's how it was getting human transmission from all the kids throwing the heads of the chickens.
Oh no, that was rodent poop. The one I'm thinking of, the hantavirus.
Do you remember that, Scott? You don't remember? I'll check.
I don't remember that anecdote, no.
Yeah, that was where some of the transmission. I thought. So how long has bird flu been on our worry list? 20 years, right?
Well, it's been on the list for a long time. The strain that's circulating now is a new strain, and it actually looks less pathogenic than the historical strain that we remember from 20 years ago. So it has evolved over the years. This is a new strain.
Okay, I'll look this up. Next time you're on, I'll remind you of when it happened, because it was obviously in a place where they didn't have like normal
I'll
stuff.
look it up.
So,
Yeah.
look it up.
Thanks, Scott.
Yeah. Ping pong.
Thanks.
I don't know, maybe for pickleball. Probably doesn't bounce right.
Coming up, a report from the Palisades wildfire. We're going to bring it to you and the situation and what's actually happening right now. Squawk Box coming back with that and more.
home.
Welcome back to Squawk. Firefighters battling a wildfire that forced evacuations of at least 49,000 residents in Southern California. Joining us right now from the Pacific Palisades is NBC correspondent Chase Kane in the middle of it all. Good morning.
Hey, good morning. Yeah, we're next to the Palisades fire here in Pacific Palisades. We're right along the Pacific Coast Highway at Sunset Boulevard, the famous Sunset Boulevard, if anyone is familiar with this area. And even though it looks rather dark here behind me, we're very much in the heart of Los Angeles. As we look here, as we zoom in on this ridgeline, again, you're looking across the Pacific Coast Highway. At the top of that ridge where you see that orange glow, there's a condo building up there that the flames have been burning through, ripping through as these winds have been blowing this intense Palisades fire. It's burned roughly 3,000 acres, potentially more. Firefighters haven't been able to get this fire under any sort of containment. They're also unsure exactly how big it is at this point because they can't get helicopters or planes up in conditions like this. It just makes it incredibly difficult, virtually impossible for them to battle a fire like this. Farther over here on the ridgeline above this other condo building, you see a couple of once beautiful homes there in Pacific Palisades that are burning. Dozens of homes and structures in this area have burned. Again, it's going to be difficult for firefighters to give us a concrete answer about just how extensive the damage is until after the sun rises, until after these winds die down. But right now, we are very much in the heart, hopefully the height of the worst of these winds with 30, 40, 50 mile an hour sustained winds. But one of our NBC News meteorologists confirmed a wind gust overnight of 135 miles an hour. That is a Category 4 hurricane strength wind. So you can see one kicking up right now that just picks up these embers and these fires. It'll blow it hundreds of yards away and start an entirely new fire. So when we talk about this Palisades fire here behind me, it's not really one contained fire. It's lots of little fires that are all burning in the same direction. As we see firefighters are spreading out across the area, really doing what they can in pretty difficult, nearly impossible conditions, guys.
That's what I was going to ask about, just the winds. What is the expectation for the winds later today? What is the expectation for the winds tomorrow? I mean, how long do you think the wind issue? I was looking to see that there's no rain, obviously, in the forecast, unfortunately.
No, the winds are expected to stay pretty strong here for the next few hours, certainly throughout the day today. They're hoping they're going to die down a little bit tomorrow, but it's going to take them some time, probably several days to get these fires under control. And you mentioned very dry. It's been more than 8 months since we've had significant rainfall here in Southern California. This should be the time of year where we're getting rain pretty consistently. We should already have about 4 inches of rain during this wet, rainy season, and we've had less than 2/10 of an inch of rain. So drought conditions, incredibly dry. The humidity is very low, and then now you add these tropical storm up to hurricane-force wind gusts, and it's just a recipe for disaster, which we're seeing unfold here in Los Angeles.
Chase, want to thank you. Stay safe, and thank you for your reporting. I'm sure we'll talk again. I say unfortunately, not because I don't want to talk to you, but because I think this story will continue. Squawk Box coming right back after this.
The TikTok ban is set to take effect on January 19th, unless the Supreme Court takes action. Join us now for the legal proceedings going on until that deadline. Nikki Kristof, CEO of consulting firm Kristof and Company. She's worked on the Hill for John McCain and in Silicon Valley for Google, Uber, and Salesforce. Nikki, thanks for joining us. Just what's likely to happen in the next couple of weeks in your view?
Thanks for having me. So what's going to happen, in my view, is that the Supreme Court is going to uphold this ban. It's a really well-written law. The First Amendment, arguments have totally failed, and they have no real reason not to uphold the ban. Now, President Trump, which we can talk about, has weighed in with an amicus brief asking them to delay past his inauguration, but I think this goes forward on January 19th.
And what would that mean at that point?
So we don't know exactly what we don't know what it'll look like for users. It means that the app stores can no longer let people download it, so Apple, Google, but you'll still have TikTok on your phone. Whether or not it'll work is sort of to be seen. It's up to TikTok what they do with user data. Ultimately, though, eventually you will have a worse and worse product experience because you won't be able to upgrade it. It could also just go completely dark on the 19th. We just don't know.
If something changes, so this happens, go a month after that, and it's okay again. Can the genie get put, Humpty Dumpty go back together again?
It actually could be paused by the president after he is inaugurated. There's a provision for a 90-day pause. So if he says, listen, ByteDance is looking to spin this off, they're doing things to do that, he could pause it. It's possible, but the Supreme Court's the highest court of the land. To undo this, they would really need a new law from Congress.
Well, he would do that, I think, right? He's ready to, he's ready to annex Canada. This doesn't seem like much of a stretch.
Well, I mean, you make a good point, though. He's been really busy with other things, like the Gulf of Mexico. I mean, that's a joke, but also immigration, tariffs. Day one, they're talking about pardons. This may not be the very top of his priority list, but he can pause, see if he can get a legislative solution, see if he can negotiate something with ByteDance. He'll have to talk directly with Chairman Xi Jinping to come up with something to do, but he could do that. And I think he's indicating he wants to do that because he has 14 million followers on TikTok.
I know, he likes TikTok now because it helped. I guess Barron told him you gotta do TikTok, but
he's also got Kevin O'Leary saying he wants to buy it.
And Kevin O'Leary as well. He's got all that Bitcoin, all that FTX money. FTFC, I forgot already. Remember the guy?
Yeah.
FTX.
Yeah, that's one. Okay, too many letters. Are they stealing everything that there is to know about our youth in this country and using it to subvert the future of the United States or not? That's what I don't understand. That was the whole idea, wasn't it? Has it been happening? And if so, then it doesn't matter whether it helped win an election. It's an insidious thing that probably shouldn't be around. Which is it?
Well, one thing that we don't know is what is happening in those national security briefings. So when the law was passed, a number of lawmakers were skeptical. They went in and got an intelligence briefing and came out and said, I'm supporting this law. President Trump has seen those briefings. We have not seen them. So we don't know exactly what's happening, but it is certainly true that the CCP has shown that they are interested and active in manipulating public discord in the United States, and they could also be surveilling people. Now, the American public seems to shrug this off. 170 million people don't mind having a surveillance device in their pocket, it seems, but they've not seen all the evidence. So we haven't seen it. Members of Congress have. Both President Biden and President Trump have seen that information.
Nikki, is it possible that all the phones are sending info to the drones? Do you know?
It is possible that they are violating terms of service from the app stores and collecting things on all of our phones. Anyone in Washington, where I'm based, who works in national security does not touch TikTok. They believe that it could scrape information. I think most teenagers don't care.
Right. They don't have a whole lot. I don't know what China's going to get from looking at what teens talk about. Not a whole lot. They probably, if they do look at it, they probably say, we don't have to do anything. The U.S. is going to happen anyway. Nikki, go ahead.
Well, I was going to say, one last thing is President Trump has said over and over that one of his big concerns is this is a boon to Instagram. Mark Zuckerberg is the biggest beneficiary of this ban. Everybody on TikTok can switch immediately to Instagram Reels, and so there's a reason we're seeing him on bended knee this week. I think he's making a case for the ban to go forward.
Well, so Trump, he doesn't know what to do at this point. Now he likes Zuckerberg, so I don't know that he may be rethinking the whole. It's interesting, enemy of my enemy analysis on all these things.
Yeah.
That's where we are. All right, thank you.
Thanks so much.
Okay.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. And the futures this morning, at least at this point, we've been down from where we were when we started. When we started the morning, we were up by about 120, 130 points for the Dow. Now that's indicated off by 25 points. We also saw a reversal in both the S&P 500 and the NASDAQ, with the S&P indicated down only by about 4 points. The NASDAQ indicated off by about 15. We do have some breaking news for you, some headlines from Fed Governor Christopher Waller. In prepared remarks he is set to deliver in Paris, he says multiple times that further interest rate cuts will be appropriate this year if the economic outlook evolves as he expects. Waller says that the extent and pace of cuts will depend on inflation progress and labor market strength. He says nothing in the current data suggests that the labor market will dramatically weaken in the coming months. He also says he believes monetary policy is still restrictive in most cases. With President-elect Trump vowing more tariffs on countries around the world, Waller says that he does not expect that tariffs will have a significant or persistent impact on inflation. But he says the Fed will need to see specific policies before seriously considering their effects.
Meantime, for more on the markets, when I get over to Mike Santoli, he is down at the New York Stock Exchange this morning. Good morning to you.
Morning, Andrew. Yeah, it seems like in the first flush of those Waller headlines, maybe the market firmed up just a little bit, but it has been pretty unsettled. The last couple of days, you had morning rallies, at least in the majority of stocks, and then breadth really got negative over the course of the day as Treasury yields have risen to somewhat uncomfortable levels. Here you see, this sort of range that's developed over the past couple of months. Multiple times, the market has found a little bit of a low in this range, right in the gap that was created in the post-election rally. It popped higher right above 5,800. In that moment, we've kind of gone down and visited that general 5,800, 5,850 area a few times. Some folks watching that to make sure essentially that we're maintaining that range. Market is a little bit oversold coming into the week because really the average stock had a rough December. We haven't been able to make much of that. Take a look at the NASDAQ 100. That's kind of Mag 7 driven relative to the equal weighted S&P. This is a 3-month chart. You see they were going up in sync until right after Thanksgiving, and then the average stock has really faltered since then. Yesterday was actually tough on the NASDAQ 100 too, so a little bit of convergence there as well. Semis versus software has been a very interesting relationship. Look at it on a 1-year basis. Yesterday you did see some of the weakness in semis, but mostly it's been again about coming together. This is the software ETF. It's equal weighted. That's the equal weighted semiconductor ETF. Both of them kind of working below their highs, and it's an interesting dynamic because people took shelter in semis once Nvidia got stuck for a while, and the majority of semis did falter. But right now it looks like trying to make the case that the semis trade can be revived. Didn't get much out of that Nvidia keynote, at least with regard to that stock, guys.
Do you remember the last time we've seen the 10-year above 4.7%? It's been ticking pretty steadily higher this morning.
Yeah, so April was the high around these levels. We did touch 5%, remember, this cycle. So it's when you've gotten to, people are saying 4 3/4 somehow might be a threshold. We're at these levels where on paper, if you look at real yields relative to inflation, all the rest of it, in theory, you should be having buyers find value in treasuries here. But obviously, whether it's supply, whether it's unexpected policy moves and what the implications are, that's why I say the Waller comments imply that at least he believes neutral rate of interest is still well below where the Fed funds rate is, and maybe that could be an excuse for this yield gain to cool off a little bit.
Mike, if enough CEOs go down there and start bending the knee, like Zuckerberg, is it going to be the MAGA 7? Have you thought about that? Adding a letter?
I haven't thought specifically about that, but those stocks are trading in that direction, right? If you just look at
some will never
Tesla,
be. Is Netflix one?
Not really.
Is it what are the Mag 7? How many have been down?
Oh, the Mag 7 is Apple, Microsoft, Nvidia, Tesla, Alphabet.
Jensen
What am I
Wong
missing?
was asked yesterday if he had been down to Mar-a-Lago yet, and he said no.
No.
That he would welcome an invitation.
So it's like a
he
MAGA,
just hasn't he hasn't
MAGA
been
4.
invited yet.
I mean, all you need is one letter, Andrew. They can, like Meta is definitely a MAGA 7 stock now, is it not?
Oh, it's a total MAGA. It's a MAGA stock.
It's a
That's what it is, a MAGA company.
Can you believe it's that easy to change the acronym to keep up with the times? I think that's hilarious. Can I get credit for this, like the new normal? Alarian's gonna be on later.
He is going to be on, and he did coin the new normal.
He did. All right, Santola. Sorry to cut you off there too, but I just couldn't help think about that though, because Tim Cook definitely. Apple's a MAGA 7, isn't it?
What about Microsoft?
Microsoft, I don't think is it?
Don't know.
All right. Let's talk more about the markets. I mean, we don't have to talk about this, Jill. Specifically, mid caps and small caps. Russell 2000 has not been, pulling its weight here. It's off 6% from its high in late November. Joining us now is Jill Carey Hall, head of U.S. small and mid cap strategy at BofA Global Research, and it's your least favorite, I think. Now, you prefer mid caps and even large caps relative to small caps. Now, what changed?
Well, I think, yes, that's right. We do like mid caps over both small and mega caps as we head into this year, and mid caps are slightly outperforming so far, and we think that could continue. I mean, I think the problem with small caps right now is that, for one, the profits recovery that everyone expected last year, that's still a hope rather than any evidence we're seeing. Going into last year, everyone expected that by the second quarter, profits growth would be double digit for small caps, and that expectation has gotten completely pushed out a year, and revisions are still negative. So we'd like to see better evidence that this small cap profits recovery is actually going to happen. And then small caps would have more risk on tariffs, immigration reform. So mid caps look like a better risk reward at this point, better fundamental trends there. And with rates, multiple rate cuts getting priced out of the market now, refinancing risk has reemerged for small caps. So we think mid caps are the better area, and being selective within that space makes sense.
Would that throw into question the broadening of the rally that we needed, because it was so concentrated in what we were just talking about? I mean, we were all assuming that it was going to spread out and all the soldiers were going to join the generals in advancing. This throws a wrench in the works.
Well, we do still think the market's going to broaden out, and if you
But
look
mid cap's not small cap.
Yeah, I mean, if you look at the profits backdrop within the S&P 500, we are seeing that slowing of profits growth, which has continued to be expected to occur for the Mag 7 relative to the other 493 picking up. So we do like, within the S&P 500, the equal weighted index over the cap weighted index on back of that profits story, as well as on positioning and some other trends. So again, mid caps over mega look better, and that profits broadening is expected for small caps, but I still think, down the cap spectrum, there is more risk there. We aren't seeing that pickup happen yet.
But overall, you think that we will see multiples stay where they are and maybe earnings go up in what would be an average to good year? Is that as good as it gets, or does deregulation or some of these other things give us a better backdrop, or a worse backdrop if inflation stays sticky and the economy slows? What are we looking at overall macro? I know it's not your thing.
Yeah, no, for the S&P 500, so we cover overall equity strategy as well. We're looking for about 13% earnings growth, 10% returns for the market. I think this is an environment where last year we did see a very multiple expansion year. Yeah. This year we think it'll be about demand coming back. We are expecting a manufacturing recovery. The backdrop for small caps, obviously, if interest rates remain elevated, the risks there, given the leverage profiles, are more elevated. So we do like cyclicals. We think it's a year where you want to be selective, that it's going to be a micro over macro year, that stock pickers, that will be a beneficial trend this year, given all of the themes, given, post-election policy can impact certain pockets of the market. So, it'll be a year to be selective, and there's a lot of opportunities, even within the small and mid cap space. Our analysts at BofA cover about 1,000 small and mid cap stocks. Okay. So, tilting up toward mid over small and mega, but being selective makes sense.
Okay, we've got some data in a couple of minutes. Jill Carey Hall, BofA Global, the head of small caps and mid caps, but other things too. But thanks, Jill.
All right, coming up, we do have that breaking jobs data. We'll be getting December ADP employment numbers. Those are next. Stay tuned. You're watching Squawk Box right here on CNBC.
Welcome back to Squawk Box. We are approaching December's ADP employment report. Take a look at the futures right now. We are in the red, 61 points off on the Dow. NASDAQ off about 45. S&P 500 looking to open down about 10. We'll show you the treasuries really quick. 10-year note at 4.7. The 2-year at 4.2. And we can now do it. Job numbers. ADP reporting a slower pace of hiring in December. 122,000 jobs added versus a street estimate of 136,000. Now, the service providing sector is doing a lot of the heavy lifting in these numbers, which come ahead of Friday's jobs report, where the consensus is 155,000. That's the number to beat on Friday. Education, health services, and leisure and hospitality were the strongest sectors, while manufacturing lost jobs for the third month in a row. Year over year, pay growth for those who stayed in their jobs slowing to 4.6%. That's the slowest pace of gains since July of 2021. And for those who moved jobs, pay growth was roughly in line with last month. That's at 7.1%. And for more on the ADP data, I want to bring in Neela, who's here, Neela Richardson, ADP's chief economist, who's been keeping these numbers secret. What do you think? How should we actually think about this? The market is doing a little bit better, actually, on the back of this.
I think what we've seen...
But that may be a bad news is good news situation.
It's
on the
hard
Fed
to
side.
know
We'll
when you incorporate the
Yep.
Fed, but from our perspective, what we've seen all year is very stable hiring. We saw a peak up in October. This December report definitely represents a downshift from what we saw earlier in the quarter, but it's still a solid number. pockets of weakness are something to watch. Manufacturing, as you mentioned, shed jobs for 3 consecutive months. That's concerning. This is a sector that could benefit from a rate cut. It's a very cyclical sector.
Right.
What's doing the heavy lifting in services is no longer leisure and hospitality. We think that game is over. It's really healthcare, and healthcare is not cyclical. It's tied to, I think, demographic hiring.
Right.
So you take these two, the good sector and the service sector, services being driven by the demographics and the future of the U.S. population, manufacturing, I think, very much focused on the short-term and cyclical interest rates. Very different stories in this.
Okay, so if you were to extrapolate out, if you were sitting here 3 months though from now, based on these trends, what do you see happening? Because I think that's what we're really trying to understand.
You know, first of all, I think when you really want to know what's going on in the labor market, you have to shift from jobs to wages, because wages are going to tell the story of what the Fed will do next. And what we saw was a step down in wage growth, particularly for job stayers, 4.6%. That's a very slow pace of job growth, wage growth,
right,
but not slow enough to be consistent with a 2% inflation target. So that means one of two things. Either wage growth has to come down significantly over the next 3 months for the Fed to feel comfortable cutting rates, or we're going to get into the situation where the Fed has to pause and wait for the labor market to come along with this rate cut.
Did you hear Christopher Waller's comments this morning that he's going to be giving in a speech a little later today? I was a little surprised that he still seems to be leaving the door open to several more rate cuts this year.
Given the uncertainty on the policy front, I think leaving the door open is a wise move for the Federal Reserve. And honestly, they've been leaving the door open, being data dependent, is basically saying I'm opening the doors and the windows and seeing if there's a next data point.
Although it feels like the market has been expecting these rate cuts, and they've been trying to maybe talk themselves out of a position where they are expected to cut at every rate meeting. This seems like it was a swing back in the other direction.
6 months ago, I think the foregone conclusion was that the Fed would move like the Fed has moved in the past, which is moderately and consistently. Every single meeting was a rate cut. They've channeled that may not be the case. There might be pauses on the way. This has been a bumpy deceleration in wage growth. I believe it'll be a bumpy deceleration in the interest rate as well.
Okay, so bumpy, but because the data's been bumpy too.
Absolutely. We've seen pockets of strength and pockets of weakness in several months. We saw a big surge in hiring in September. That really put a pause on what the Fed was going to do next. In my mind, now we're seeing a downshift in job growth, and I think that will also, feed into the Fed's calculations.
I'm just looking at the market reaction right now. This is a bad news is good news story. If you were just to look at
It's not going up.
Yeah.
It's not doing it. It's right.
Well, it's a little bit better than what it was.
Really?
Marginally.
Isn't
Well,
that
now it's actually gotten worse again.
Yeah.
So do we say this is a Goldilocks number because this is just what everybody was expecting?
It is somewhat Goldilocks. The word of 2024 is a stable jobs market, meaning sticky inflation.
Stable.
Well, that might be
Stable.
But I don't think stability holds in 2025. I think we're going to see a disruption in the jobs market. I'm looking at manufacturing. I'm looking at financial activities, which slowed significantly in our report. Professional business services is lackluster. So where's going to be the growth? I don't hang my hat on healthcare driving the labor market in 2025.
Inflation is sticky. It's not great. The backdrop does not look great.
And that goes back to the worker. If you have sticky inflation, then real wage growth is precarious. And what we're seeing with hourly workers, which is the majority of the working population are paid hourly, that stickiness leads to some industries not paying above inflation over a course of the year. And that's going to be a challenge when it comes to consumer spending and growth.
Neela, thank you for joining us this morning. We'll see what happens.
Thanks for having me.
When we come back, we do have news on Anthropic signaling that it could be another banner year for AI funding. We'll hear about that and then talk markets and rising bond yields with Mohamed El-Arian. Stay tuned. You're watching Squawk Box, and this is CNBC.
the AI frenzy spilling into 2025. It's just getting started. We have some deal news about Anthropic, and Kate Rooney joins us now from the West Coast. Kate, good morning.
Hi,
Super
Joe.
morning.
Good
to you.
morning. So I'm told Anthropic, the AI company, is now raising a new mega funding round at a $60 billion valuation. This is according to a source familiar with that deal. It's a $2 billion financing being led by Lightspeed. Also, I'm told it's ongoing, so these numbers could shift, especially in private markets. It's now one of the most valuable AI names out there, jumping from an $18 billion valuation to around $40 billion last year, now closer to $60 billion. Anthropic was started by OpenAI founders, so it's backed as well by Amazon, which invested roughly $8 billion so far into the startup. An Anthropic spokesperson did decline to comment, guys, but it does mark the latest deal in what has been nonstop funding for these AI companies. It's another signal of demand for some of the top-tier firms in Silicon Valley. We talk a lot about OpenAI, Databricks, XAI. Those are among the companies that raised other mega rounds late last year. That is expected to continue this year. These AI companies are really capital intensive. They require a lot of computing power, for example, so raising money has been a necessary competitive edge, especially if these smaller AI firms are going to want to compete with deep-pocketed tech giants. Think of Google and Meta, for example, Joe.
Okay. How many, we were talking about this earlier, and you're the expert. So we're looking now at a new moniker, and that is the MAGA 7. And we don't know how many there are at this point. And these are people like Zuckerberg that have gone to Mar-a-Lago, kissed the ring. So we're going to make a new list.
Yeah.
How many?
That's a
how
good
many
acronym. Amazon? Yeah, I mean, it kind of includes all the tech giants.
Yeah, well, not all of them.
Well,
Okay, you got
Amazon,
the-
not, you had Jeff Bezos, so not
Yeah.
Andy Jassy, but Bezos is spending some time there, so.
Yeah.
Yeah, I like
Tim
that.
Cook.
It could also work for some of the AI players, because even if they haven't been to Mar-a-Lago, they're the ones leading in AI, or at least competing. But yeah, I think that's going to catch on, Joe.
Think about
Trademark.
Tesla. Tesla's totally MAGA.
Yeah.
All right. Think about it. Come up with a list. It's a CNBC MAGA 7.
I'll get
MAGA
back.
20. All right, thanks. Up next, I wouldn't hold your breath for the CNBC list there. Up next, new jobless claims data. Squawk Box will be right back.
Welcome back, everybody. We are just seconds away from initial jobless claims data. We've been watching the futures ahead of that. You'll see right now they're back in the green. We've bounced around a lot. Dow futures were up by more than 120 points when we started the show at 6 a.m. We fell into negative territory. Now we've come back to about the flat line, so a lot riding on this. Treasury yields have been moving higher. In fact, the 10-year was sitting at 4.71%. That's the first time we've been above that level in a very long time. So we've been watching, trying to figure out what to make of all of this. Rick Santelli is standing by at the CME in Chicago. And Rick, the numbers, please.
Yes, and these numbers are low on initial jobless claims, 201,000. 201,000. This is about 15,000 less than expected. Currently, it's 10,000 less than our last look at 211,000, unless there's a late coming revision. But it does underscore that the New Year's Day holiday may have had an effect. Now, if we look at continuing claims, it is now the 31st consecutive week above 1.8 million, 1,867,000. In the rearview mirror, 1,834,000. And this is also most likely affected by some holiday issues. So they might be something to wait to get a better GPS. But when you take a step back, they're still on the low side. Consider we haven't been over 250,000 on initial claims since the first week in October, of course, of last year. And you're right, we've traded a bit above 470 in a 10-year, and we're getting very close to 5% in a 30-year. 22 billion of those 30 years, by the way, Becky, will be auctioned off on a reopening at 1 Eastern. We want to pay attention. You know, yesterday with interest rates rising, that was not viewed as a concession on the 10-year. It didn't make the demand spur higher because investors thought, wow, this is a blow off top, rates are going to come down. It's exactly the opposite. There's a lasting effect here, and what's most notable is in term premium and yield curves. Right now we're trading over 42 basis points on the 2s to 10s. I've been talking about this spread for a year. Every trader in the government sector I know has been looking for a steepening curve, adding term premium expanding. These are trades you want to pay attention to on the long end as the rates continue to firm. You could make a case ADP was less than expected, but we've kind of been there, done that. You could make a case that job openings were really aggressive, but quits might have moderated that. But in the end, watch the way the market reacts to these data points. 201,000, I'm not seeing rates move down that aggressively. Market's pretty smart at this point. Becky, back to you.
Explain that to me a little more, Rick. I'm thinking through what you said. We were above 4.7%. We got these numbers, the earlier numbers that took it up. ADP took it up to, I don't know, I think it was 472 or something. Now we're back just above 470. We watch these moves very closely because they're telling us what? Traders are thinking what?
Well, I think, look at a 2-year right now. A 2-year settled yesterday's cash market of 429. We're at 427. Okay, not a big deal. It's down 2 basis points. But as we sit right now at 470 in a 10-year, you're up a basis point. Doesn't sound like a big deal. But that relationship continues to be pointing the yield curve and investors in the same direction. That the steepening curve implies that we're going to continue to see pressure on long rates, and even though the Fed might be talking about data or talking about being cautious or talking about if the year develops as they think this may happen, they're doing the same thing investors are doing. They're looking at the long end, scratching their heads, and even in an easing mode, the market's going to take care of business by letting long rates breathe like a fine wine. And unless the Fed does quantitative easing with a balance sheet still very large, they probably won't. I think this dynamic's going to last until we get a better handle on how the incoming administration policy is going to affect markets.
So, Rick, if you had your choice, Greenland, Panama, or Canada?
In terms of where to live?
Or all the above?
I don't know. I'll tell you personally, I think I'd rather go for Mexico as a new addition before any of the others personally. But that's just.
Do you have to say that? You're gonna get. That's gonna be next. That's all we. That's really. Then we wouldn't need a wall.
And then an unnamed free agent. Yeah.
And what about Canada? We go for Canada, and then we couldn't give them Minnesota. I don't know. It's all getting it's just like a game of Risk almost at this point, isn't it?
Yeah, no, I'm not sure about the whole Canadian thing. I don't know. I think our relationship with Canada is at a point where I think leave well enough alone, especially considering the political winds changing. I think it's going to be self-adjusting. I think from an opportunity standpoint, I think Mexico and the U.S., I think they're good together. That's just my feeling.
It's an interesting take on things. There's a lot of cobalt and graphite and lithium and shipping and entry to the Arctic, the energy-rich Arctic. And you know who else wants the Arctic? We know who wants it. 2 other places really want it. Russia and China.
Yep.
So
but here's the other issue. I don't look at it only from a mineral strategic standpoint, because the truth be known, even though we don't get the truth often in this particular sector, there's plenty of those same minerals in the U.S. if we were only allowed to explore and extract them.
Yeah. And then there's also the question of what the people in Greenland want.
Are there people in Greenland?
I don't know. Greenland's too cold for my taste.
I heard Greenland was icy and Iceland was green.
That's what the Vikings did to send people to the other one. Iceland's got a lot.
I'm just waiting for Canada to buy Alaska.
They think that there's some
Alaska's not for sale.
under the ice in
I
Greenland.
told you, Alaska's not for sale. We can talk Minnesota.
You're prepared to trade Minnesota for Alaska?
I think Minnesota
for the Panama Canal.
Minnesota might be political as far as politics. They're perfect for Canada.
Oh,
perfect. They don't have to change a thing. Move right in there.
Rick, thank you.
Oh, Andrew, it's going to be a good year, Andrew. Trust me, it's going to be a good year.
I need you here, though. But I get tired. I got wimpy little shoulders. I need help.
All right. For more on the data right now, the markets, rising rates, Fed policy, what to make of all of this, we want to bring in Mohamed El-Arian. He is Chief Economic Advisor at Allianz. He's also the President of Queen's College at Cambridge University. And Mohamed, you've been sitting here listening to all of this. What do you think of the data? What do you think of the Fed's reaction? What do you think of what we're seeing in Treasury yields right now?
So first on the data, I think consistently it has been somewhat stronger and somewhat hotter than expected. And that's been a consistent theme. Overall, I'm not worried about the hotter side because it's only hotter relative to an inflation target that's outdated. Inflationary expectations are stable, and I'm really happy about the stronger side. Yields, they simply reflect the stronger and hotter economy, but they also reflect issuance. And I think that we're going to see yields in the 4 3/4, 5% on average for this coming year, pending what we hear from the new administration. And the Fed has got to pivot away from this excessive data dependency and take a strategic view, and rather than fuel volatility, try to reduce volatility. And there's 2 issues the Fed has to navigate right now. One is monetary policy, and 2 is the political landscape.
Right.
And whenever we hear from the Fed, we have to remember they're navigating 2 different things, not just one.
Go ahead, Nick.
I was going to say, but on the political landscape piece, it's going to be after whatever happens. It's not going to be in advance of, right?
So they don't want to be blamed for mortgage rates going to 7.5%, 8%. They don't want to be blamed for that. So we will hear comments that are more dovish than expected, because I suspect they are really worried that they're going to become a political target.
Who is to blame for mortgage rates going past 7%?
It's a combination of things. It's a combination of the hotter inflation. It's a combination the fact that we continue to outperform the rest of the world. And it's a combination of something that everybody's waking up to, the bond vigilantes are waking up to, which are fiscals are out of control.
That was my question. Is 2025 the year that the bond market really looks in at our deficits that we've been running for a very long time and says, okay, no more?
I don't think it says no more. I think it takes it much more seriously. If you're sitting in the UK, you'd be much more worried. You have there a 30-year that reached a record level since the Debt Management Office was opened in 1998. You have the memory of the Liz Truss moment when suddenly your pension system. So I think we worry less than the rest of the world. But yes, markets have woken up to the fact that deficits and debt are on a trajectory that shows no sign of changing at all.
Will Washington recognize that, try to do anything about it?
I think it's going to take time. We are lucky that we are the cleanest dirty shirt, right? So we are still exceptional in the advanced countries. I mean, imagine, Becky, where yields would be had we not attracted 500 billion into the fixed income market, including from the rest of the world. Yields would be way above 5%, but we're lucky that our economic exceptionalism is attracting money into this country.
You started by saying that an outdated view of inflation is really the problem here, that the Fed's 2% target is outdated. Just move the goalposts and you fix everything?
Well, first of all, they're not going to move the goalposts. I think they have to tolerate the fact that we're going to run inflation slightly hotter. If they could set the inflation target today, and you've heard me say this for the last 3 years, looking at the structural element of this economy, it would be in the 2.5% to 3%. It would be a range, 2.5% to 3%. Inflation expectations are stable. We don't have an inflation problem. We have an inflation issue relative to a 2% target. You heard previously this notion of sticky inflation, sticky inflation, sticky inflation. That's actually stable inflation that doesn't disrupt the underlying economy in any fundamental way.
Are you arguing for them to cut rates even as inflation is hotter than they'd been hoping for?
So my worry is the opposite, is if they really believe in 2% inflation, they would hike rates.
Okay, so this is an argument against them hiking
Correct.
rates.
So if they really believed it, what I think we're going to hear is, yes, we are aiming for 2% inflation, but down the road, And we're going to tolerate, we may get one cut this year, but we should not want them to be dead set on 2%, because if they're dead set on 2%,
then rates are going up.
The rates are going up.
Do you think they'll raise rates this year?
No, I don't.
Yeah. What would happen in the markets if either there were no cuts or if they actually raised cuts,
So
raised hikes?
I think we can live with no cuts. I think we've adjusted dramatically. From a year ago, we were expecting 6 to 8 cuts. Now we're expecting 1 to 2. We've pushed the one the market has all the way back to July. And this economy remains robust.
We got the headlines from Waller's speech today about what he's going to be talking about. And I have to say, I was a little surprised. It was more dovish than I had anticipated, because they've worked so hard to try and get to the point where the market is not expecting them to cut rates at every meeting. This sounded more dovish and raised more questions about this. I don't know what you thought about his comments.
Yeah, I was as surprised as you were. I don't know Governor Waller well, but I do know if I'm sitting in the Fed right now, I have to navigate two landscapes: monetary policy and politics.
You know, there's a lot of people that are nodding with you because we can deflate our way out of some of the step, but the difference between 2% and 3% compounded for the dollar is devastating. And I don't know, for you to just blow it off is a little weird. I mean, there's a reason they want 2%. Anyone can move goalposts. I mean, if you compound 3%, that's 50% higher than 2%.
You know where 2% comes from?
No,
but 2%
3% it would be would make all of us feel awful in 10 years.
2% comes from the Bank of New Zealand.
Okay.
In the early 90s.
It seems like a good number to me.
But it's an arbitrary number. What you've got to take
into 5 is an arbitrary number. If you want to deflate 36 trillion, let's go to 10 then.
I don't want to pull the rug from under U.S. economic exceptionalism. I think we are outpacing the rest of the world.
We're starting to at 3%.
I think we are investing in the economies of tomorrow. In the growth drivers of tomorrow. If we not
government.
No, the private sector, everything else. If you push this economy into recession,
the private sector is not what causes the inflation.
Joe, if you push this economy into recession, you will not just lose current standard of living, you will lose future standard of living. We are in a very good position.
3% loses the future standard of living. That's the problem.
2.5 to 3 is what I said. You went immediately to 3.
Well, if you say 3 at the high end,
and as long as
okay with it.
As long as inflation expectations are stable, you can navigate.
You better buy some Bitcoin, Mohammed.
He did.
Protect again.
He did back in the day.
Not enough.
Not enough.
None of us did. Damn.
What do you think of the Michael Barr situation?
So I think that is
given the political pieces that
is someone taking one for the Fed. I think he stepped down to protect the Fed, to again help navigate this political landscape.
Because you think if he hadn't, he might be challenged, and therefore the entire independence of the Fed gets challenged.
Correct. Correct.
All right, it's a lot to think about. Mohammed, it's great to see you here on set.
Thanks for having me.
Thank you.
Okay, coming up, Facebook's former chief privacy officer joins us on the company's big move to get rid of fact checkers. We'll talk about it. Stay tuned. You're watching Squawk Box, and this is CNBC. Welcome back to Squawk Box. Meta Platforms announcing it's going to end its third-party fact-checking on its services and move to user-generated systems of checkmarks similar to the Community Notes program on X. CNBC's learned that some Meta employees took to the company's in-house communications tool to voice their displeasure, although criticism didn't account for all of the posts. One worker said it appeared Meta was sending a message that facts no longer matter and conflating that with a victory for free speech. Joining us right now, Chris Kelly, Facebook's former chief privacy officer and former general counsel. He's the founder of Kelly Investments. And let's just start with the basics. What did you think when you first heard this announcement?
In many ways, it's a return to a free speech tradition that we very much tried to respect, even as we did more content moderation in the early days of Facebook. Cleaning up the ability to communicate and being able to easily present one's views was a critical part of the network from the beginning. And in some ways, Mark clearly feels that we've gotten away from that, and this change is meant to effectively.
Where do you stand on this issue? And the reason I ask is, I think there's a question as to has Mark's mind evolved, or was this is always where Mark's sort of head was? And maybe with some of the people around him, and I'm thinking of the Nick Clegg's and Sheryl Sandberg's and others that pushed him in another direction. What's the sort of genuine view of this?
Well, I think you have to create a space that allows people to communicate effectively, and that requires some ability to push back. In the American free speech tradition, that is usually with more speech, and not in taking too much down. And we never wanted to be the arbiters of truth. That's always a hard position to be in. But you have to make sure that your community doesn't decline into a cesspool of accusations back and forth all the time, and of the presentation of misinformation either. The AI tools that Facebook has deployed and Meta has deployed over time on all of its networks still operate here. And there will be addressing of child sexual abuse material, of illegal content, things like that.
Chris, a huge part of the decisions in the past, I would say, were business decisions. Business decisions based on at least a view, maybe wrongly, but a view that advertisers wanted this kind of control over the platform, or at least people were telling Mark Zuckerberg that. The question now is whether advertisers will stick with the platform. Very interestingly, I would argue to you that X now is obviously a much broader platform today to the extent that it's more free speech oriented, but it hasn't necessarily worked as an advertising platform.
I do think that advertisers are going to continue to express their opinions, and they're not going to want to have their brand advertising in particular appear next to offensive material. And I think that will continue to be a piece of pressure on the company, just as it is on X and on every other platform. So I don't think that this will actually end up making a massive difference in your day-to-day experience on Facebook.
So you don't think it changes? Do you think that the experience on X has changed?
I do think it has, and we'll see if that works for advertisers over time. I think that there's some encouraging indications that there's some adaptation that's going on. I think the community notes feature is excellent, and it's been implemented very well.
What did you make? I mean, there was sort of an interesting moment yesterday during the Trump press conference, because on one side you saw Mark Zuckerberg take to Facebook and Instagram announcing all of this, and I think making I hope genuine argument. I'm sure there are people who question how genuine it was, but then of course later in the and saying that he was doing it in part because he thinks that politically the country has moved, and then 3 hours later you have Trump being asked whether he's effectively doing this genuinely or whether he's doing this because of the threats that have come from Trump. And he says, yeah, probably because he's doing it under duress.
I did see that, but I do think, and having been there in the initial discussions, we always wanted to adhere to the American free speech tradition, which is more speech is the answer to difficult speech. That it was meant to, Facebook is meant to be a place for discourse, and the de-emphasis of political content and the ability to express yourself is something that I think that there's some regrets around the way that was implemented, particularly in the post-COVID period.
How do you think this changes the regulatory story for Meta? Meaning there's
I think it probably makes
there's a whole bunch of state well, I don't know what you think is going to happen to the attorney generals, but there's a whole bunch of regulatory issues that are around Meta right now, and the question is whether you think they disappear.
Well, I don't know. I certainly don't think they disappear. I think that there's going to continue to be a bunch of discussions, and I think that the company has tried to act very responsibly around addressing some of the worries about harm and self-harm material that's presented online, some of the controls that they've tried to introduce, particularly on Instagram and teen accounts and things like that. This has always been an incredibly complex problem. There isn't really a right answer at the end of the day, unfortunately, for the company or for everyone online. You're dealing with expression, which is a messy thing that sometimes people are expressing themselves in ways that are hurtful to themselves or to others, and you have to figure out a way to guide a discussion so that it's civilized and that people get a lot of value. That's one of the key things that they're trying to return to.
Chris, Andrew and I were having a discussion yesterday, and I was thinking about it at home. With Andrew saying you thought maybe section whatever it is 230 that you should get rid of it, and then I said I think I was saying that about Andrew, about like protections for like teens that are getting like naked photos shared, and they should be liable. I don't think I ever meant it for like the free flow of like news or information or
No,
things
but
like. Is there a way to
Section 230
separate it?
prevents-
Is there a way to
prevents them from
separate
being
it
liable
out?
for anything that's posted on.
No, I know, but it seems like you'd have to do it in a way where certain stuff you are liable for, but airing news that may or may not, you can't know when you're airing something. Laptop, for example, the lab origin of a virus. You can't know.
Well, you would
at
just
the
be
time.
you would be subject. It doesn't mean you can't.
But you don't want
It means
people-
that you can have people come after you to say, "Did you have malicious intent?" When
But the bullying part and all the horrible stuff that happens on social media to kids, they have to take responsibility for that. But those are separate issues, aren't they? Free speech versus actual nefarious intent to harm people.
Well, one of the most interesting things about the Section 230 debate that people have often neglected is that it actually allows you to take action against harmful material online effectively. And one of the reasons that I always thought it shouldn't be changed is precisely because of that. You have effectively a safe harbor for some things that you're doing to address those problematic pieces of content, for addressing clearly illegal content like child sexual abuse material and some of the revenge porn things that have gone on online. And you can still go after that, prosecute. The company can still take action about it, and it actually is sort of encouraged to do so by the protections of Section 230. So that's been a kind of a misnomer over time.
I feel like it would be stronger, Chris. They're yelling at us. We got to go. But I feel like it would be much stronger if 230 didn't exist. It would be much more pressure on companies to make sure that they were going after them, not just encouraged to do it. But you're in trouble if you don't.
I mean, I think you're still in trouble if you don't. There's certainly a lot of regulatory pressure on addressing it, even under a Section 230 regime.
Chris, come on back. There's so much more to talk about with this. We really appreciate it. Great to see you.
Absolutely. Thanks so much for having me.
When we come back, we're going to take a check on the futures, get you ready for the trading day ahead. Don't go anywhere. Squawk Box.
Put all that paper. That's strange.
Reuters.com.
All right, we got some weaker jobless claims today. Weaker than expected jobless claims, also weaker than expected numbers for ADP in terms of hiring, and as a result, we saw futures bounce around quite a bit. We're ending up with the Dow indicated up by about 30 points. S&P futures up by 6, the NASDAQ up by 23. We also saw Treasury yields move up through the course of the morning. We'll be talking all about it throughout the rest of the day. Make sure you join us back here tomorrow. Right now it's time for Squawk on the Street.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Pretty steady pre-open ahead of tomorrow's holiday for former President Carter's state funeral. Yields definitely in focus. 10-year hits 4.73. That's close to a one-year high, although Fed Governor Waller does see more cuts this year. Our roadmap begins with unprecedented wildfires spreading uncontrolled in California, forcing tens of thousands to evacuate. We'll bring you the latest live from the ground in L.A.
Plus, has the bubble burst? We're talking about that record run-up in quantum computing-related stocks. They are now plunging this after NVIDIA CEO said useful quantum computers, it could be decades away. And of course, we're keeping a close eye on tech. Struggling to rebound from yesterday's sell-off. Palantir, that was one of the biggest S&P gainers last year. It's down for a third straight day, and AMD is sinking this morning, this after a downgrade over at HSBC.
Let's begin with this reversal of fortune for those high-flying quantum computing stocks. They are taking a hit in reaction to this comment from NVIDIA's Jensen Huang yesterday at CES.
If you kind of said 15 years for very useful quantum computers, that probably be on the early side. If you said 30 is probably on the late side, but if you picked 20, I think a whole bunch of us would believe it. But what we're interested in is we want to help the industry get there as fast as possible.
Some discussion this morning, Jim, about whether we really felt this was on the come in the near term or not.
Well, that's Colette Kress, by the way, the fabulous CFO who's next to him. I want to point that out because the tag team and them represent tremendous authority. So the quote previous to that was really enlightening too, where he just says, listen, this only works for small form factor and is used microwave. The large form factor, which by the way is automatic driving and robots, it doesn't work. So not only is it later, but it's not useful. And he also said it had to be worked with a CPU, not a GPU. That would be like an Intel engine, and it's much too slow. So what you have is a stock like Rigetti. You'll see that under the crawl just this very moment. RGTI. Now this is a $2 stock from a few months ago. And they did a gigantic 50 million share offering at $2.11, really basically because they needed the money. They had flat revenues for a long time. I don't think people are looking at the things they're buying. QUBT, 400,000 in revenues, very big losses. A QTUM ETF that has almost no quantum computing that's been bid up. I mean, there really are, David, I'm not saying that these are necessarily fraudulent. Because Willow, which is a project of Google, is pretty good, and Amazon was working on a program to help quantum developers. But it's frankly, I'm going to use the word chimerical, in the sense that these companies, none of these companies have much in terms of revenues, except for IONQ, but they're all losing a lot of money. And it was the type of thing you see at the beginning of the year. We're also seeing it in nuclear, another area that's chimerical. And I think that it has to be washed out before we can go higher.
Well, it's not as though we didn't point out any number of times as these stocks were making their moves up about the quality of the companies themselves. I think we made reference, I remember having made reference to the late mid-90s when refrigeration companies, I couldn't remember the name of it, became internet companies, so to speak, and the enthusiasm with which they were briefly greeted. Not to say that announcement from Google only a few weeks ago about the Willow chip and what it was able to accomplish isn't something that is worth paying attention to, but we pointed out many times it could be many years. But of course, when you hear about it from probably the single greatest authority there is at this point in terms of the future of computing, then you believe it, and we'll see. Google stock, by the way, also moved up. I didn't believe it at the time, but too many people said that was the reason on the advancement that they made in quantum. And so, yeah, your point's a good one, Jim, particularly about the quality of these companies. People should be very much aware. We would not even have discussed many of them given their incredibly small market caps.
But they're not small.
Prior to the run-up that
That's the
took
problem,
place.
right?
We're talking about run-ups in a very short amount of time.
Yeah, and I would argue that Rigetti, which also had a lot of insider selling, is probably the worst one. It's up a great deal. They needed the money just back in November, and I think people took it off, and they have no idea what it really does. It designs quantum computers and superconducting quantum computing processors, and that's precisely what Jensen Huang is saying is really not that valuable. Now, several months ago, I went out to lunch with Jensen, and he was still a little bit more on the fence on quantum, so he's obviously done a lot of work on it, and he clearly does not think it's an important technology anytime soon. You know, a 20 to 30-year time frame is not anything that he's talking about for anything that he's doing, Carl. So I think that people should sell those stocks and lock in their gains. And you know, I have a froth box this morning on what I'm looking at. The nuclear power stocks, they're just ridiculous, frankly, other than GEV. And there's GEV doesn't think they're anything until 2032. And then Palantir, I was trying to figure out what
Vernova. We've had the CEO join us not that He's long the only ago. one
really building them. And
But
he's
these are some real technology.
Yeah, but they can't build them fast enough, and they're very expensive, and the overruns are ridiculous. So we have to clear out the nuke, and we have to clear out this ridiculous stuff when it comes to quantum.
That's interesting.
And then we're ready to start anew. Palantir being there's one of Kathy Woodsman, an aggressive seller, ARC. She's been a big believer. I got the Alex Karp biography yesterday. It turned out to be 37 pages. I got to get the different one. There's like 3 of them. One of them I think is, remember he is a crack shooter. He went to Goethe. I know how to pronounce Goethe, and it's neoliberalism. It just gets better and better and better. He's the Bond of intellect.
All right, but
James Bond.
on clearing out, then is Palantir still in that clearing out phase as well? To a certain
Palantir
extent?
actually has a fabulous rule of 40. They've got great growth, great rep. Well, don't dismiss
No,
that.
I know you with the rule of 40. All right.
Bill McDermott from ServiceNow has a tremendous rule of 40, David. How dare you?
What is
How dare
margin
you?
and revenue growth? Is that what? Yeah.
Well, there you go.
Yeah.
Yeah, you're like a quantum computer expert when it
that's
comes
me.
to rule of 40.
It is cold in here.
Yes,
It is.
exactly.
I need it to be very cold, as you
But
know.
now look, the quantum, the qubits, which
But
are
wait till
basically
15 years from now, I'm really going to be going.
Now, the Stanford computer group, the professors really believe in it, so it's not like it's fancy.
Wait, we're back to quantum now?
Well, I'm trying to give you a full
I want
panoply.
more on Palantir.
Palantir is a tremendous. Look, Palantir is Peter Thiel. It's Alex
I know all
Karp.
those things, but it's
And
also a stock that was trading at 50 years worth of revenue. So is it?
It had a great last quarter. Look, last quarter was great. The revenue growth was great.
You
were in the room when he spoke.
I was.
Will you please show some deference?
I tried.
If only just because of his incredible hairstyle.
Beautiful.
Maybe the other thing to mention regarding Jensen are his comments, Jim, about Blackwell again.
Here from this, and the ADP more of as prioritized by the market
And it's,
generally.
Yes, and remember, it's private payrolls.
Yeah.
They don't take any government, anything like that into, which, if you look at the data from the last 12 months from government, it's about 500,000 jobs.
Sure.
They were averaging, I think, 43,000 a month.
God.
In terms of the last 12 months.
That really sucks, man.
We could open right now about what it means if government jobs start getting slashed, but that's.
I hope the hell they do.
Conversation for a different part of the show, and maybe in a couple weeks when we start to see Trump 2.0, and what they're going to do. For now, we know
We're too far in debt to be hiring 40,000 government jobs every month. I mean, they're slacker work. Yeah, we'll hire you. Go get us coffee every day. We'll give you 120 grand a year. Good morning, retail traders. I've never seen anything like it. The government take off like this. I mean, it's incredible. It's stressful.
you have to.
Right.
But our last few inflation readings showed a little stickiness, a lot of stickiness, and maybe even a little bit of warmth.
Right.
So
There's the problem.
At this point, we do have Fed speakers today and this week.
Waller's already spoke.
Waller's out. do we need to see them start to tone down the language around cuts? Because that's when, like, oh, do we really need to throw nitrous onto economy that's already real solid here?
Yeah.
That sounds like it's getting inflationary.
They have to, bare minimum, frame a realistic picture of the data that's coming in.
Yeah.
Right? And the worst case scenario may be, hey, we got to pause. We got to let, Jerome Powell said, at these levels of Fed funds rate, we're still restrictive. That is maybe something he has to say. They have to stay there for a while and work their way through the economy at lower levels. Remember, a soft landing is a great theory. It's just never been done before. So therefore, the view of a soft landing may feel different than other landings in the past.
Yeah.
Right?
And we kind of have been in
into
one.
a recession.
Yeah.
And that's how you bring down inflation. This is a different picture, and it may feel different and uncomfortable to traders.
The other thing too is we have landed pretty softly,
Yes.
and it's an ongoing thing.
You can't argue with it.
Yeah, so it's we just kind of have to be cognizant that might change the outlook for the Fed if they don't need to help the economy as much as they thought they needed to. So
Much like Amazon has the last mile, this is that last point in inflation that we have to get to, and it'll probably be the hardest and the stickiest.
well, yeah, and it looks like if the numbers keep coming as strong as they do for jobs, it's it may have some challenges still ahead. So all right, we'll watch for some of the Fed speak. We'll see how stocks respond to it. Bonds will change right now. But the dollar certainly telling us that the themes are present here this morning. Let's talk the other big theme, Jenny, which is NVIDIA and the turnaround from the CES pop. There were some interesting comments from Jensen Huang about AI, about quantum stuff. Take me through kind of the latest.
Especially because I feel like this has been somewhat of the underlooked area that swelled towards the end of last year. I mean, we saw so many of these names explode really, that have this quantum computing reach. So now, today, retracing some of that strength, as of course Jensen did declare the useful quantum computers are still many years away. I actually was frankly shocked. He said that 15 years would be on the early side. If he said 30, it's probably on the late. He says 20 is much more believable now. 20 years away. I mean, who knows what this Earth will look like in 20 years? I mean, that is a long-term story.
Yeah, this is, by the way, for, I don't know, I'm not going to try and sound smarter than I am, but the quantum stuff is that sounds totally reasonable based on everything that I understood about the physics of this stuff and how unwieldy it is. Very, very difficult. I mean, the conditions that have to be fostered and maintained for these things to function is so experimental at this point.
Well, right. And so I think that so much of this strength, at least towards the end of 24, was tied to Alphabet's Willow, which was one that, I mean, you see this number where it claimed that it was basically able to complete a computation under 5 minutes that would have taken one of the fastest supercomputers today 10 septillion years to solve, which, out of curiosity, I just wrote out that number. It is simply ridiculous. But to me, that is we're talking now leagues and leagues above where I can even comprehend. I'm like, well, so how do you even know, theoretically, what could be solved? I feel like that's just such a large number relative to today's supercomputers. To me, it sounds almost outlandish because, again, how are we getting there? Because that's a pretty big promise to make, 10 septillion years.
We just cracked the AI code for language learning models, and they kind of want to jump ahead. Look, the quantum stuff, I mean, they're building out, research facilities and campuses here in Chicago. So, it's very real that, there's utility here eventually, but, some of these stocks have just been absurd when they're, pre-product, many of them, and existing largely in, a sort of philosophical realm more than, a, revenue-generating or anywhere close realm.
To me, I almost associated them somewhat with the run-up we'd seen in some of these space travel names, for sure. I mean, theoretically, it sounds like something that would change the world in a sense, but we are so many years away from that being a profit or really significant revenue churning portion of the business that I understand why we're seeing this downside. He did say, I mean, Jensen did say that he expects NVIDIA to be a huge part of that, and I don't doubt that as far as like their reach into technology, but I've always compared, I mean, like in a very, very simplified manner, it's like a fire hose basically trying to control that right now, where they have so much information, but then simplifying it and making it so these computers can work efficiently, I think is still a huge challenge. I also think it's kind of interesting because there's the theory that it could pose this threat to crypto, or that it's going to have some degree of implications for crypto, but even Alphabet said they're still like 10 years away from that even being an issue. So if Alphabet's saying that, now we're hearing 20 years, I think this is such a long-term story. I mean, perhaps, maybe, I think justified that we're seeing a pullback in some of these names that were up so significantly.
Oh, this is like a lot of these stocks that we're looking at right now. We're definitely we're, I mean, kind of indisputably like the bubbliest stuff that came up the last couple of weeks. It's like, it's fun, you know, from a science standpoint, that we have the public market to like finance these, you know, theoretical concepts and early stage products. But this is definitely one of the bubbliest areas of the market over the last 3 months. So to see some air come out kind of fits overall with what we saw yesterday too, which was just some air coming out of the tech stuff. Because this is like, you know, they don't even have revenues or products, a lot of these.
Right, like I wouldn't say that this is like moving the overall needle in as far as tech today, because I'd say that in terms of AI, I mean, focus on large language models still are not a perfect application. Focus on AI, like Apple Intelligence, mine is, at least in my own experience, is still years away from it being life-changing by any means. We're still away from autonomous vehicles. I mean, all these things that we start to run up on, I think that pay attention to those areas of tech still. Let's move away from quantum computing.
Let's get the few things in front of us, like, you know, settled. To be clear to that point, Jensen Huang does have a tiny bit of an, you know, motivation here, an axe to grind, obviously, because when you get reports that quantum's going to be able to do what supercomputers can do, you know, at exponentially faster speed. I mean, he's making supercomputers right now, so that would be a little bit of competitive challenge if all of a sudden we can whip up quantum semiconductors, which is kind of what they're trying to do, essentially, to replace the semiconductor.
And remain best in breed. I think that that's like the huge portion of NVIDIA's success is the data center revenue growth. I mean, the fact that their chips are pretty much unmatched by anyone out there. We talk about competitors, there aren't really any right now. So I think that to be able to continue to have that edge, they do have to be very forward thinking. But to us, as people that follow the market, 20 years, I'm like, I just missed this entirely. I'm like, yes, I appreciate the commentary, but to me, the story with NVIDIA is still tell me how you're producing Blackwell and tell me how you're continuing to ramp.
Yeah, and we didn't get a whole lot of that new from CS yesterday, so.
Not at all.
I think the market's kind of looking at things that are 100 years down the road, 20, 10, 5 as all being ahead in a moment when risk comes off and they're kind of just selling things, but the stuff that's the most probably should be getting hit the most. So these quantum stocks down like 10, 20%. I think it makes some sense. Thanks, Jenny. Good look at some of the movers here early this morning. When we come back, we'll continue to talk about the major themes that are coming into view for 2025. And one of those is that the Fed likely won't be able to cut as much as folks thought. It's kind of been a theme for the last year, and we've been all right. However, our next guest has said that this time things could get ugly if and when some of these bubbles do start to pop. Rebecca Walzer is joining us to kick things off this morning next.
Trading at Schwab is powered by Ameritrade. bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
I'm Nicole Petalini, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Stocks a little quieter this morning, but still some red as we begin the session with the Russell down 70 bips. Coming off a rough day yesterday. Question is, what happens if markets do break further? Joining us this morning, Rebecca Walzer is the president at Walzer Wealth Management from the New York Stock Exchange at our site down there. Rebecca, great to see you this morning. Thanks for being here.
Thanks for having me, Oliver.
Last couple times, I think I watched your interviews with Nicole. You were looking for a little bit of volatility, pretty cautious on the market. Tell me what you think's happening. Is some bearish framework coming to reality here?
Yeah, I mean, I think we're absolutely experiencing a global pullback. All we have to do is really look at Q3. We had the largest Treasury sales from Japan, and actually the largest sales on record ever. Japan sold just under $62 billion worth of U.S. Treasuries. China sold $51.3 billion of U.S. Treasuries. These are the first largest and second largest one-quarter sales of U.S. Treasuries by foreign holders ever. So we start to see that the strength of the U.S. dollar, Oliver, is really causing problems. We've got Japan that's doing a 39 basically $1 trillion yen intervention to keep that going, and it's not as much as we saw in August with the reverse carriage. And I'm not saying that. I'm not saying that they're getting interventions, but they are stimulating, and so is China. We know PBOC is absolutely doing a lot of stimulus and cutting rates. So you've got Asia in a very, very weak spot. You've got Germany in a very weak spot. So we know that that's coming here. And as much as we want to say a soft landing, we can technically say is achieved because of the labor markets and all of these things. We are seeing softening. And look at the auction that we had just yesterday, $39 billion on the 10-year, Oliver, and it was a mixed result. So as you see the strength of the dollar continuing to give the rest of the world such a problem, you're talking inflation, you're talking that it's going to rear its head in 2025, which will be an issue for the markets if they're expecting the Fed to continue this stimulative, easing type of mentality with cutting rates and even maybe doing some QE instead of QT.
I think it's a pretty great observation to start with the foreign demand waning for treasuries. We've also heard arguments here on the show from some bond bears that pension funds kind of fully rebalanced to when yields were closer to 5%. So what do you think is possible here for yields, Rebecca, and where will those buyers get interested again in your mind?
Well, I mean, I think the United States is going to have to realize, and we're talking about Trump potentially declaring a national economic emergency using something called the International Economic Powers Act, the IEEPA, to implement his tariff policy. So then you've got protectionism coming in. We were looking at China retaliating against that protectionist stance that Trump is announcing, talking about any kind of dual use. They've already listed 28 companies that they import or export dual use products that can have a civilian use, but also a military use, and they're saying we're not going to ship those anymore. You've got them sanctioning 17 companies in the last 2 weeks for basically selling military parts to Taiwan. So you've got a lot of things happening with Trump coming in that are protectionist based, that we're seeing China being a lot more aggressive, Trump 2.0, that they are retaliating very quickly as they did not do necessarily in his first term. So when you've got all of those macroeconomic headwinds in a globally slowing world, you're going to see problems, and that is going to roll over into equities, and people aren't going to see, and to your point, you just had the whole segment on AI and quantum computing. It's not monetizable immediately, and so as people realize this is a a longer runway than they expected, then the actual irrational exuberance, kind of like the dot-com fervor, if you will, is going to pull back, and that will relax the market's levels right now.
To take a few things there to break apart then, Rebecca, because it sounds like you have kind of doubts about some of the viability of these really juicy valuations and tech stuff, and that seems like a very reasonable argument. If we put that aside and go back to just the economic one for a moment, do you see upside in interest rates, yields as being the spark for investors to...
Good morning, retail traders. Looks like quantum stocks are taking a hit this morning because of what NVIDIA said. Who's this girl? She's new to the floor, yay. I want to work for Schwab.
Overweighs as people just start dumping equities, and maybe that'll cause some bond buyers.
You know, I do see, to your point, that
NVIDIA has a triple bottom at open.
more of an alignment with 2025
Oh,
simply because the risk of
2
how much
minutes.
is getting printed in the bond market is going to be detrimental. And then you're going to have institutional investors, you know, they're going to be in the place for fixed income, you know, Oliver. But at the same time, they too are going to have to start to worry about, similar to them worrying about state solvency of like California, Illinois, state solvency of bond funds, where they're going to have to look at, can we continue to just really use a treasury policy with the amount of risk that really is coming into the bond market?
Dollar says that whatever problems we might have, seems like they're still the best ones around the world, Rebecca. That's kind of the, I guess, counterpoint is, even if we're printing and we're running it up, everybody else did during COVID, except their economies didn't keep up. So we stimulated and leapfrogged everyone. So where else do we go?
Yeah, but Oliver, I 100% agree with that, and that is absolutely true. But that statement is on the precipice of being untrue, because remember, we're able to export our inflation to the rest of the world because they have to buy U.S. dollars for OPEC and crude and all of that. That is changing with the BRICS bloc, with Project Enbridge, with everything that is going on with de-dollarization, cross-border payment transactions on the rest of the world. We are really moving into multipolarity, and there will be currency alternatives to the dollar very quickly. And so we cannot rely on the fact that we are the world's reserve currency forever, and that is getting more and more obvious as this BRIC bloc really goes into payment, bi-directional payment processing between countries.
how will we know? Because right now the chart of the dollar pretty clearly says otherwise, Rebecca. 109, 114 was the high in 22. That's basically the highest, the second highest in like 10 years. So far it's going the other way.
I think that how we know, Oliver, is when you see Japan having the largest amount of sales of treasuries ever in the history.
KSPX is down 273. Rogetta's down. Now, I was going to buy this, but I'm not going to buy it now. I'm going to wait for a bigger dip if I buy it at all. NVIDIA bounced up this morning. Now at 436, AMD at 123. Google down 260. DATS had that big run yesterday. It's down at my support levels. I had these up for years ago. Rhyme. Mobot's down to my 50% pullback. I'm just not in the mood to take too much risk. Let me see what the volume highs are doing. No politics in the chat. Meta came back and hit the 4-hour this morning on the, yeah, hit it on the 4-hour, 200 SMA. AMD's at 122. We got Apple 240. Mr. had a little bounce in coin, and Tesla. We got here China. China looks cheap, but IWM's at the 200. We've triple top on the QQQ. Symmetrical flag on the SPX. So the SPX is retesting the bottom here right now. What's Schwab doing up here? Double bottom on the SPX. Today's the 8th. God, they're expensive again. I just don't get it. They just seem too high anymore. So I'll look at the SPY and trade it, start trading it, but I'm getting sick of it. The market dips and they're up. Even the puts are expensive. Okay, SPY for the 9th. I can afford them. We got a double bottom yesterday's low at 58.90.68. IWM's double bottom with a lower low. You got Fed speakers today. We had 3 black crows and a bounce with an inverted hammer. The 591s. Looking at the 591s on the SPY. I'll grab 10 of them here. $0.98. Can dip more. Get down to 586 by the end of the day here. Feeling at the December SEP was a very difficult problem given the policy uncertainty. I hear uncertainty a lot. There's the knife. They bought the dip on the 1, 2, 3. So I think now it's going to tell us if we're going to break out or not. What's VIX up to? Pretty good spreads on the SPY this morning. Okay, we broke out of the bull flag. Come back to support on the SPY. Sat around for long enough. Go get some water. Could have had a couple scalps today on the SPY for a good 15 cents. You got a wedge, well, kind of a wedge on IWM. About at the squeeze point. NVIDIA has a new high. There's a pop on the SPY right there, 141. Okay, the puts. We're at resistance again. The VIX just dropped. Okay, we brought the SPY back up to resistance. 588.51. $589 is next, then 42 and 63. This code IPO, well, that'd be good. That means they'll start charging us. See how badass the bulls are right now. I got 588.51 has to break. NVIDIA hit the 63 EMA on the 1 hour for resistance to break. On the 1 hour. So when's the rug pull going to happen? Or are we going to break out? A little bit of strength in here. We got that hammer bought at the call, or the bid. Should jumped in them. Almost got them at 110. The 590s. You think so, Parge? Market have a little bounce because of the Carter thing. Tomorrow's a national holiday for Carter, and the flag's going to be down 30 days. It's been about 39 minutes now, and the market can't make up its mind. It kind of did right here, but it didn't break resistance. So if it bounces, it'll bounce off the 200. We've got a bunch of hammers and a long leg doji. A spinning top. They're all bullish. I think this market can trick us because we kind of sat here a little too long. I'd rather see a double bottom. At least stop right here. Give it time. That's a bear flag right there, that hammer right there. You ready, Randy? Okay, here we go. We're at about 118. The 590s right now, I'm watching real close. Pulled right back to where I thought we would right here. I'm a little nervous to push the trigger for some reason. What's the VIX doing on that? The next step would be right back down in here on the top of that channel. Or the double bottom. Right about now. at a buck. So we'll see right here. Kind of risky. Ugh. We're at a double bottom. Now we got a lower low. So you can touch this right here. Around 586 something. 13. And there we go, right there. See how tough this market is. Give it to me for 96 cents. So it came back to the top right where I said it would. Come on now, bounce. I just got a few contracts. I didn't get that a lot. I just don't feel good about this market yet. Yeah, it's not. Yeah, coming out of the snake. Well, well, well. We got an inside candle with a hammer. Lower low though, but right at my 586.02. I think we need to break out here real soon. There we go. Break it. Now let's do it. This is the double top right here. It could get out right here. Fuck. Come on, you chicken shits. Having a hard time making up their mind. Where's my pen? I better make sure my finger's on the trigger. Take it back to the VWAP. So I got out right there. $48 to buy dinner with. On the 9th? I don't know. It did it. Strange, eh? There's the 9th, January 9th. Huh. You're on toss. I'm trading with Trend Spider. Not Trend Spider, but Tasty Trade. It's got a W on it. Randy, whatever that means. Let me see. Well, all of them have a W on it, so I don't mean shit. So the 10th, they're at 205. Now you're 5 notches out of the money, so I don't know. If we have a knife here, it seems like it's being very tough today. It's undecisive. Randy's mad. Are you mad, Randy? Shaking your head? I got a little bit of pull. That's what I got with the market. Everybody's wondering how I got away with trading out of on the 9th when the market's closed tomorrow. I got him in at 96. I about to dip on it. I said, I'm just going to wait. And again, it gave me credit for $2. I called it at 98, and it took it in at 96 and got out at 112. Only 3 contracts. But it's on the 9th, and everybody in the room can't trade it on the 9th. So I guess that's one benefit about having Tasty Trade, unless it's a fluke. But there seems like there's a lot of uncertainty going on right now, and it's 9:32. SPX gap fill. Hello, Alan. Let's see what time frame are you looking at, Alan? The hour? Yep, I see it. So we got a gap touch on the 1 hour time frame on the SPX. So that's a solid support. That's on the 1 hour time frame using the body of the candle. What do you got? 58.75. I got 58.91. See that gap right there? GAP. Now, if it doesn't hold the top of that gap, it could drop down to the bottom of the gap. And that's 58.90.99. I mean, what? I put an arrow in there. I didn't know that. That's God sent there. Damn, there they go to 127. It's breaking out. Shit. That pisses me off. Could have been a $100 trade right there. Actually, 90. That was a good call, Alan. For a scalp. So we got a 1, 2, 3, and we got a 1, 2, 3. Munich, Paris, everybody talking about pop music, actually. Now we got a megaphone also. No, not a megaphone, not on the 1 minute. That's right above the 200. Rodney, I want to see if the SPX lets me trade it on Monday. I mean tomorrow. So I ain't trading with you ever again, man. It ain't fair. Something sounds fishy. Yep, I agree. We got 3 white soldiers right here. Now resistance is a confirmation right there at that spot. $59, $12, $16 is going to be our resistance to break. The hard resistance. We might stop at 59.08. Damn, I wish I'd held that one there for a little longer, but it would have dipped on me and I'd been freaking out, so I did good. Yeah, the 59.40s are at 245, 250. These are going to let me trade tomorrow too. Wonder if they didn't catch that. They'll be getting a message saying, Jim, that trade doesn't count. It's a weird looking megaphone. We could easily drop down farther. Now that's a better looking megaphone right there. So that's a triple confirmation at 59.12.16. I'm watching the 59.40s. They're kind of out of the money right here. Not completely, but real close. So it'd be a huge risk. 230, 215. Oh, here we go. I got to put that trend line right there. Yeah, it's a double confirmation. 58.90, 99. And pivot points right there. That's your pivot point. $59.98.79. Watching the tape. If it goes below 2, the 59.40s, it'll get a little bit more scarier. I don't know why it's still letting me buy them at 2, the 9th. Okay, get ready, Jimmy. There it is right there, support. So this is it. $2, so I got one. If it don't hold, I'll get out. I'm not saying do it. It's a real risky day today, so. And I'm kind of too far out of the money. So I'll just get out of fast scalp if it breaks its resistance. There's another 45 bucks. Now, Mike put in some good candlestick patterns in the room this morning, and I think he saved it in another room somewhere. Another. Ten-minute falling wedge. Study them candles. Website tool, free tools. There's 255, 260. That was a good call. I should get a very good grade on that, Magnificent. Because I said wait for it to hit this support line. And get out now at 260. But I'm going to see here a little bit longer. There we go. 280. And there's your 1, 2, 3. Time to score. $3. Jimmy just made $100. Well, they gave him his orders in Monroe, Virginia. A tentative. I got out at the double top at the 1, 2, 3, baby. Good job, Randy. Now I'm going to rub it in. 330. We're closing in at the 200 SMA. We're experiencing technical difficulties. 370. Take that plus off the A, please. We're experiencing technical difficulties. That could have been $185. Anybody know how to count to 3? You can trade with me. If you can count to 4, you might make a little bit more. Randy pouts. Randy, you can't do that. Wombats, Tubus, and a freebie with a higher low. How does he do that? If we have any black people on YouTube, I love blacks. Mannequin, you retracted your message. You know I don't like that. Say what's on your mind. No retracting. I wonder if I can get away with that on social media. On Facebook now. I got thrown in jail for 3 days on Facebook because of, I said something about the laptop. How does he do that? He listens to C, Mike, and mostly importantly to Magnificent. You snake. Snake in the grass. Fireburst, our friends drop in clinic for the roller coaster of life. Well, California is pure hell. FKG dims. Wow. So we're at resistance. I'm debating if I want to get back in these, and I kind of don't. We have a 1, 2, 3 bits. One of us, and we did break it. We haven't had a full body candle above it yet. We had a nice break off the 1, 2, 3 and the 1, 2, 3. So if it comes down to number 4 or stops at the pivot point at 5, 8, 9, 8, 7, 9, it could run back up and break that and finish that megaphone. 1, 2, 3, 4. Might make a little bit more. Can we see a little pullback here before we break out? We have an ascending triangle now out of the it's an ascending triangle. Okay, 1 bis, 2 bis, 3 bis. Here we go. It has to hold right here. I think patience is going to have to be my lesson for 2025. I kind of want to buy it right here. I'm going to wait. Okay, get ready for the pivot point. Indicator says it's finished. We got 3 black crows. I keep staring down here at this here number right here. Catch it off number 4, the pivot point. Now this is called a harmony, but you know, I wish I'd held them $2. VIX is rising. AMD hit 120.80. Merit 18 something. There's 230. Okay. Get ready. Magnificent. Magnificent. Get ready. We're experiencing technical difficulties. 1, 2, 3, 4. You little dirty whore. I messaged my friend Stormy Daniels and she said, could I have $300? Here we go. We nailed it. $2. Back at my old entry. I'm not saying this is gold. Man, are you snorting that white line again? Blanket. These are the 59.40s for tomorrow. Why am I doing these for tomorrow? What the no, that's what did I do tomorrow? Ooh. I like. I think that's the first trade I ever done tomorrow. Huh. I sure did. Well, it ain't no lotto. Ooh. Ooh. 1, 2, 3, 4. You might make a little bit more. I've made a business decision. We're at $3. I got out at $2.90. Damn, I did it again on the 9th. Oh, they are? Oh, good job. Great work. So we hit the 200. I'm not saying we can't go up and complete the ascending triangle with a 1, 2, 3 breakout to 59, 12, 16. Ooh, there's 330. Tasty trade. Well, 330 they went to, so it ain't much of a loss. $40. One, two, three, four. 1, 2, 3. So if it comes down one more time, it might take a nosedive. So get puts after if it doesn't hold this trend line. Period. Wubbits. Tubus. And a freebie. And it really don't count because that body's not touching that trend line, but the wick did. Now I'm going to go in there and make me a cup of hot chocolate. Okay. Disney pulled back to 109. LA fires rage out of control. Disney stock is falling. Disney gets an upgrade yesterday amid content streaming profit growth. Okay, here we go again. It's 1, 2, 3, 4. If we go to 5, we'll take a nosedive. We do have a new ascending triangle here also. So I'm going to do that. That's an ascending triangle. It stays above the pivot point, we're still bullish. And that's the pivot point of this megaphone. We're at 240 now. Can I get this at 2 again? I could. Nancy, will you give me a Valium and a shot of vodka? I promise I won't sleep on the couch tonight. I just told Nancy I won't sleep on the couch. Now, room, you know I'm like Elvis. When the theater is closed, I open it up. Thank you very much. Let me go get my chocolate. It's one of them kind of days. Market's really got some low volume. It's got ready, set, go. I don't think I'm going to get my $2.50. $2. Bingo. Did it again. $100 here, $100 there, $130 here, and 45 there. Mike said they were all go. No, you're not. Randy has balls. Randy's got big balls. Were you spoiled, Randy, when you was a kid? I think you were.
Well, it was nuked. Why is it nuked?
Nowhere.
Oh.
Holy fuck! Holy fuck! Holy fuck! Thanks for the 20 bandos.
Yeah, he did.
Yo, 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 yo.
Now that we've broke above the ascending triangle, this is called an ascending triangle. We didn't come back and hit the 5, which we probably would have took a nosedive. We stopped above the pivot point inside of the megaphone. That's called a megaphone. This is the pivot point inside of the megaphone, or at least my pivot point. Disney New Low. I don't know why they'd give Disney an upgrade in a way. Especially if they're paying Sonny Liston or Houston or whatever her name is. Hostin. I don't like that chick. She's a racist. Okay, I'm getting ready to make a business decision as we pull back to the 200. It is 10:30. $235. We got 3 black crows off the 200 SMA. Ew, what's that? What the hell that is? How much is it? Boom, baby. Three Black Crows off the 200 with a double top. I got a $100 gift certificate. For the down payment on the washing machine. We're winning, Randy. Are you still in it? I'm out. I made $100 while you're sitting on the pot. I made 90 while you're sitting on the pot. It's a low volume day today. You can tell YouTubers how this tape's moving. We ain't got too many fat cats fucking with us today. Oh. You should be able to buy some toilet paper with that. So an ascending triangle is a bullish flag. You have three black crows here at the bottom, head and shoulders, with a 1, 2, 3, 4. You want to make a little bit more. If we went down here and hit the, ooh, there you go. You're going to stay in the trade? He's out. Now it's going to break out to the top of the megaphone. Mike, give him a round of applause. Yabba dabba doo. God, look at it go. 420. It's 420. I left 120 bucks on the table. Bam. Fuck. Man. Boom, shit. And there it goes again. Mike's studying candlesticks. We're at the top of the megaphone. I'd rather see, well, I'm afraid to even try to buy it here. So this is called an expansion pattern. That right there. When I called it out, I said we could come up and hit the top of this expansion. This is the ascending triangle that I first spotted out first thing, and then we dipped on down and hit the number 4. So it came back up and it respected the pivot point inside of that expansion pattern. So if we break this resistance, we could go a lot higher. I had these at $2. There's 5 right there. That's a $300 trade. There we go. Damn. Randy's probably choking up on his bake break. Some spies I had. The 590s. Oh gosh. 590s went to 220. Well, we nailed the bottom for sure. That was a good call, Alan. We're closed tomorrow. Oh, Fubo. I forgot all about Fubo. I don't really want to buy into this here right now. I gotta wait. Tesla has a symmetrical flag with a head and shoulders. Fubo new high. Jet is now under $10. Uh-oh, I just farted. Woo! Did you hear that explosion? Did you hear it? It was a good one. I want to know how good this microphone is. Okay, ladies and gentlemen, we're starting to pull back. To the previous resistance. Okay, we pulled back to support. They're approximately at 380 right now. Washboardjim, what do you think? I think we should do it. He's watching very closely here. That one actually smells good. I think me and Kramer on Seinfeld have something going on. I just heard one outside.
Trader Minds. Go deeper with Thinkorswim, our award-winning trading platforms. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
I guess Rivian can trade 24 hours a day. What's that 24 mean? Yeah, EXTL eligible. This instrument is available to buy and sell 24/5. Okay, here's the knife. Okay, here's 1, 2, 3, 4, 5. Randy. If it doesn't hold this, after we come down and hit the 200. What's Tesla doing? Attempting to get this right now. $250. Tesla's coming close to the SPY is close to the VWAP. Here's support. SPY closing in on the VWAP. This could be the reversal right here off the ascending triangle. What was resistance now becomes support. That's number 5, so we might take a nosedive. This is the worst time of the day to get in this trade too. Right at 12 o'clock. Definitely at support. Okay, we're coming in on the 200. Can't believe they upgraded Disney. No way in hell I'd upgrade Disney right now. Not with the View. Not when they're paying the View salaries. Okay, we're at the 200 right here. So, do we hold it? We've got to make a business decision. Right here. $185 and the 59.30s had a $3 low today, and they're now at $3.30. And change it to 59.30. $3.30. Little risky. I'll get stopped out real fast if it doesn't hold 330. Oh. Why did I do that? Let me look at the 8th. $59.30s. They're the exact same price. You know what? They're the exact same price. So that's what they're doing to me. They ain't giving me nothing special. They're the same price. Man, my nose is itching. Mike started talking about white lines, and my nose is nothing but itched all day now. I'm back. Jake Paul, I'm back. What time frame is that on? The 10-minute? Now, Clay Trader likes to use the 15. We've got a head and shoulders on the 15-minute. The 5-minute. Three black crows on the 5-minute. Okay, I'm going to get ready. These are at 245. Oh, now they're too far out of the money. I don't want to trade them 59.30s now. I got stopped out of them at 3. But here I like the 3 black crows on the 5-minute. We broke below support using the bodies. Oh, wait. This would be the spot to get it if I was to get it right now at 235, 245. But they're just too far out of the money. So I'm going to go to the 59. Oh, damn, man. Wait for the bottom. I thought I was special. Now that makes no sense. Oh, because it's on the 8th. Oh. Give me the address. Is it south of Battlefield or north? Is it south of Battlefield or north? $20, $35. Battlefield Road. $60. There's the knife. There's the double bottom. Okay. Yeah, I gotta go get my sister. I better not take it. The 5910s. $530. Tight stop. And that's on the 8th. Those are on the 8th. Yeah, where are you located on Campbell Street? Is it towards 44 or Highway 60?
Campbell's a long way from 44. Off of James River, Highway 60,
Yeah.
and just a couple miles north of that on the left-hand side.
North of it? Is that by Bass Pro?
It's lower than Bass Pro. If you're coming from Highway 60, it's before you get to Bass Pro.
Before you get to Bass Pro. I'm on Battlefield, so just take a right on Campbell.
Which way are you coming?
I'd be going I'd be going west.
West on Battlefield?
Yeah.
You would go left on Campbell.
Left on Campbell, so I'd be going south, right? Oh, I got you. Okay. So once you get to, is it?
Looking for sales, service, parts?
No, I got to pick up my sister there.
Oh, okay, so she's in service?
Yeah. So that's,
What kind of vehicle is it?
I don't know, just, I've already talked to her, but I'm just trying to figure out how to get there. Is it after you go past James River? South it?
It's before James River.
Before, okay.
You're on Battlefield.
Yeah.
And you are going west.
Yeah.
You will take a left-hand turn
Yeah.
on Campbell Avenue.
Yeah.
You'll get in the right-hand lane.
Yep.
You will pass a Walmart, and then you'll pass Walnut Lawn.
Yeah.
And just south of that a little bit is our Nissan and Kia side.
Okay.
And if she's in service, it'll be either one of those two anyways.
Okay, I appreciate it.
No problem.
Thank you. Where are my shoes tonight? Why can't I find them right now? They're sitting right here. And I'm going to put them on. Got a double bottom at 480A. Gonna add one right here. Or 20. I'm gonna get stopped out if this doesn't hold here. Damn it. Should have waited. Well, I'll finish this trade on my way. What a sell-off. Okay, I got two more at 330. Okay. I'll catch y'all later. See how I do on this trade.
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our
Shit.
next guest. That's going to be Andy Swan, co-founder at Lightfolio. Welcome back to the show, Andy.
SPY's about to hit the right shoulder.
Yep, Andy, so when we look at Delta Airlines, rallied 50% last year, hit all-time highs. Everybody's traveling. It seems like you look at
You got a
services
Head and
data,
Shoulders with a
everybody wants to
megaphone.
travel at this point. What kind of data are you guys seeing on Delta ahead of earnings?
Yeah, the data we're seeing on Delta is really a smaller part of the story. I think the bigger part of the story is what we're seeing in the airline industry overall. You know, earlier this year, we were seeing pretty robust demand for airlines.
My average is 396. You got the SPY right here with the mega.
Airlines, but that's completely reversed. And what was a 15-20% year-over-year increase in web visits to the major airlines has completely reversed to now, negative 10%, negative 20%, depending on the airline. And we're just seeing an overall cooling of consumer enthusiasm for travel. And I think this is kind of that point where we're finally getting to one of those levels where, you guys and I have talked about in the past, at what point does the consumer say, all right, that's enough, I'm tapped out. We're starting to see some signals that may be happening, especially in the leisure travel category. For Delta Airlines specifically,
370.
This is a company that we've been bullish on for a really long time. I think given the web data visits that we're seeing right now and the stock price action being up, we're starting to cool off on that and maybe take some chips off the table at this point. Delta is a very, very good airline, really well run. Highest on-time percentage on its flights, attracts a higher-end customer. They have all the right things going for them, but the overall industry is starting to give us a little bit of concern here.
Yeah, and Andy, this time of year is not great for them seasonally either. January is normally seasonally negative. The historical reaction to fourth quarter earnings is usually somewhat negative. The last 10 years, only 36% of January positive returns. So there is some, seasonality, negative sentiment overall for the industry into January as you get out of the holiday traveling. So but you're talking about a much bigger level of weakness than just seasonality. You're talking about the whole industry is softening here, correct?
Yeah, and I'm talking about it on a year-over-year basis. So, we're talking about January of this year compared to January of last year, just a really big reversal. And, I think when I think about Delta Airlines, it actually kind of makes me think of some of the conversations we had around Starbucks a few years ago where, there's growing competition and, macro demand kind of softening. So what do? They went and they figured out a way to get more money per customer. And I think that's the challenge that all of these airlines are facing. They're going the premium route in terms of premium experiences and trying to upcharge people for picking the seat that they want, the lounge in the airport that they want, a better in-flight meal experience. And so they have a lot of people captive on these airplanes for a lot of time, and I think there is a significant opportunity to get more money out of each of those passengers. But it
Break
feels
the
like
nine,
that's
we'll
where
go
we are
higher.
in this cycle, rather than expanding the number of passengers or customers and winning the battle against other airlines. It's more about capturing a larger part of the each passenger's wallet, and I think that's going to be the focus for these companies over the next few years. And I think Delta's probably one of the ones that, given their history of great execution, that will probably do that the best. And so I am bullish on Delta as a company, just at these levels for the stock, and given what we're seeing in terms of overall industry softening, I'm bullish, but just not right here.
Yeah, and then, you throw in the fact that crude oil now getting closer to $75 a barrel. That's not going to help their margins at all, Andy. But when you guys look at the consumer sentiment data as far as what people are saying about the airlines, it's typically like Southwest and American are, usually at the bottom. Is Delta still the top as far as satisfaction from the data that you get from the people that you follow.
Yeah, absolutely. They're at the top by a considerable margin. 65% positive in the airline industry is exceptional. Most of these companies hover around 50%. So 65% positive is extremely good. It gives us confidence that Delta's doing the right thing by its passengers, and it also gives us confidence that when they do roll out premium offerings, that customers will be very likely to take advantage of those and trust paying the company more for better services or better experiences. And so I think Delta's in the driver's seat in terms of the next wave of airline monetization. And, they just probably have to get through a little bit of, I have to use the pun, they have to get through a little bit of turbulence to get there.
That's a good one. Andy, going into this earnings, you guys said maybe you're starting to see some weakening data. What's your earnings score on this one going into the report?
Yeah, we're officially neutral. That's really because the stock has moved so high. Again, we think the company's performing well. I am a little worried about the guidance that they'll be able to give, given the softening web visits data that we have. So if I were going to have to place a bet, I think a pullback would probably be most likely.
Yeah, and I think there might be some people buying it if it does pull back. All right, great stuff, Andy. Appreciate it. Have a great day.
Thank you, you too.
All right, that's Andy Swan, co-founder at Likefolio, breaking down the data for you. He's not wrong, Kevin. This stock at the beginning of August was trading around just under $38 a share. It hit 67.5 in the middle of December. Pulled back a little bit from those all-time highs, but at the same time,
it was flooding the market with good news about travel. And remember what Andy said, they focus on the premium customer. And remember that was one of their game plans. So this is a company, remember, they're still expected to grow revenue 2 to 4%. They're expected to make between $1.60 and $1.85 a share. We're going to get holiday travel results. You know what I don't want to hear about? The CrowdStrike lawsuit. Don't talk about it. Leave it alone. Let it melt away. I think it's a bad subject for them to be talking about. So I don't disagree with everything that Andy's saying about there may be some negative. And you mentioned a real good point, which is crude oil prices. And remember, the biggest input to their cost, variable cost, is energy, is fuel oil. So my focus here is more the strategy than which direction. I have a call calendar up as the paper money trade, but you can do a put calendar as well in either direction.
Be flexible with it, yeah.
Yeah, because front month volatility is 100. January 17th volatility 9 days out is 61. There's an opportunity for edge if you do the call or the put calendar, Tom. So what I looked at was the 64 call calendar. It was trading about 35 cents. Now it's trading about 30 cents, Tom. So it's a little bit lower as the overall market has backed off here. But this is a way to play that divergence between the event implied volatility and the second expiration.
Yep. Let's break this one down. Just really short-term positioning on this example trade Kevin brought us. January 17th, monthly options that expire in 9 days. Buy the 64 call. Sell the near-term January 10th weekly 64 strike call. Just a 1 week wide call calendar to the upside. 35-cent debit is what we got up there. That would be your risk if you paid that $35 per spread. So inexpensive way to get some upside exposure to Delta going into this. And as Kevin mentioned, taking advantage of that implied volatility divergence that we're seeing, nearly a 40 point or basis point difference between those percentages, what you're buying in the January 17th and what you're selling in the near term January 10th. Now your break even's probably about $60 on the downside, maybe 68 on the upside. So while you're shooting for $64 on this example, it can probably maybe trade 65, 63, 62, and you can still be profitable on this because the input costs or your debit that you're paying is so low on this one. As Kevin mentioned, the flexibility of this isn't about the trade and the direction.
Right.
This example is about the strategy that we're using because of that divergence between implied volatility. As Kevin mentioned, if you think that this stock, The anticipated market maker move about $3.40 right now. If you think it's going to go down that one standard deviation, maybe you do the 30 or the 57 or the 56 put calendar to the downside. You're not going to pay a lot for that either because it's about the implied volatility levels, but this gives you a less expensive way to play for some upside. And if you're more bearish, you can do a put calendar on the downside. So a good look at a 1 week wide call calendar.
Put calendar trading 35 cents.
35 cents for the put calendar. It's still down about $3 or $4 from the current share price in Delta. So that tells you right there that the implied volatility levels is what dictates the pricing on those type of example trades. But still risk defined. You got some assignment risk on that short option going into expiration over the next couple days also. All right, coming up after the break, we're going to take a look at Adobe, the digital cloud stock, now down over 30% from last year and was downgraded today. Fast Markets coming right back.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Adobe after that downgrade, let's take a look at the markets because they've sold off since we started the show. We're off about 0.5% from the levels that we were just about 45 minutes ago. The S&P 500 now down about 0.4%. Dow Industrials off 140 points. The NASDAQ 100 down just over 0.5%. And the Russell 2000 leading to the downside, down 1.2% on the day. So we're starting to see some weakness here for equities. The 10-year yield did get back closer to that 4.7% level, but you see there the move since we started the show here on this 15-minute chart on the percentage basis. But the Russell continues to lag, but we're seeing some weakness ahead of those Fed minutes at 1 p.m. Central Time. So we'll continue to watch those markets. Now let's get into a discussion about another stock that was downgraded today. This was a big high flyer when AI kicked off, when NVIDIA was rallying in May of a year and a half ago. You looked at maybe some of the other winners in this space that were doing really well, and Adobe was one of the first stocks that did really well when AI became center in our discussions. But it's pulled back pretty significantly over the last year. Let's bring in George Tilla, Senior Markets Correspondent, here to help us break this one down. George, we got a downgrade out of Deutsche Bank last night. They put the price target down to 475 from 600 at this point. Not a lot of clarity as far as their balance sheet and how their AI and Firefly is really going to help this company, and that's the reason for the downgrade. What's your thoughts here on Adobe?
Well, yeah, I mean, you're right. If you look at the chart, it did peak out, it looks like in actually late January of last year. So since the peak, which is around 600 or so, 630 or so dollars, it's been down, a couple $100. And, Adobe is a premier name, especially when it comes down to, document creation and content publishing and, of course, creative digital media and marketing and even e-commerce. And productivity tools in terms of their entire ecosystem of creativity software suites. And of course, their model is really based on subscription revenue. And, Adobe's, facing some challenges, particularly if you look at the last year. Some of the things that the company denoted is the costly aspects of integrating artificial intelligence, their AI Firefly technology into their entire ecosystem of products. And, while at the same time, you have to think about the 3D accelerators that are available to, programs like ChatGPT, which based on voice to text, you can actually create sort of these, 3D renderings and products and images that typically can be done without the cost associated on Adobe's platform. So point is I think that maybe in the last year, there's been expenses associated with, integrating artificial intelligence within their software, competition, at least mildly, let's just put it that way, with ChatGPT and some of these lower tier programs which offer, not necessarily compatible or comparable services and technologies, but they do provide some substitute technologies. And there's also one other element behind the scenes that's been going on with Adobe, and that's Apple. Apple actually bought Pixelmator, which is essentially an up-and-coming Adobe competitor. And it was a software available in the iOS ecosystem of Apple's software, but Apple decided to purchase them outright. So I think the market is also kind of building in this competitive threat element from Apple, to which we've seen the stock trade at the downside pretty significantly. Now, if you look at the price target that Deutsche Bank is pinning on Adobe, it's pretty conservative. It's still about $50 at $475 versus around $420 right now. And Adobe, again, still has a premier software ecosystem of creative publishing and document creation, which really is hard to match and beat. So, this is an interesting case of maybe there's some competitive threats out there, but that's also being offset from the legacy aspects of their platform ecosystem, which essentially has sort of a locked-in provision. Once, creative publishers and digital imaging professionals get used to a platform like Adobe, they're trained on it, it's hard to switch. So that's something to keep in mind, especially when you think about Adobe price action really reflecting competitive threats, but at the same time, you could also make the case that they have a longevity element or sort of a quasi-monopoly because of their architecture is really difficult to match on a creative basis.
George, something we've talked about a lot on this show, the next phase of AI is going to be winners and losers. And it appears, on the surface, or at least in theory, that Adobe has been stamped as one of the losers in AI, even though, if you look at the last 3 earnings reports, they beat earnings per share by $1 on each one. I mean, massive beats on earnings. They've got stable recurring revenues. And now, George, with this massive sell-off in this name, their price to sales is in the 9 handle, where the history, it's in the 14 level. So, I mean, this stock, the story, at least in theory, might be good, but it's not showing up in the numbers. And now the stock is starting to look incredibly inexpensive.
Correct. That's the thing, Kevin. So I was trying to, illustrate to some degree that there's a lot of, negative expectations built into the price. And you're right. I think if you do consider, the earnings estimates for Adobe, they continue to move higher. Now, they're not just moving higher exponentially, but they're inching higher, and you're seeing the price continue to move down. So your forward multiple is getting smaller and smaller, your forward PE ratio, and that implies that now maybe the value investors will start swooping in at some point in time in this name. So I think it's a great point you bring up, and you're right, it is starting to look attractive, but again, you have to look at the chart and kind of make an assessment of where it may find some bottom. But just to give you context, right now, if you look at the forward earnings multiple for 2025, it's around 20 times earnings, and next year around 18 times. And if you look at the estimates for earnings growth, and these are estimates which have actually come down but are still growing, it's around 15%. So it's getting close to 1 times its earnings growth, and that's quite compelling, especially for a company that has steady revenue growth, which is still expected to be over 10%. But at the same time generates pretty significant cash flow and of course sales.
Yeah, George, real quick here, just before I let you go, Kevin mentioned, they're doing okay on their earnings reports over the last couple. Stocks still sold off last quarter at this point. You mentioned ChatGPT, these other AI branded functionality out there, you can create an image on those relatively easily and quickly. Yep. Is that part of the problem from the retail side of the business?
So that's trying to illustrate that earlier. I think it's part of the problem, but I don't think it is a holistic problem that Adobe faces. It seems to be that if you look at the price action of the stock, the market has got this perception that Adobe is in deep trouble because of the ability to create your own documents and your own images using ChatGPT. But it's not just that one function that serves everyone. And I think the everyone aspect of the creative suite that Adobe offers really serves their broad market quite well. And that's going to be hard to compete with on a fractional basis using these different technologies that do exist. But again, they're fractional. They're not part of one package.
All right, great breakdown for us. Appreciate it. That's George Tillis, Senior Markets Correspondent here, helping us out here with Adobe. Kevin, I was looking at the chart, and I'm like looking for a simple moving average, a support, something. It's in no man's land right now. We're at the lowest levels that we've been since June of 2023, when we've got that big pop in the stock. RSI 25 at this point. So anything below 30 is considered oversold on a technical basis. And the stock's only down fractionally today, even with the downgrade. Yeah. So that's the way that I looked at it. Hey, maybe the pain is in this stock, but you want to stay risk defined on this example trade that I'm bringing to you today. Really short-term positioning. This is one of those strategies you can do over and over again if you think a stock is going to stay above a specific area. So I went out to the January 17th monthly option series here, Kevin. Just 9 days to expiration. Really short-term positioning. Selling a put vertical here. Selling the 415 put. And then against it, because I want to stay risk defined, by the 405 strike put. We've got a $2.50 credit on this. That's where it was trading earlier. Trading closer to about $2.30 right now in the midpoint of this spread. But a short $5 wide or $10 wide, neutral to bullish put vertical here in Adobe. Kevin, if you can collect $2.50, you got $7.50 at risk on this one. But it's almost like you're saying, okay, I've got a cushion to the downside down to 415 before I start getting hurt. But I'm still taking a directional bias on this name that's been beaten up recently.
Yes, about a 65% chance of finishing out of the money. But, it's a little more aggressive. Why is it aggressive? Well, look at the stock, look at the earnings, the story. There's a lot of assumptions that bad things are going to happen to this name. And like the market loves to do, Tom, it has discounted it down the entire bad story. And so now you have to decide, does this company have a future? Pretty well-known name, like George said, pretty hard to move away from. They've got recurring revenue. They've got stable recurring revenue. So it's tricky here, but boy, this stock is obliterated. And 440 million shares, not that big.
Yeah, as far as the float out there in the stock. But as I mentioned, Kevin, this is one of those stocks that, hey, if you see a stock like this, it's been downgraded, it's already oversold on a technical basis. Maybe you've been wanting to get into it. This is a way to take that directional bias while still being conservative with your view, right?
Yeah, exactly right. I mean, I think this is one you just have to understand. Maybe the rumor is not the same as the story.
Yep.
Because they still put up good numbers.
Yep. Week and a half in that short-term position. If you think it's going to stay above 415, that's the strategy, short put vertical. All right. That's going to wrap it up for us today here on Fast Market. But make sure you stick around right here on the Schwab Network. Next Gen Investing's coming up.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Welcome to Next Gen Investing. I'm Jenny Horn, joined of course by Alex Coffey. And Alex, unfortunately today, another session where we're seeing collective red. Although Microsoft now ever so slightly in the green, because I was just about to say that pretty much all of our tech trade is lower today as far as our behemoths that usually carry the market, but perhaps looking for some of this recovery on the session, although it does just feel like right now the good news that we get, at least in the morning, isn't able to hold. We're like, good news is still not as bad, and we're still seeing, I mean, yield spike here and a lot of the continuation of what feels like yesterday's activity.
Yeah, it's choppy, it's moving around a lot, but we're not really going anywhere. We've kind of been here all year long in this tight range in the market. This has been a battleground in the S&P 500 around 5,900, continues to be just that. But yeah, near session lows, market a little bit choppy here, anxious, I think, for these Fed minutes, and they'll come out in about an hour. We'll see what they had to say at their last meeting.
I know, I will say that I do feel like more so without earnings that we cling on to these various like releases and any sort of update you can get regarding, of course, more of the fiscal policy of 2025. And I do think also there's still a degree of angst around like what a new administration will look like here. But we'll step away from some of that macro discussion on our show. As always, we'll be kicking things off with upvote and downvote. Charting and trading our upvoted names. And for FOMO today, we're looking at actually the S&P 500's best performer, which might shock you. It's eBay, which is seeing some upside today after Meta said it's rolling out a new test that will basically integrate eBay listings directly now on Facebook Marketplace. So definitely good news for eBay there and leading the way here today. We'll also be looking at NVIDIA, actually, its second down day, although today down modestly, about 0.4%. We are also going to be joined by CFRA's Angelo Zeno for some key takeaways so far from CES, which of course, based on its price activity over the last 2 days, has not necessarily translated into a super bullish thesis, but I do believe those believers are still intact. And we'll close things out on our show with AngioDynamics, which is a medical device maker, narrowing its loss in its latest quarter and surging as a result.
Yeah, so a lot to get through. First off, whenever you have a day when a name like eBay is the best performer in the S&P 500,
I know.
If that's the only piece of information you have, you think one of two things. It's either a really, really strong day in the market and every stock is higher and they just happen to be the best, or it's a little bit of a volatile day and they just maybe had some news, kind of like it is today. Now, all things considered, we're down 0.25%. It's not much of a down day. But in this market that we're used to seeing a lot of green on the screen, it feels like a down dead day.
It does, and I entirely agree with you there because I feel like, especially when you look at tech, and that's frankly what I just keep paying attention to, and obviously I'm not alone because I think that oftentimes you have almost tunnel vision. You look at some of the pullbacks we've seen in major tech names, I mean, even NVIDIA's chart, which we'll get more into later, and it sort of makes you say, whoa, I mean, we're really like moving here. But then you look at the overall market, and I think that that's even an overreaction of myself.
Yeah, no doubt. And they're making a little bit of a run back up here, only down about, let's call it 1/5% in the NASDAQ, 1/6% in the S&P. So, hey, expect some volatility. That's the name of the game right now. VIX in the 18-ish range. Something to keep in mind. But let's do upvote, downvote, not endorsements, not recommendations. As we go through our list here, Jenny, the first two have a competitive relationship with one another. First off, DraftKings, then we'll look at FanDuel, its kind of key competitor in the sports gaming space, its parent company Flutter. Let's start with DraftKings.
Okay, and I do enjoy the fact that both of these stories, I think, coincide with each other because they're pretty broad in terms of the overall online gaming space. I do also think it's amazing that I was looking at a timeline on online gaming in the U.S. Before 2018, it was prohibited still almost everywhere. Now, legal in 38 states. So I know that legalization is still a major concern for the entire space, but gosh, you look at the metrics in which people are spending. I mean, we're expecting now $35 billion in bets to be placed on NFL games in the 2024-2025 now season, which is about a third more than last year's total. I mean, you want to find strength of a consumer, you look no further than the betting space because that's obviously very discretionary income. But DraftKings, as it stands, we are seeing a more cautious stance from Susquehanna today, actually reducing its price target to 54 from 56. Keeping a positive rating, though, on shares. They did say that December has been known to be more unfavorable for the bookmakers, so they are lowering their fourth quarter revenue and EBITDA estimates as a result. Although they did gain a buy rating from Craig Hallam, so it wasn't necessarily all negative today. There are 31 buys in this names, 6 holds, and no sells, no underperforms. So all speed ahead as far as the street is concerned. I will say the $51 price target right now is the average here, so that would imply, I mean, some significant upside from where we're trading.
It really would. This is a huge player in this space, if not the biggest player. It's competitor that we're going to talk about next. So it's kind of a two-horse race in sort of the growing sports gaming world. When you look at DraftKings, though, stock has been relatively range-bound for its own standards, really for the last year. A couple periods of time where it kind of ventured outside this maybe $35 to $40 range. But for the most part, it's been kind of in lockstep with itself, kind of going sideways. So a nice day today, despite the fact that it had that cut. And I think the big piece behind that, which is, hey, players on these apps won a little bit more because favorites were winning. That's not a secret anymore. I think everybody kind of knows that they talked about it themselves on their conference calls as well. And issued guidance and stuff associated with that. So when you take that into account, it's not really new news for the market anymore. And I think despite the fact that the analysts are upgrading and downgrading and moving price targets around due to this news, they're not breaking the news.
No, and I totally agree with you. And I think that to speak to the market share, though, of the two, of course, like a DraftKings versus FanDuel, they basically switch off. So, like, right now, FanDuel has a slight lead, I'm seeing, with 35% of the U.S. gaming market share. DraftKings has around 32%, but...
So you have over 70% of that is these two companies.
Yeah, it's basically a two-horse race at this point. I also do think it's amazing. I know that this matters some more to others than not, but I tend to think it's interesting that actually Flutter's market value, or market cap right now, is so much larger. The DraftKings is about 19 billion, and you have Flutter that's 45 billion. So as far as size of these companies, it's amazing that I just didn't realize, frankly, Flutter is that much larger. But to speak to the fact that some of the various games of the NFL and the way it's impacting it, which I think is such an interesting story, the current NFL season, Flutter did say, has been the most customer-friendly since the launch of online sports betting. They said that they've now seen the more and more favorites winning and the highest win rate in nearly 2 decades, pointing particularly to the significantly adverse results which occurred December 30th when the Detroit Lions beat the San Francisco 49ers 40-34, which was a great game for those that do support the Lions. Not so much, of course, if you are, I guess, maybe a 49ers fan. But nonetheless, they are now expecting their revenue to be well below what had been previously forecasted. They are expecting this revenue shortfall from, like just the Christmas games, basically, to hit their EBITDA by $205 million. And so Street's updating their coverage. I'm still seeing a lot that think that, again, this was a risk and this is not a new narrative. And like you said, it's something that's pretty well known at this point. It is just fascinating, though, because like from a personal interest standpoint, I'm like, I should start betting more maybe.
Well, who knows what will happen in the future, for one. But one thing that stuck out to me as we kind of talked both these names together, Flutter is also, for those who are more aware of the international gaming market, this is Betfair. So this is a big player in Ireland. This is a big player in the UK as well. And they actually still get a majority of their revenue, at least they did in 2024 and 2023 internationally. So that's very different than DraftKings, which is basically only operating in the US. So they're comparable in the US. They kind of go back and forth, but Flutter, formerly, I think it's Paddy Power Betfair, does have that Irish and UK exposure.
Oh, yeah.
Another thing that these companies have both focused a lot on is integrating traditional games into their online platforms. So things like slots, things
Boom,
like
baby.
Table games like blackjack or craps or roulette into those platforms as well. And while that might be, no judgment, quite degenerate to partake in, it is something that's available.
Out at 8:40. Randy. I'll be back. There's $9. What a mess.
Today, though, is one it's unusual to see Palantir now down about 18.5% from its high, down 8% this week. And gosh, what was a really strong, it felt like the last couple of months, is now seeing some reversal pretty starkly here, with more analysts piling into the downside. Deutsche Bank did downgrade shares last evening to hold from buy. Price target is 190 now, down from 207. So, I mean, it's still pretty, or excuse me, but when looking at Palantir here, I do think that it's still a name that has been, I mean, a really interesting mover nonetheless. And all things considered, this name is rose over 309% on a 12-month basis. Palantir now dropping for its third straight day, and right now loading more and more shares. So actually, Palantir had, of course, an undeniably strong last 12 months. But now we're seeing more and more notifications from management actually selling around 5,000 shares per ARC, and they're continuing to offload. Now, this was at one point their largest holding, so I think that doesn't necessarily mean, head for the hills by any means, but I also think a lot of this can be attributed to tech and the fact that we're seeing, like a massive pullback right now in seemingly tech. I don't necessarily see this headline as doom and gloom for Palantir.
Kathy Wood's allowed to have some winners every once in a while too, and she sold out of some of her Bitcoin holdings, some of her Palantir holdings. I think she's doing the prudent thing. She's exposed some of these names, big time movement. She reduced some of her exposure into that strength. Talked about being used to seeing volatility in this name. Just to put context to that, trades at about 75% implied volatility. The market right now, we're just talking about the market being more volatile right now at 18. This is 4 and some change times more volatile than the S&P 500, just from a volatility standpoint. So expect movement. And then if you have the company-specific things, it can really be dramatic.
Yeah, and I mean, today, not necessarily selling off by any means. I think that as far as like Palantir moves are concerned, a 2.5% move to the downside feels actually pretty modest. But it's been definitely a fun story to watch, especially, gosh, into the back half of 24. It was our major winner to close out the year, and one that's showing signs of maturation, no doubt. But we'll be diving more into some example trades in our sports betting focused stocks. We'll be talking DraftKings as well as Flutter. Perhaps the consumer is beating the house. So a fun conversation we'll continue having coming up next.
the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's of course now time for our Chartmaster segment. Today we have a sports betting focus. We're discussing DraftKings and FanDuel parent company Flutter Entertainment. So Alex, we'll start off with the one that I think is more near and dear to those in the US's hearts. That's DraftKings, which they basically both command 70% of the market share of the US gaming. So they're both enormous in this space. And today you are our honorary Chartmaster and Trade Master. So you kick off the chart here.
Yeah, no Rick today, so I'm going to do my best to fill in here a little bit. When we're looking at DraftKings, one of the things I said in the last segment, uncharacteristically sideways over the last year. You can see we started basically where we ended. 12-month net change on the stock is 11% or so, but that's well within kind of the volatility levels for this. And for those who recall, last time I did this, I have some color coordination up at the top to help me with sort of how is this stock performing. Comes up gray for 12 months, comes up gray for 6 months and 3 months, which is almost perfectly unchanged on, which to me tells me neutral price action over those time frames. Light green here on last week as well as today, indicating a little bit of modest upside, but you see it's moving averages here. I have a 1 week, a 1 month, and a 3 month. All these lines from the white to the blue to the purple. We're under 2 of them, and we're just above the 1 week. So maybe super short term, it's starting to uptrend just slightly, but more of those longer term, medium term levels, Jenny, a little bit more sideways to even bearish. So sort of a mixed picture here on the trend for DraftKings.
Yeah, and as far as I know, we're recently in a decline, but we've also, like we said, we just felt somewhat stuck. And I know it hasn't seemed that way if you've been actively trading this name on a short-term basis, but it does feel like we haven't seen a breakout that's been able to hold. Mm-hmm. So curious about the momentum of this trend here, and if we could see, I mean, hopefully a reversal and some more upside.
Yeah, so kind of sine wave-ish, right? Up and down. But the recent trend, going back to much of December, had been one of a move lower. And that is, of course, indicated there by our RSI down at the bottom, which was down near the oversold territory, but it has gotten up off the mat. And so while the stock has bottomed, at least recently, around 36 or so, we have seen RSI bottom as well. So Jenny, maybe, just maybe, the worst is over, but it's always too early to say until you got a little bit more price action, a little bit more time to compare to.
I know, and I wonder if we'll hear, because of course a lot of the news today was focused on Flutter and some more downbeat guide, so it does then point to the question of if DraftKings could echo a very similar sentiment, because I have to imagine, I mean, like, the favorable outcomes for the consumers for sports betting, it's not just specific, obviously, to Flutter, for example, but...
No doubt, well, in saying that, the negative news was clearly there, yet both these stocks have been higher today, which goes to, so maybe some of this is already priced in.
Yeah, you're right, that in itself is amazing, because I read the headline and I was like, wow, it really kind of inspired me for my sports viewing and betting own personal interests, but not for so much for these names. Now, when we were watching different price levels to consider, obviously we're about to look at an example trade, but what levels are you watching here?
Well, let's just keep it easy, right? First thing that we can see is the recent lows around, let's call it, just under 36 or so, and then also the recent highs around 45. And so you got this range. Well, we're a lot closer to those recent lows than we are the recent highs. So if you were looking at, okay, if it's going to stay within this range and you were just playing the back and forth, perhaps that would mean risk-reward benefits the bulls. If it does break below, you can see around 34 or so would be the next level, then 32, and then all the way down to these lows around, let's call it 28.5. Also, in the near term, the 1 week moving average, about 37.5, could act as a short-term support level. So a couple things to focus on the downside. 3 month and 1 month moving averages up near 39 would act as perhaps that first level of resistance. But let's take a look at an example trade, as Jenny said, using some of those levels, keeping them in mind. I got a neutral to bullish strategy in DraftKings. We'll switch over to the big screen here. Take a look at the risk profile, elongated Z risk profile associated with the short put vertical. And we use the strikes going on to February 14th, Valentine's Day expiration, 36, 34. So keeping it risk defined, using some of those support levels that we talked about to structure this trade. Looking for about 65 cents, perhaps down to 60 cents would still be enticing for some, around 30 cents to a third the width of the strike, 30 cents on the dollar of risk, a third the width of the strike. So right in that wheelhouse, 65 bucks max profit, 135 is the max loss. Break even at 35 down near those support levels that we talked about. Stay above 36 through Valentine's Day. This one has a chance to make 65. If it does break down and fall below 34, Jenny, then it has a chance, of course, to be at max loss, but that max loss is limited to 135. I know now we want to look at Flutter, parent company of FanDuel, as well as Betfair over in the UK and Ireland. Another big-time player in this space.
A big-time player. I was actually just looking at the revenue breakdown, and this is for all these names, not specific to Flutter, though, and it's just frankly amazing the way that football, even though I know it's not like an international favorite, for sports betting specifically, I mean, it just like, it's basically a third of the overall gaming revenue, and then it's everything else. I'd actually say it's nearly half. It's just kind of amazing in that sense. So we have the Super Bowl to look forward to still. We still have like the biggest sporting event of the year for
college football playoffs, Super Bowl, then March Madness.
We're in like peak sports viewership right now.
This is peak sports. And then we get into the summer doldrums where, maybe plug your ears if you're a baseball fan.
I was going to say.
Baseball.
I know, sorry to the producers, but yeah, and you got baseball. Right now we are in elite sports viewership, but as far as Flutter is concerned, yeah, I mean, a name it's frankly amazing with the news that came out today that they're higher. I mean, it wasn't necessarily saying, had any financial update that was wildly different than guidance, but anytime you're expecting more losses than gains, I think that's considerable, of course, to like the trajectory for these companies.
Yeah, first things to consider, below the 1 week moving average, below the 1 month moving average, all those moving averages are also pointing lower or sideways. So starting out a little bit disappointing that you can see the recent price action, it has been lower. But over the last 3 months, 6 months, 12 months, remember those were all gray on DraftKings. They were all more sideways. Really powerful performer, 50% gain over the last year, 25% over the last 6 months, and then even almost 8% over the last quarter where DraftKings was unchanged. So more medium term, it's been an outperformer versus its peer, but maybe more short term, it's been the underperformer. So kind of flipping places here. And when you look at that, it does seem that it's trying to find support near this 1 week moving average, which is around 255 or so right now. We're below that. So you'd like to see this level hold here if you were bullish in a name like Flutter.
I know, and obviously another name that's come off of its highs pretty substantially here. So when we're looking at momentum, I mean, is this matching some of the weakness? Because this is also, I guess, on a longer term moving average basis, it's also pretty flatlined.
Yeah, it is a little bit more flat to higher relative to DraftKings, but not the same story. So in this case, where you had maybe a little bit of a bottoming starting to show on RSI, bottoming to start to show on DraftKings in price, you're not seeing that yet in Flutter. So while the stock's up today, RSI is still near its lows. So perhaps wanting to see a little bit more from Flutter here before RSI turns up. So I would say jury's still out on momentum, clearly in the favor of the bears recently, but not quite to that oversold territory. Coming down from overbought as well, so it could just be an indication, Jenny, that maybe this had made quite the powerful run over the last 6 months. It was due for a little bit of a pullback, and we're watching that take place in real time.
Yeah, and frankly, it's not a name I keep on my radar as much as DraftKings, so I just hadn't realized, I mean, the pretty substantial outperformance it had seen over the last year or so. I mean, this name still remains up about 50% on a 12-month basis. So we're watching some price levels, and obviously we're looking at an example trade here, but more so, I think that, say, taking on, just for example purposes' sake, a more cautious or more maybe muted tone here.
Yeah, and so we'll look at a neutral to bearish trade, but I want to talk about a couple levels here. First off, the highs, 285 or so is something to look at, and then if you look to the downside, it's like 220. But there's not a lot in between. We had these moving averages, but it fell below all of them, so we could be watching the midst of a bit of a breakdown here. If you were to look to the upside, the 1 month moving average at 260, perhaps that first real key level of resistance, and that was the level that we used for this example trade. Couple things of note when you're looking at Flutter. Only monthly expirations are available, and only $10 wide strikes were available. So it's going to be a bigger trade in terms of example purposes, in terms of notional value exposed to this one, because it is a bigger trade. It's $10 wide versus $2 wide, 5 times bigger just naturally right there on a more expensive stock per share as well. 260, 270, February monthly expiration, which is the 21st. Looking at selling this call vertical, neutral bearish strategy, recent trend lower, not seeing RSI turn around, not seeing stock price turn around below all those moving averages, downgrade as well today. Risk profile is neutral to bearish, and you can see that with this particular strategy. 350 credit would mean max profit of $350, max loss is $650, break even 260, 350. So what you want to happen with this particular stock is for the call vertical spread to basically stay out of the money. How does it stay out of the money? We'll stay below 260, Jenny, through that February expiration date. So when we're looking at this one, kind of a flip of what we looked at in DraftKings. So if you got different opinions, maybe you wouldn't do something like this, but showing some different strategies and showing how that technical picture was improving in DraftKings and maybe not quite yet in Flutter.
Yeah, and then taking on, of course, a more neutral to bearish stance here in Flutter, but of course the betting on the betting stocks is definitely an interesting one, especially if you're already losing money on the games like I have been myself. But we'll leave it there for our sports betting combo today. But coming up next, we'll talk a winner in this market today. That is eBay, which is a surprising winner if you followed e-commerce in the last decade or so. But hey, being now tested on Meta's platforms, and we'll discuss why that's providing this nice upside coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab. Schwab, a modern approach to wealth management.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time for FOMO, and today we are looking at eBay, which is leading the S&P 500 here on a deal with Meta to be available on Facebook's marketplace, or to begin at least testing, I believe, for that to be available. I will say, shocking to me because eBay is so e-commerce of like the late 90s, 2010s, or early 2000s at least to me. But hey, maybe making a comeback here, and this share price would tell you that today. So joining us now is Caroline Woods, Senior Markets Correspondent, to tell us some more on this story. Caroline, I'm curious your thoughts, or if you're an eBay frequent flyer, because I don't think I've been on eBay in 10 years, but now I'm kind of curious because if it's going to be available on Facebook Marketplace, I mean, I'm compelled now.
Yeah, and we might be clicking on it if we see things on Facebook Marketplace that are compelling. And I was in your boat, Jenny, until about an hour ago when I started going on the eBay website for the first time in years just to get re-familiar with it. It's been a while, and eBay, who knows, maybe it will be making a comeback. It's certainly having a good day today on news of this Meta partnership. As you said, shares up about 10% right now, leading the S&P 500, the top performer on the S&P 500 today. And that's because Meta said it's rolling out this new test that will integrate eBay listings within Facebook Marketplace. So you can browse eBay listings on Facebook Marketplace, but then if you actually want to buy something, you actually check out on eBay. So they're doing this test first in Germany, France, and the US. It's a small rollout, so not everyone will see it, but we'll have to see where it goes from there. The benefits for eBay seem pretty clear. eBay can access a bigger audience. Facebook has more than 3 billion users globally, and we know the competition in the space is tough. There are other e-commerce rivals like Amazon and Walmart and Temu that have really given eBay a run for its money. So the hope is that this can boost eBay's marketplace business. And then for Meta, this will hopefully appease EU regulators who have accused it of hindering competition. You may remember late last year, the EU regulator fined it some $800 million for linking Facebook Marketplace to its Facebook app. Also accused Meta of unfair trading conditions on rival classified ad services to benefit Facebook Marketplace, and ordered Meta to stop engaging in what it called illegal activity. So this should hopefully appease regulators. Meta had said they disagree with that. They're appealing the decision, but they're clearly working on solutions to also address some of those concerns. And this partnership, potentially one of them. So eBay shares up about 9.5% today. Meta shares lower, the only Mag 7 name that hasn't turned positive, still in the red. But I think we could agree that this is a partnership that would likely be more beneficial for eBay than Meta, which obviously has been such a dominant force in the market.
Yeah, almost like throwing the dog a bone here to get the regulators off their back here from Meta, but that doesn't mean that there's not real tangible benefit for eBay, and the market's certainly treating it like that. Any analysts weighed in quite yet, or is this still too fresh?
I haven't seen any analysts weigh in specifically about this, but I do think it's important to note, we talk about eBay being sort of a name of the past, Jenny and I both did, and if you actually take a look at the one-year chart, eBay's had a pretty impressive run. It's up about 64% over the past year. It's only about 3% away from 52-week highs, so it's actually been had a pretty impressive run-up. That being said, if you take a look at the analyst breakdown, the majority of analysts are in the hold camp for eBay, and now, given this pretty impressive run that we've seen, it's trading above the median price target. The median price target's around $63 a share, and it's currently trading around $69. So let's see if any analysts, chime in, potentially adjust their price targets based on this deal. But I do think it's notable, that it has had a pretty impressive run, even though it hasn't necessarily been on my radar. And, I was browsing the website, like I said, and, they have these kind of focus categories that it seems like they're really trying to appeal to certain people. So you could buy auto parts on there, but also they have collectible sneakers, which we know have been big. And then also the luxury category was pretty impressive. I saw an Hermes bag there with some light scuffs for $18,000, but there is a 15% coupon right now. So if you're in the market, Alex or Jenny, there's something for everyone on there.
Well, Caroline, you had me at an Hermes bag. Now, I will say, I just looked on their website for the first time. Not a whole lot has changed from the last 10 years, but I do appreciate everything that you just said. And it is amazing, the luxury market. And even I did ask my cooler, younger little brother who said that for sneakers, like the sneakerheads are very much loyal to eBay. So I think that's a market where there's good money there and definitely like a cult following. So I mean, it's news to me. I'm an Etsy person whenever I'm not on Amazon myself, so I'll have to check out more of these luxury offerings. Unfortunate maybe to my own financial situation, but appreciate it and great insight in getting us both on eBay for the first time in a decade. Caroline Woods, Senior Markets Correspondent for the network. And Alex, when we look at this name, okay, so now I'm all of a sudden going to have an activity post-show to peruse on eBay here, but when we look at trading it, of course, I have to say that in the world of e-commerce, it's so cutthroat. You're going against the most expensive and the most, like, right now I have capital to spend with like Walmart and your Amazons, and this is a tough space. It's actually amazing the fact that eBay has been able to outperform, I mean, the overall market. And I know it's all relative because it's a smaller company, but if you would have said that to me a few years ago, it'd be hanging in there as well as it has, I think I'd be shocked.
Yeah, this is like a lifeline, though, getting thrown to it, though. Facebook Marketplace really disrupted this space, given the network that Facebook has. Then all of a sudden they have this classifieds marketplace section embedded within the platform that potentially has upwards of 1 billion people, billions of people.
That's a good point.
It really helps. Where eBay, you had to go to eBay. You might have just been going to Facebook to see what your friends were up to or post something on there, and you see the marketplace. So the fact that eBay will be associated with that is a massive, massive win. Me personally, though, this is like thrifting. This is like going to the Nordstrom rack or something and looking for the treasure. Like, I have a hard enough time going to the store and getting the things that I need and finding them in the store, not even knowing what I need yet, looking on eBay. That sounds just like the worst thing that I could ever do with my time.
I was going to say, I'm guessing that you're not typically one that's on these adventure, like scavenger hunts on these types of websites. The one thing that is nicer, though, about, I'm more of an Etsy user myself, frankly, but is nice about these types of platforms is I actually like that there's a middleman. I still have this natural mistrust from buying from a complete stranger. So Facebook Marketplace, for that reason, has always been intimidating to me, but I like that there's oftentimes like
somebody facilitating it.
Exactly, and there's like a natural mistrust in me for like these internet people you meet, but maybe that's just me growing up without the internet in the beginning, that I was always taught a natural mistrust.
You're alone in that feeling. I think that's probably something that many people have, and even so, even if it's not the interaction with the person, but maybe there was some sort of dispute about how much payment would be, quality or condition of the item, where if there's somebody in between that's facilitating that, maybe handling distribution, maybe you can settle those disputes that way also, which can be helpful.
And you still bid on eBay, I believe, which also is intimidating. No, just give me a price. Like, that's where I say I'm not doing any bidding wars. That is intimidating
not the
to
auction.
me. Not yet. The auctions, yeah, that is not my type of shopping. But when we look at trading this name here today, of course, having a really phenomenal day. I mean, breaking out to the upside well above its 50 and 200-day simple moving averages. And now adding to its near 62% gain on its 12-month basis. So walk us through an example trade.
Yeah, if you think that this is just the beginning, perhaps, of something that could be even, far more substantial to the upside in this particular stock, I looked at a pretty aggressive out-of-the-money call vertical here in the, kind of name of FOMO, that this stock could make a run towards $80, perhaps by that February 21st monthly expiration. Looking at buying the 72.5 80 call vertical, it's a $7.50 wide spread, just spending $1.50 though. So it creates this situation where you have a 4-to-1 risk reward, where you're risking $150 with a chance to make $600. So a lot of positive asymmetry, but that makes sense, right? Because you need this stock to move, almost 20%. Not quite 20%, let's call it 15%, for it to be near that max profit. So I say it every time whenever we do this type of a strategy, or a strategy with this type of risk-reward relationship. If you're risking a little relative to your max profit, you should probably know that, hey, maybe I don't have the highest probability of success on this strategy.
Right. Of course, I think that risk and reward is always a great way to sort of assess, like what the odds of success are, and of course, I think a great way to feel comfortable with those odds necessarily. So a name that's making a nice move and still leading the pack as far as the gainers on the session is concerned. We'll leave it there, though, for our FOMO discussion. Now, coming up next, we'll be joined by CFRA's Angelo Zeno to discuss NVIDIA, we have to talk NVIDIA, of course. We're mid CES right now. It's been pretty disappointing for shares, but actually here slipping into green territories. And we'll talk about maybe today's even recovery coming up next.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen in Investing. It's time to talk all things NVIDIA, which I wasn't even paying attention to. Now has slipped into green territory on the session after being lower throughout most of today. So hopefully bucking the trend, because we were pretty substantially lower yesterday, following some of the commentary out of their CEO regarding CES and some of the unveils we've already gotten from the largest name in the market. So the most important for that very reason. But here joining us now to discuss more on his takeaways from CES is Angelo Zeno, who's a senior equity analyst at CFRA Research. So thanks so much for being here. I'm so excited to talk CES and hear some of your takeaways, because right now the market would tell you that the event was not going well, but I've been tuning in myself, so I know that there's been definitely still a lot to be excited about.
Yeah, no, you're absolutely right. I mean, I think the event overall was kind of very upbeat. I think Jensen Huang, as far as kind of his keynote presentation is concerned, really kind of touted really three opportunities out there for AI and NVIDIA itself, kind of those three opportunities being agentic AI. And we do actually think 2025 is going to be the year of AI agents, or at least the start of AI agents. And then, of course, the other two were self-driving cars, which he actually think is going to be the kind of the first $1 trillion opportunity on the robotics side. And then finally, the robotics humanoids opportunity out there. And, he kind of unveiled a number of kind of software, hardware capabilities. On the software side of things, I think kind of the big takeaway was the Cosmos platform, which is going to kind of help make kind of developing kind of these humanoids a lot more kind of cost efficient in nature. And of course, they announced a number of new things on the hardware side of things, specifically as it relates to the gaming side. But all that said, I think you kind of had a sell the news type of event yesterday on the fact that, listen, it really is kind of the consumer electronics show. So there wasn't really kind of much talk on the data center side of things, which is nearly 90% of their revenue. And then, of course, you kind of look at kind of the build-up kind of into the event. I think it was only kind of right for the stock to really sell off, especially given the fact that they didn't update guidance when kind of analysts on a call the following day asked about it.
Angelo, it sounds like you echo then kind of the sentiment that we shared prior to this, which is with the run-up in shares and say like in NVIDIA, it was setting up for this type of reaction regardless of what came out of it. I guess that's what I'm hearing from you. So even though on the margins, some cool stuff we heard here, some interesting things to focus on, a little bit of a pullback in the shares, not necessarily a giant surprise. I want to get your thoughts on something a little bit more broadly here with NVIDIA and kind of the role it's playing now as we look ahead. IMO see NVIDIA in many ways kind of playing kingmaker for some of these other companies that are maybe just outside of your coverage universe. For example, they come out and they talk about, I think it was a partnership with Aurora Innovation and this Arbe, which is a radar company, I believe, out of Israel. And they're basically saying, hey, we're focusing on self-driving car, autonomous driving. But then it was Jensen saying, oh, quantum computing is like 20 years away, and all those stocks go down. Is that something that we can expect more of, where names like NVIDIA are going to kind of shift where the market focuses?
Yeah, I mean, I think you're onto something there. I think you're right. I mean, when you kind of think about, specifically what, how important NVIDIA really is to kind of the AI ecosystem here, right? I mean, they are really kind of the enablers of AI. And when you kind of look at all the opportunities that we're going to see, not only over the next 12 to 18 months, but over the next 5 to 10 years, it all really starts and ends within NVIDIA. I mean, we kind of hear about kind of some of these companies out there focusing on custom silicon chips and what have you, and there's a place in the market for all of that, especially as you kind of start moving to on-device AI. But as far as kind of, the growth opportunities out there is concerned, how markets are going to kind of, open up here, not only within tech, but as you kind of start looking outside of tech in these kind of addressable markets, other segments of the markets, whether it be kind of healthcare, industrials, and what have you, autonomous cars, NVIDIA, their processors are going to play a big role in all of that. And specifically, what they create on the software side of things is going to open up a lot of opportunities here. And that's going to kind of create new opportunities for companies not named NVIDIA, whether it be, again, on the tech side of things or outside of tech, that are kind of taking advantage of kind of some of the capabilities that NVIDIA is creating out there. So I would absolutely agree with that.
Okay, so I have to ask the $1 million question, but I'm just curious your thoughts on if we could see any formidable competitor come in and challenge NVIDIA this year, because I think that's where a lot of our minds are, is like, we won't maybe see this dominance, and we just won't see this dominance forever, frankly, but who could be the next, AI really threat to NVIDIA? Because it seems like from following this name so closely, there really hasn't been one for the last 12 or so months.
Yeah, I mean, listen, I think, NVIDIA will continue to kind of be the king out there, but, you kind of look at some of these other alternative players out there. The names that we have highlighted, Broadcom, Marvell, specifically have kind of been among our top 3 plays on the semiconductor side of things. AMD is more of a distant fourth, and the reason, AMD had kind of been viewed originally as kind of that second alternative on the GPU side of things, is the hope that they would kind of get some traction out there from the likes of Alphabet and AWS, among others. We haven't necessarily seen those orders start piling up kind of outside of Microsoft and to a smaller extent Meta. So we're kind of still waiting on the AMD story to really kind of play out to a larger extent, which is why that stock has disappointed. Broadcom really right now, I think, is kind of being viewed as that second alternative, and Marvell kind of that smaller player, which we think actually has more upside to it, given that they're more of that pure play on the custom silicon side of things. So I'd say those are kind of the 3 names that we like the most right now.
Yeah, and gosh, these names were having a banner close to 2024, so Broadcom was a really fun one to watch when it felt like everything else in this AI trade wasn't working. It seems like Broadcom, gosh, really has. So great insight, and really appreciate you joining us today to talk NVIDIA, which is not held on to its strength. We're basically unchanged on the session, but hopefully firming up here in real time. Appreciate it so much. Angelo Zeno, CFRA Research Analyst, so for joining us today. Now, coming up next, we will talk angiodynamics, which is a complete shift of gears here as far as our focus, but rallying on the back of its earnings. That's a medical device maker. We'll discuss more coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. It's time for Under 30, and joining us now is George Tellis, Senior Markets Correspondent for the Schwab Network. Hey, Happy New Year, George. Good to have you back. ANGO's on your mind. I believe it's Angia Dynamics. I don't know if I'm saying that correctly or not, but stocks made a massive move over the last month and some change, including today. George, what's behind this?
Yeah, good to see you too. Happy New Year to you all. Yeah, I think obviously if you look at the price action on this name, it looks quite interesting, at least on a few-year basis, considering the stock was trading around $30 going back to late 2022. But interesting enough, there's actually a couple catalysts here for AngioDynamics, which is essentially a medical technology company. They essentially provide the marketplace with medical, surgical, and diagnostic technology devices, and some of their mainstay products help deal with things like peripheral vascular disease and even internal elements associated with vascular blockages like pulmonary embolisms and even oncology tumors. So they use essentially like what are considered pulse or shockwave technologies, which are less invasive than sort of these, traditional sort of catheters that are used to deal with some blocked vascular, aspects to health concerns. But nonetheless, if you look at what's been going on with the business, they seem to be turning it around. There's also a catalyst today, and that's why the stock is higher by close to about 30%, give or take a percent or two. But they did report earnings where in essence the estimates were expected to be a loss of 11 cents, and they posted as a company only 4 cents of per share loss. That was obviously better than expected. And then if you look at sales, they were higher than estimates at 73 million versus 71 million. But the story for this company, which did revise guidance for earnings, still down at the very least about 36 cents at the midpoint of a loss per share for a full fiscal year versus 40 cents. The story for the company seems to be one of which the company had a lot of different products and a lot of different areas of med tech or medical devices, and they lost their competitiveness. And a few things the company's done in the past year is they're streamlining their business. They sold off their midline catheter business in early February. They've actually discontinued a couple of other small businesses or products that they had in development, and effectively they've been raising cash and streamlining their operations to focus just basically on cardiovascular and oncology areas of interest, including things like tumor ablation using pulse technology versus, more, harmful, if you will, things like chemotherapy or radiation, which is long duration treatments and can have quite significantly adverse side effects.
So George, I'm curious because I talk healthcare in relation to a new administration and the ways the government obviously has a role so often. But is there any possible implications of a new administration in some of these medical device companies, or am I off base there? I'm just curious because I do feel like healthcare, that's a primary concern right now.
Well, I think so. Obviously there's a lot that's probably going to happen, I suggest, the next few weeks, especially with the markets or individual industry groups, and that can present great opportunities for some or missed opportunities for others. But nonetheless, I think in this case, if we were to sort of, take a top-down view, this company's stock performance going forward may end up benefiting to some degree because of some regulatory easement in some capacity. Maybe some accelerated FDA approvals for ongoing technologies they have in the pipeline. But I think the story is really about a transition of the business. And we see this quite often, where all of a sudden stocks that have fallen out of favor, can last a couple of years, which is the case for this name. They turn the ship around. They cut expensive. They hive off unprofitable areas of their business, reduce competition where they don't fit the competitive landscape very well. and they raise cash, and they focus their business on where they can achieve scalability and economic rents or returns to shareholders. So I think that's more of a story here. So I think it's an interesting one. And, for what it's worth, the stock had been turning around over the past couple of weeks, irrespective of today's report on earnings, which were quite favorable, and has also continued to push the stock higher.
Definitely one to keep on the radar and to monitor. George, appreciate you going through those insights here with us. George Tillis back with us, senior markets correspondent for the Schwab Network. That's going to do it for Jenny and myself here today for Next Gen. Fed Minutes due out in about 5 minutes. Watch list is coming up next.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab. Schwab, a modern approach to wealth management.
Good afternoon and welcome to the Watch List. I'm Diane King Hall. Coming up at Eastern time here at the New York Stock Exchange. Let's start out with the roadmap of today's show. We're seconds away from the FOMC minutes release from the December meeting. We'll take you through what the governor said and what it means for the future path of rate cuts. Earnings season is just days away. Caleb Silver of Investopedia takes us through what to expect from the fourth quarter reports, and our panel breaks down the latest stories from the world of streaming, ranging from price hikes, M&A activity, which we've seen some this week, and Netflix's live event plans. They've done more of that right now. Let's start out with a check of the market action. With just about 2 hours left in the trading day, you're continuing to see risk-off sentiment really reign, although, things have been choppy for the S&P 500. It's trying for that 5,900 level. You've got S&P's off by about 10 points there. NASDAQ 100, tech sector still under some pressure, off by 0.2%. Blue chips lower by 72 points there, so mirroring the move on a percent basis of the S&P 500. Small caps continue to be the laggard. Russell 2000 remains under pressure, down by just shy of 1%. Let's take a look at some other asset classes on the move. Really been paying attention to some of the moves with the dollar. It's been hovering around that 109 level, approaching that. So you're looking at the dollar, the greenback continuing to strengthen up 0.5%, just shy of 109. Gold is still moving higher amid this, seeking for safe haven opportunities. You're looking at gold better by just a little more than 0.1%. So moving the needle slightly there. Crude oil has started to buckle. One of the things that we've talked to analysts about in the energy sector is watching the price activity in crude oil, because it had really struggled last year. It started to break out this year, but there was some concern around it on if it was sustainable, and as of now, it doesn't look that way. You're looking at crude oil under pressure, off by more than 1%, below $74 a barrel, approaching $73 a barrel there for WTI. Bitcoin under some pressure again. Bitcoin extending some of the losses that we saw earlier in the session, now below 95,000. Bitcoin posting a loss of a little more than 2% there. Now, let's bring in Kevin Hinks, host of Fast Market here on the Schwab Network, for some breaking news. We just got the FOMC minutes released just seconds ago. What do you see so far in terms of the read-through on some of the details? I'm just opening this up right now myself.
Yeah, we're seeing the headlines here. The Federal Reserve officials at their December meeting expressed concerns about inflation and the impact of President Donald Trump's policies could have, indicating they would be moving more slowly on interest rates cuts because of the uncertainty. So futures are down only about 0.05% since this number came out. So not big movements either way. You got the dollar, this was probably in the entirety as expected. Without calling out Trump by name, the meeting summary featured at least 4 mentions about the impact of changes in immigration and trade policy could have on the U.S. economy. So they were talking about inflation, Diane. They were talking about the overall strength or changes in the U.S. economy. I'm trying to read it along with you right now as well. So let's see what else we got here. Yeah.
Yeah, I mean, it looks like, obviously, it matches up with some of the commentary that we heard from the press conference after the last meeting, when Powell talked about some of the concerns popping back up about caution when it comes to further rate reductions. And so that's what we saw, that new summary of economic projections for this year, where we slowed the expectation of the pace of rate cuts. And Powell, one of the statements that came out of that at the time was that officials were starting to look at decisions as if they were, quote, driving on a foggy night or walking into a dark room full of furniture. One of the concerns at the time was just, what does the impact of tariffs look like, especially as it pertains to inflation? And, when I do a quick check of the times inflation is mentioned in this statement, 69 times. I mean, look, inflation, obviously one of the 2 pieces of the dual mandate that the Fed has to balance out. So it's not surprising to see it mentioned so many times, but it's clear that they've had to pivot back to that to looking through the impact of that and slow down the expectation of further rate cuts that we have for this year.
Yeah, here's another quote from the minutes that I thought was interesting. Almost all participants judged that upside risks to the inflation outlook had increased. So there's the pivot or slight pivot on the overall look about inflation. And in essence, that's why the SEP went from 4 cuts to 2, frankly. They're all worried. They think the overall worries about inflation had increased.
Yeah, it does. I mean, you're right. That stands out to me, too. And then the reasons that came up, worries about disruptions in supply chains. We know that that was a big factor when we saw inflation heat up majorly. I was about to say a couple years ago. We're in 2025 now, so we have to go back a few years about that. With regard to that, the disruption in global supply chains because of geopolitical developments, that's one of the concerns. And then the larger than anticipated easing in financial conditions. And then just that shelter price component. I know that they've been paying attention to that. That's obviously in CPI and not in PCE, but that stands out to me as one of the things that they're, having to ponder in deciding the road ahead with regard to rates, right, Kevin?
Yeah, I see that. And now in its entirety, the E-mini futures are actually slightly higher than where they were right when the number came out. So you're seeing a slight consolidation of the market. They had sold futures off right into the 1 o'clock number. Now that it came out 1 o'clock Chicago time, it looks like futures are easing back towards unchanged. Diane?
And Kevin, really quickly before we lose you, just to give us some insight from your perspective, especially when we watch what's happened in the market action. It seemed like that had to do with what's going on in the bond market and the moving yields. It seems like there's been some stabilization there, but what's your take?
Remember, when we get the Fed minutes, not sure the market should move, but it always does, right? Because this is a week or two old from the recent Fed meeting. That said, the market can't ignore the data we're getting and its effect on interest rates, its effect on the US dollar, its effect on crude oil, and all of those things are adding up to a overall look at inflation that may be slightly higher than expected. Crude oil now up over 70, now $73 and change is going to be higher than the last reading of CPI. That's going to affect that number. So I think the market is just getting whippy. They're not doing any real damage to it today. It's just they also can't really take it much higher based on the macroeconomics.
All right, there we go. Kevin Hinks, co-host of Fast Market. Great insight, and thanks for breaking the latest news we have from the Fed in the latest minutes. All right, let's widen out and keep going big picture with Anthony Soccaro, president of Providence Financial and Insurance Services. Anthony, thank you so much for joining us today. I want to get your perspective on your take on the market action that we've seen at the beginning of this year. It seems like there's been some resistance and some choppiness, so it's not a clear path forward from here. What's your take?
Yeah, well, you're right. It's not a clear path forward, and I guess the question is it ever really a clear path forward, right? The Trump honeymoon is still, I think, with us. It's certainly softened. It's not anywhere near like it was the first couple of weeks after Trump got elected. But with his pro-growth policies, going back to what you and Kevin were talking about, that could cause an inflationary situation to happen again, especially when you think about things like his tariff policies, policies on immigration. And inflation right now is the number one concern. The Federal Reserve has been priced into to lower rates several times this year. The fact is that's probably not going to happen. That's being revised. Inflation ticked up a tad. And the concern is that inflation does start to go up again, and that would mean that the Federal Reserve wouldn't even be able to lower rates. And, hopefully they're not in a situation where they would have to raise interest rates. But that's not an impossibility at this point. So there's still going to be a lot of volatility, and you just have to be prepared for it no matter what phase of life you're in.
Given that the Fed has kind of had to pivot back to focusing more on, especially getting towards that 2% target that they want to reach, how should it respond in terms of balancing the need for economic growth with not leading towards runaway inflation?
Well, there is that balancing act. The Federal Reserve doesn't want to be behind the 8 ball again. That's what happened several years ago when they said that inflation was transitory. They were behind the 8 ball, they didn't act soon enough, and then inflation went out of control, and now they were playing catch up. The question now is kind of the opposite. It's almost as if they acted maybe a little too early, and we don't know if that's the case. It's easy to tell them what they should have done in hindsight. But the fact is that, the question then is, should they have lowered rates at all? I'm not even sure that they should have lowered rates like they did last year, because the economy was still strong. This is a labor market. As long as the labor market is still tight, as long as there are workers out there and plenty of jobs, as long as hiring is robust, the fact is that our economy is going to continue to do well. So it's a labor market story that's determining where our economy is going to go from here.
So you say it's a labor market story. We'll get new jobs data this Friday. Overall, over the balance of last year, we had data points overall that showed we continue to have this tight labor market. There were a couple blips in the road, but largely pointing to a tight labor market. The expectation we'll see unemployment sticking around 4.2%. What does this tell you about the state of the economy?
Well, with 70% of the GDP handled by consumer consumption, that's what 70% of GDP comes from consumption. As long as people have jobs, they're going to continue spending money. But the labor market has softened. The fact is that when I was reporting 3 years ago, maybe 2.5 years ago or so, there were, I believe it was 1.9 jobs, almost 2 jobs available for every worker that was out there. Very tight. That number is now, I believe it's at 1.3%. Unemployment's gone from the mid to higher threes to now, as you mentioned, 4.2%. So unemployment's ticking up. As goes the labor market, as goes the economy, and consumer savings is coming down right now. Consumer debt is growing right now. So we're not out of the woods. The fact is that as the consumer continues to weaken and quit spending money, it's going to create some problems for the stock market. And that, I guess from an inflationary standpoint, that should be good. But from a corporate earnings standpoint, probably not so much.
I want to go back to earlier, you talked about President-elect Trump, soon to be president and inaugurated, his pro-growth policies. Where do you expect the impact to play out? Is it going to be economic growth, or are you expecting to see some outperformance in the market?
So I think there's a couple of big things to consider when looking at Trump. First of all, is going to be the regulatory factors. He's a deregulation kind of guy, and that is he wants businesses to be able to operate without being curtailed by all these regulations, and that's certainly going to be pro-business. The immigration policy comes into play as well too, because he's talked about deporting everyone. Now, no one thinks, or at least I don't think that he's not going to do a mass deportation. But if we start to get workers that are illegal out of this country, and all of a sudden you're going to have more jobs available, it's going to increase the tightness of the labor market already. That's going to wind up increasing wage inflation. And when you have a tight labor market, that's a lot of where inflation has come from. It's wage inflation. I'm an employer. I have a lot of employees, and I had to give a lot of them some pretty large raises over the last couple of years just to keep them. And although consumer staples, grocery stores and food, they can lower their prices as commodity prices lower. They're seasonal, can adjust their prices to compensate for inflation going down. Well, you can never get back wage inflation. I can't go back to my employees and say, look, guys, sorry, inflation's gone down. I'm now going to take back your raise. It doesn't happen. So companies that have given raises and kept employees or had to pay more money to get good employees over the last couple of years, that's sticky inflation. That's not temporary inflation. And if the labor market, if its immigration policies cause the labor market to continue to be tight, that wage inflation may come back into play, and that's going to be a permanent inflation. So that goes back to the inflation story. That could be a reason why inflation could start to go up again, and then the Federal Reserves are going to have to reverse course.
But, okay, to be fair, with regard to the wage inflation, and yes, that's sticky inflation, but even the Fed has called out that's not the biggest, worrying component of inflation. Even in the minutes that were just released, moments ago, one of the things they called out is that shelter inflation. That's one of the things that seems to be worrying. I mean, that has been a really, really difficult pain point for consumers, for people across the country. But Anthony, I do have to put a pin in our conversation. I love our conversation. I think we could obviously talk further about this. Anthony Siccaro, President, Providence Financial and Insurance Services. Thank you so much for joining us today. Coming up, we've got Options Corner. Tom Mike joins us to highlight unusual options activity from the day and how investors are looking to trade on recent news on Snap, eBay, and AMD. Stay with us.
I'm home.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. Time now for Options Corner, where we analyze unusual options trades seen throughout the day. For that, I want to welcome in Tom White, co-host of Fast Market here on the Schwab Network. All right, Tom, let's start out with your first one. It's in the social media space. It's not Meta. It is Snap. It's under some pressure today, but you found some bullish activity, right?
Yeah, definitely, Diane. But the stock's had a pretty good run so far in the month of January, up nearly 15% on the back of, you know what starts on Friday? It's the Supreme Court's going to hear TikTok's case as far as the upcoming ban on TikTok in the U.S. That is.
They're worried about, you know what? I think they're full of crap. Pow Pow is an idiot. I'm worried more about government spending that caused the inflation. If we cut the government jobs, I mean, they're spending out the yin-yang 40-some thousand jobs a month go to the government. Are you kidding me? That's the only thing that's keeping us at spending. And these are people that are going to be on pensions and half of them don't even work. Government employees. The IRS usually has about 10 people there now. When I first started there, the whole place was packed of employees. Now they don't even work there no more. They all work from home. Well, 5910s are really nice. There's $300 right there. Been one of them beautiful days. Head and Shoulders, boom. Snake, breakout, pull back, double, triple top, pull back 200, double top. Does he crush it? Boom!
In the January 10th weekly options that just expire in 2 days, the 71 strike.
Today's a money-making day.
5,000 of those were bought up for an average debit of about $1.20. So that break even is $72.20 over the next 2 days. It's about 4% above the current share price. But option volume in here on the call side, Diane, 18 times normal daily average volume that we've seen over the last 5 trading sessions. Not surprising.
1,500.
With this type of news out, this could be a big lift for eBay in the coming weeks.
Okay, all right, and let's take a look at the last one on your list today where you found some unusual activity. AMD, it's under some pressure today. It's had a downgrade, but you found some bullish activity. Can you walk us through what you found, Tom?
Yeah, it was a double downgrade out of HSBC. They put a price target of $110 down from $200, even though the stock's corrected pretty significantly from those all-time highs that we saw last year, off 46%. From that all-time
I'm
high
tired of winning.
Last March.
I'm tired of winning.
AI GPU revenue forecast from 12.3 billion down to 8.
Damn, just went up another 100
billion. That's what HSBC lowered it. The consensus is about $9.5 billion. So yeah, they don't see anything positive on the horizon. Even though earlier in the week at CES they did unveil new processors using their Ryzen AI Max series processors, but this analyst thinks they've got a long way to go, and maybe they're not going to dig into that market share that NVIDIA has at this point. But we did see some optimism. Maybe somebody tried to buy the dip in here, and this was out in the January 17th monthly cycle, so 9 days to expiration. Trader bought over 5,000 of the 122 strike calls, paid an average debit about 350, so that break even 125.50 where they become profitable over the next week and a half. That's only about 3% above the current share price. So maybe some call buyers in here trying to take advantage of this pullback with the expectations that it's going to rally back.
Okay, that pulled back about 4.25% for AMD too. And confession, since you mentioned Ollie and eBay, I'm on there too. I'm not super active, but I've been kind of looking around again. So maybe I'll join the crowd since that's where the crowd seems to be going.
Right.
All right, Tom White, co-host of Fast Market. Thank you, Tom.
Thanks.
Coming up, we'll dive into earnings season ahead with Caleb Silver from Investopedia. You don't want to miss that on the other side of this break.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the Watch List. I'm Diane King Hall, live from the floor of the New York Stock Exchange. Let's start out with a look on some movers in the market right now. Shares of Warner Brothers under pressure.
Damn,
Warner Brothers
1,800
Discovery, I should
now.
say, are falling after announcing it's increasing the price of its Discovery Plus app by $1. It is the latest streaming provider to announce a price hike. We'll have more on the streaming and media sector in our panel later in the show. Dollar General falling to a new 52-week low after Barclays cut its price target by $2 to $100 a share. Despite that cut, it is still about $30 above where the stock currently trades. The analyst remains bullish on Dollar General. Now, keep in mind, shares of Dollar General hit really hard last year. They're down nearly 50% over the past year. It was expected to be a winner in that consumer pulling back climate. It was not the case last year. Earnings season, though, around the corner. To talk about the outlook, I'm joined by Caleb Silver, Editor-in-Chief of Investopedia. Caleb, it is always great having you on and hearing your perspective. You have so much wisdom when it comes to all of the things that matter in the markets. Let's talk about the setup for earnings season, this next earnings season coming up really to kick off this Friday. What's the expectation?
I got 3 words for you. Curb your enthusiasm, okay? Year-over-year estimates. This is according to FactSet. 11.9% earnings growth year over year for the S&P 500. That sounds fantastic, except that was revised lower from 14.5% at the end of the last quarter. We've seen a lot of downward revisions. Now, 11.9, 12% earnings growth, fantastic. Take it any day of the week, except in the environment that we've gotten used to over the past couple of years with some of these mega cap companies just crushing it on the earnings front. 8 out of 11 sectors have revised lower. Companies revise lower all the time. This is another game we play.
It gives us a new hurdle to clear.
But that's a lot. And there's 71 companies actually have issued negative guidance so far. We're about to get into earnings season in the next couple of days. Only 35 companies issuing positive guidance. But when you look at a market that's kind of expensive still, even with this sell-off here, and you look at this downward revision, you got to wonder if investors are just not going to be impressed no matter how good the earnings are compared to estimates.
And especially when you think about, it feels like the tide might be turning a bit when it comes to sentiment. We had a guest on earlier, you know him, Jay Woods, who was predicting, yes, he is the best, predicting that basically we're due for a correction, and you know, it may kind of be a garden variety correction. Where does it seem like sentiment is, especially when you consider you all have from Investopedia just some you know, interesting perspective from your user base.
Yeah, so we ask our users, our readers all the time, are you bullish, are you bearish, what are you buying, what are you optimistic about? The latest sentiment survey we did at the end of last year, they were pretty optimistic because they were coming off of 2 back-to-back great years for the stock market and some of the biggest stocks in there, which are their favorite stocks. We've seen that pull back a little bit, and now you see our readers looking for ways to protect gains, looking for ways to potentially ride out a correction if we have one, looking to see if it's still okay or the smart play to lock in a CD at a 4% rate right now or a high yield savings account. So a little bit of caution, but our readers are self-directed investors that like to buy stocks. If they're looking for any dip opportunities, and look, we've had dip opportunities that have come throughout in the last 12 months. Guess what? Every one of them has been bought. We didn't have a 10% correction last year. We still have a stock market that is above its 200-day moving average. So
here we go again, another setup.
We're getting a pullback here, but since the election, and we had that post-election euphoria, stock market's only up about 1%. So it looks like we have come down. Jay's probably right. There's probably a few more percent.
The 59.25s.
Yeah, that makes sense. And then how do you anticipate the leadership, or what's your read-through on, what investors are paying attention to, especially when you think about the Mag 7 and the NVIDIAs of the world?
Yeah, well, NVIDIA's gotten us used to doubling or tripling its profits and its revenue growth year after year. And it kind of guided a little bit lower, if that's even possible, as of its last earnings report. That's one of the notable companies that has done it. So is First Solar, so is Apple, so is Exxon, so is US Steel. So if you look across the sectors, there's a little bit more weakness or just not as much strength as there used to be. Fourth quarter of the last year is supposed to be good for retailers, good for consumer discretionary stocks. Apple is already guiding lower on the December sales, so we know what to expect there. But the sectors that are guiding lower the most, IT, consumer discretionary, thank you, Apple, industrials. This is the largest quarterly increase of sort of issuing negative guidance relative to the 5-year average. Who's guiding up? Financials, communication services, technology outside of those companies, and utilities. Utilities should benefit in a time like this.
It does make sense that financials are guiding higher, especially in the context of the incoming administration, the pro-growth environment that we're expecting,
lower rates,
regulation, lower rates. That's helpful to the financials. When you think about, I want to just quickly, I know you've been doing some kind of checks on CES and the activity that's come out there. What stands out to you, whether it's NVIDIA or any other big innovations that we've heard?
Yeah, I think it's tough to get past the headlines from Jensen Huang, the CEO of NVIDIA, who was kind of downplaying the role of quantum AI, saying it may take a little bit longer. We've seen what that's done to quantum AI stocks, but their Cosmos platform that NVIDIA rolled out, pretty big deal. It's got the AI-generated real-world scenarios for robots and AVs. What could go wrong, Diane, when robots and AVs are kind of on their own? Segway's robotic lawnmower, that's going to take some summer jobs away. Atmos has these cool electric skates. They go 18 miles an hour with a 16-mile range. That sounds terrifying when you think about all the scooter and bike traffic we have here. And Amazon.
Skateboard traffic.
Yeah, but I'm organic. Amazon is out with its Fit 2 watch. This is AI assisted as well. So you see Amazon taking steps into the AI world. AI is everything out there in Las Vegas right now. I have a few colleagues out there, and that's pretty much the theme. But you're seeing a lot of cool gadgetry, some of it AI enabled, some of it just better gadgetry to make our lives supposed to be a little bit better.
For those of you who don't know, Caleb is a big skateboarder, so that's what the skateboard reference is. There's one sitting near us. Really quickly, I want to get your take on, especially what your reader view seems to be or interest seems to be in terms of crypto, especially when you have the administration that seems to be, kind of friendlier to that.
Yeah, price drives interest, so interest in Bitcoin, interest in crypto, basically at an all-time high. We've seen periods like this before over the last few years, but that $100,000 threshold, that got people's attention. Remember, it's about a year in since we got the spot Bitcoin ETFs. More adoption by our readers went from about 8% to about 20%, or interest in adoption. And we still haven't seen this rolled out on an institutional level yet. We haven't heard from the new crypto czar. We will in the next few weeks. That should be exciting. So interest around the space is super high right now. But our readers, and I think a lot of individual investors that have experimented with crypto, are looking for other ways to attach themselves to the market, whether they're buying the cryptocurrency itself, or whether they're buying the Bitcoin ETFs, or buying still the picks and shovels of the companies building the blockchain. Lots of interest around those stocks right now. Of course, MicroStrategy was the big stock last year. That's fallen off a little bit with price, but I think interest is there, and I think it's going to stay and grow.
But MicroStrategy is essentially like kind
of
a
Bitcoin treasury.
Yeah, exactly. Any other trends that you're noticing when it comes to what your reader interest is? Is there a trend where they're kind of paying more attention to bonds and fixed income now, as you mentioned earlier?
Yeah.
Is it worth it to invest in CDs?
Yeah, I mean, we came out with our terms of the year for 2024, and the top two were inflation and tariffs. 2024 last year.
2024,
Yeah.
okay.
So, but inflation and tariffs were the top two terms. Tariffs are on people's minds just because we don't know. Is it more bark than bite coming from the Trump administration? He could roll those out the day he gets into office.
Right.
What would that mean to inflation? What does it mean to valuation? What does it mean to where we are in terms of the economic growth picture? So a lot of people are concerned about that, but we always see this too. And there's a little bit of skittishness in the economy. People retreat and start thinking about their personal finances a little bit less than they think about their portfolio allocation.
More knife.
They don't change it that much. Individual investors like us, we just keep buying every 2 weeks, and it's hard for us to make changes. So we worry about what we can do to protect the house, and then we start thinking about how to keep building that portfolio, make it a little bit stronger for the new year.
But I think one of the things that you just said matches up with what we're seeing in terms of the price action early on this year in the market. It feels like the market's kind of muddling through and trying to figure out what is the incoming administration's first act going to be? Is it these tariffs? Are they going to be inflationary? And especially, you know, with how the latest economic data is coming in and how the fixed income market is reading that, and that's now sending some headwinds to this market. It's like, you know, it just feels like they're kind of searching in the dark right now.
Right, the equity risk premium, that's top of mind for everybody, because as we see these bond yields rise, you really have to ask yourself as an investor, what's the best place for my money right now and the rest of this year? People are tackling that question on their own, but I think a lot of people are still devoted to stocks, especially the top 20 that they love and hold so dearly, and for the last few years have delivered great returns.
All right, we will leave it there. That's Caleb Silver, Editor-in-Chief Investopedia. Always great to hear from you, Caleb. Still ahead, we'll look at the economic outlook under the new administration. That'll be on the other side of this break.
We got lower lows, so I have a little concern there. Lower highs. Do. Let me get my phone.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
It can drop down to the 200.
Is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platform.
The SPX here that can drop down and hit the 200 if it doesn't hold right now. So I'm about ready to stop out. Should have sold them.
Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Diane King Hall. For a look at the broader market and macro moments that matter, I want to welcome in David Strzeski, CEO of Sound Planning Group. David, thank you so much for joining us today. All right, let's start out with the macro picture, especially because we got new minutes from the Fed today. It didn't really change anything in terms of the market action. Obviously, there was a lot of commentary in the minutes about inflation.
Right.
It's part of the mandate of the Fed to keep inflation in check. You've been critical of Fed Chair Jay Powell's handling of inflation. Is that still your positioning, and can you explain to us What's behind that?
Yeah, as we relate to the Fed, I think it's important to think about this. My desire is not to be critical for the sake of critical, but when you have the ability to affect so many lives with the one or two decisions that you might make, that impact has such massive force.
We got a 1, 2, 3 off the 200 here.
Good idea, bad idea. Were we right or wrong? How's that thesis working out? And so we look back to, 2020, we had some inflation showing up because the ports shut down. Then when 21,
oh yeah,
we're sitting here, the supply chain, we got a bunch of dollars, chasing a few items.
Well, they come up with all kinds of excuses.
With systemic inflation, and it was told to be transitory the whole time. So.
Well, so to your point, I feel like my sense is that the Fed realized that they may have been.
Why do I feel like I'm the only one that's right about this? The excessive spending, I still think, is the leading reason why we had high inflation. Yeah, we and the wars and yeah, the supply chain. Where am I wrong about that? I heard him earlier saying, well, if they get all these illegals out of here, it could cause inflation. I don't know. It just seems like I'm getting it always wrong. I'm just the opposite of how these guys think. They don't want to blame the government. Okay, here we go, knifing. Right about now. See how it goes. I got 1 at 250 and 10 at 185. Might have to go ahead and just get out of these.
What might implications be of, people being deported that might be at your restaurant making food in the background?
Jobs.
So there's a number of things that are a really big deal to be paying attention to.
Again, this deported thing, I don't get it. cheap labor? Is that what I'm missing here? And I don't think there's that many of them working. Not out of, I've heard estimates between 12 and 20 million illegal criminals that have crossed the border. There's 275. Winning. All your crews are Mexican. And you probably pay them good too. That's correct. Well, I did watch a Mexican crew do this roof down the street, and they had it done in a day. There were probably 5 of them there, 5 or 6. They work like Amish. I seen an Amish crew tear down a big old place, and it took them about a week. But they tore everything, took the nails out, tore it all, reused the wood. It was amazing to watch. Oh man, this has been too easy of a day. I should have stuck around, but I had to go. I'm pissed in a way. All for my sister. We have 10 minutes to power hour.
Schwab Network. Available anytime, anywhere, on any device, for free.
For free.
Schwab Network.
Tesla bounced off the double bottom today.
Welcome back to the watch list. The media landscape continues to shift. What is ahead for the streaming space in 2025? I want to bring in today's panel. We have Dan Rayburn, streaming media analyst, and Naveen Sarma, media telecom managing director, S&P Global Ratings. Thank you both so much for joining us today. All right, Naveen, I want to start out with you. Talk to us about your expectations for the streaming space in 2025. We've already had some news in this space with Disney and Fubo at the beginning of this week. What's your view on what the space looks like?
Sure. So this year is going to be interesting because Disney and Warner's both showed that they can get to break-even profitability last year. This year is now the year that they've got to show profitability growth. And if you go by their guidance, it looks like they're going to both do that, but it's clearly going to be a show-me story for both of those companies and really for the space. But really, it's an inflection point. We've spent the last 4 years struggling with these companies all trying to get the profitability and grow their services, and some of them have done that.
All right, it's going to be a show-me story. Dan, do you share a similar view in terms of the outlook for the streaming space in 2025?
Well, we certainly started off the year with a very interesting deal between Disney and Fubo. So that's something that we have to watch 12 to 18 months in terms of how long the deal will take. But think about what we've seen in terms of WBD and others spinning out their business in two segments, linear and streaming. That's very interesting to see what might happen with some of those linear channels. And also what Netflix did, I don't think enough people are giving it credit for. In a 52-day window, they went from doing a boxing event to NFL on Christmas to WWE Raw this past Monday. And that's simply incredible because for global audience for Christmas, they had 31.3 million average minute audience for NFL, which was pretty astounding. Largest NFL game ever streamed, and the first time the rights have ever been global. So we expect more consolidation to come. We expect more deals to happen, but I think it's going to be a little more fragmented in terms of probably some private equity coming into the mix, as well as the large content owners and broadcasters.
And Naveen, I want to pivot back to you, especially with Dan bringing up Netflix as the heavyweight in this sector, to kind of borrow the phrase, especially when you think about they wanted to develop more in the sports space, and a lot hung on that boxing event, and there were hiccups.
Right.
Now they've since recovered from that. NFL did better. We didn't have those same hiccups. Is Netflix the company to beat in this space? Are they still the heavyweight?
So, no, it's clearly, well, in terms of streaming, yes, but in terms of sports rights, I think they're going to take it on a more gradual basis. Now, look, they're certainly going to, they also got the Women's World Cup in the United States, which they announced recently, but you can see them pursue other rights. There's not a whole lot of rights coming up this year. You've got UFC and you've got Formula One, and they may very well get one of those or some of those partial deals. But down the road, you could certainly see them vying for a larger NFL package.
Dan, I want to go back to you on something you mentioned. You talked about, kind of how we're seeing the separation of linear versus streaming, more of that. Is linear on life support now? Was it on its way to, its deathbed, essentially?
Well, no, people love to say that TV is dead and dying, but keep in mind, look at all the price increases. YouTube TV just went up by $10 a month this month. It'll go up. You've had Sling TV, which just raised pricing as well. So virtual MVPD services, their pricing is increasing as well. The big key takeaway here is that the largest cost to all these companies is content, and sports is at the top of the list. The Fubo and the Disney deal is very good because it's now going to allow Fubo to do skinny bundles, which means hopefully you can pay less for a limited selection of content, and it's more tailored for the audience, which is exactly what consumers have been asking for. Is we want to pick content that we want to see, and we want to pay for specific pieces of content. So we'll hear more from that deal. The other thing that allows in terms of the relationship between the two companies is that another streaming service can now come to the market with Venue Sports. So it's more choice for consumers, and consumers have already said they want more choice in the market. So the deal is definitely a good one for consumers.
Okay, I like that point that you made about more choice for consumers. And I'm going to send this back to Naveen for some reflections on this, especially when you think about choice for consumers. Does cable stand a chance now, especially when you think about the pricing, component of this, where consumers may question, okay, is YouTube TV worth it? Because if I'm paying for YouTube TV, Netflix, Hulu, or whatever it is now, Fubo, Hulu, etc. Is it better for me to just go back to old school cable? Well, I hate calling it old school.
Yeah.
It makes me feel like a dinosaur.
Yep.
Where do you see it doesn't seem like it's going to be a winner take all.
Correct.
So if that's not your view, where are the winners?
So if you add up all of the streaming services that you can sign up for today and you look at the ad-free tiers, it's about $120. Actually, it's probably an old number. It's probably closer to $130. That's kind of where the cable bundle is currently, right? So but it isn't necessarily a take one or take the other, because I think what Charter is doing and was doing this year will be really interesting, right? They've got the rights to offer streaming in addition to the rights to offer the cable TV channels.
Right.
And so they're going to bundle it together, and they're basically going to go to consumers and go, if you sign up for pay TV, you also get these ad tiered services. It's a huge savings for them, and it probably cuts their bill in half by $60 or $70 million. I'm sorry, $60 or $70.
Not million.
Yeah, not million. But I think that could be really important for cable, especially if a lot of the other cable companies follow suit, that could help slow down the rate of cord cutting and give extra life to the pay TV bundle.
Well,
They were off
I'm one of those people
yesterday and the day before, all but the ones upstairs.
this year, but maybe it will be some combination thereof. We shall see. We are going to have to leave our conversation there for today, guys. That's Naveen Sarma, S&P Global Ratings, and Dan Rayburn, streaming media analyst, with insight on the landscape for streaming in 2025. That's what
They're
we're doing.
closed tomorrow.
Download the free Schwab Network app. It's available in the Apple App Store. And tune in 24/7 on schwabnetwork.com. I'm Diane.
Back on
Keeble.
Friday.
Thank you for watching Market on Close with Oliver Rennigan up next here on the Schwab Network.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative.
I think some of the water machines could be turned down just a little bit. They squirt out a lot of water. Yeah, they should be there. But they won't be there tomorrow. The drinking water fountains, they got a pretty good stream coming out of them. And I've tried to figure out how to turn it down, but I don't know how. Nobody has complained about it though. 250, come on. I got 250 and 185. How did I get rid of it? I didn't.
Good afternoon. Welcome to Market on Close on the Schwab Network. I'm Oliver Rennick. Thanks for tuning in.
I didn't get rid of it. Oh, I think you just hit it. And when it says on demand, that means it's not on demand. I know I really messed up that day when I was in that trade. Let me see here. Well, there's the tutorial right there. He had the same look that I had. On demand for beginners. That's the kind of look I had. Master of the Thinkorswim on demand feature for back testing. I really messed it up. I don't know nothing about computers. About this program. Oh, you did the same thing? It scared the shit out of me. I might watch this tonight. Today's a money-making day. The Spy Lotto. Yeah, because if we don't hold the 200, I don't think it'll hold the VWAP either. I just scalped the SPX for a good chunk. But I'm done. Today was a good day. We didn't get that ugly pullback. See, we didn't open up with a breakout. I think that's what helped today out. I don't like it when we break out and I have a lot of uncertainty in my head. Then I got to deal with my sister. She's hard to deal with sometimes. She's not very clear. I still got to go get her.
Power, and then I feel like we've seen U.S. power demand remain pretty flat for the better part of the last decade, and now it is so important to like these various plants like Arizona has expressed they have these issues with the power grid already. I mean, where these major plants are being built. The U.S. demand for electricity is expected to surge 16% over the next 5 years, which isn't huge, but for a space that's been flatlined for a decade or so, that I think is significant. And the way these companies have to like work out these government contracts, it sounds like a nightmare.
For sure.
Today's sell-off, though, this name has been like, there's so much demand for this. I think this is just like a M&A story, and I think also tell me some more about acquisitions. Like, I'm ready for more M&A in 2025.
Get deals going.
Yeah.
Constellation seems more reasonable of a trade last year than the quantum stuff. We'll say that. We're going to come back and talk about some of the quantum blow-up with one of our guests here shortly. Thanks, guys. Thanks, Kevin. Thanks, Jenny. Appreciate that. Aaron Anderson joins us, SVP of Research at Fisher Investments, for a thought on stocks and how they connect into 2025's policy themes. Aaron, market taking a little bit of a breather here. Not just the last couple days, but you can stretch it really back several weeks if you look beyond the Mag 7. So should we be concerned about further deterioration?
Yeah, well, first, nice to speak with you, Oliver.
Thank you. Thanks for being here.
I wouldn't be overly concerned, but I do think there are a range of outcomes for stocks this year. I mean, I think right around the election, as often happens, folks got really excited, and then they started to get worried about some of the policies tied to tariffs, and is that going to be inflationary? I think you're still seeing some of the volatility surrounding some of the uncertainty that are just in the wake of the election. But overall, it's hard to be too negative on stocks for the coming year. Corporate earnings growth looks to be pretty good. The economy seems to be holding up reasonably well. Valuations, you could argue, maybe are a little bit stretched in the U.S., but not excessively so. I'm not overly worried about valuations today. And so time will tell if we'll see another gangbusters year like we've seen over the last couple. That wouldn't be totally unprecedented. Although it's pretty rare to get 3 huge years in a row, it can certainly happen. And I would say nobody's really expecting it today, which maybe makes it a little bit more likely than otherwise. But I do think there are a range of outcomes for the market this year. But it's hard to see something extremely negative unfolding right now.
I hear you on that. It's certainly nothing screamingly obvious. Seems like our big potholes around rates and office space and regional banks kind of got paved over a little bit in the last couple of years. We were able to give ourselves some time to work that off. But conceptually still, too, I have a problem thinking about the potential outcomes being skewed too hard positively when our valuations really only compare to the COVID bubble, .com right now. And COVID eventually was pretty nasty for companies that were bubbly and okay for some, but then eventually we kind of worked it off through the 2022 bear market in bonds and eventually stocks. Do we have to have some kind of come down? Because at least then we had stimulus to keep us going. I mean, we haven't had any like fresh liquidity into the market, I don't think, other than a couple of rate cuts.
Yeah, well, I think sentiment is, clearly not like it was in 2022. To your point, that was extreme negativity, extreme pessimism, and we've come a long way from there. But I don't know that it's wildly optimistic either. I mean, there are bubbles of that. I would say you're seeing some small bubble territories. Maybe some of it's outside of equities in areas like private credit and private equity. Maybe it's in things like cryptocurrencies. Valuations in equities are high, but if you look at the S&P 500, a lot of that is being driven by the Magnificent Seven, and you can quibble about whether or not those huge tech giants, are they overvalued or not. But certainly I think it's easy to argue that they warrant some level of higher valuations. I mean, these are just tremendous companies with great balance sheets and great margins, and they're growing quickly, and they've got good management teams. I think you add all of that up, those companies should have higher valuations. So to us, I would say valuations look not cheap, but not overly expensive. Sentiment is higher than it was, but maybe not quite yet euphoric.
How much do you think the market is riding on optimistic policy expectations? Again, to kind of talk out of both sides of the mouth, love that we didn't have a contested election. Love that we got through that without, chaos, and that we've got some, it seems, kind of unanimity building a little bit, perhaps some camaraderie again within the country. But what exactly can the incoming administration do to pump up growth beyond 3% without also igniting inflation?
I think that's a great point. Especially, what tools does the administration have to really juice growth a lot right now? I would say not many, and I don't think we should expect that you're going to get a huge boost to growth this year. And so I think for equity markets, to your point, it means there's a little bit of give and take going on right now. I mean, keep in mind that coming out of the election, half of the people liked the outcome in the country, half didn't. And the people that liked it maybe got a little bit overly exuberant about what the administration might be able to do and how much growth they might be able to generate.
Oh, you think so, huh?
That would be helped and hurt by all of that. But there's a whole other half of the country that's feeling a lot more cautious about things. And I think what we're seeing right now is a merging of those two. You know, inevitably what happens is you come through a presidential...
Hey, knucklehead. We want to get out of these wars. Hey, knucklehead, we want to close these borders. Overwhelmingly, Trump took the win, not half. So stake it and shove it up your ass.
Happening. I think that's what's going on right now. The people that were really worried about the election outcome are feeling a little bit better, and the folks who initially, in a knee-jerk way, got really excited about it, maybe now they're looking ahead and feeling a little bit of disappointment. And so I think for the market,
We're not disappointed one bit. We're happier than heck. You're disappointed because you're going to get cut off. That's what you're worried about, buddy. No more free money to you. Not like you've been getting in a way.
That maybe have felt a weight from the political environment where fundamentals are still good that might pose an opportunity going forward.
Okay, fair enough, and adequately argued for the rest of the 493. Aaron, any thoughts on Employment Friday? Any strong feelings on how that number might come in after some decent jobs prints this week from JOLTS and Jobless?
Yeah, I think it'll be just fine. I mean, I think the general trend of labor has been that, you know, folks describe it as weakening, but I think it's important to consider that labor conditions have come off some of the tightest levels we've ever seen. So while a lot of people see weakening in labor markets, what I see is more normalization. I think of all of the economic factors that are still feeling some of the effects from COVID, labor is certainly one of those. And if you look at labor force participation, which absolutely fell off a cliff during COVID and is now coming back, that's influencing the unemployment rate. And so what I see going on in labor today is still looking pretty healthy, but it's going through a normalization process, and I think that'll continue. So I expect this number will be decent. And, you know, as I look at the change today versus where we were maybe a year ago, I don't see that as being particularly weak. I just think it's looking more normal now.
All right. Aaron, great conversation, nice macro framework and discussion for us this afternoon. Good stuff to think about. Appreciate it.
Thank you.
Sure thing. Aaron Anderson, SVP of Research at Fisher Investments. All right, let's zoom in on a group that's getting thrashed today. Quantum stocks. Last time we spoke with nuclear physicist Nigam Arora, he told us that the group was pretty bubbly. So we'll talk about it and check in next as some of the recent winners come off hard today.
The Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Well, that's weird.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
bloodbath is in one group, pretty tightly focused. The quantum stocks, big winners of late. Some speculating bigger, better, faster than AI, are giving back a lot. Nigam Arora joins us, founder of the Aurora Report, a nuclear physicist in his first life. Guest here lately, and last time you were telling us this group looked pretty bubbly, pretty speculative. So is this a reckoning, the beginning of a reckoning, just a little bit of a pullback? What do you think, Nigam?
No. This is a reckoning. People who are in these stocks, for the most part, don't know what they're doing.
Think they don't understand the science?
They don't understand the science at all, and they are in a fancy land to make up, it's going to be this, it's going to be this, without understanding what it is.
He's Cajun.
So if you know what you're doing, this is, to me, it's like Christmas every day. This
Yeah. Well, you told us last time you were looking for short opportunities.
opportunity, for example, the Aurora Report members, we gave a signal yesterday morning before this bloodbath Saturday in the afternoon, but, before
Yeah, today, really, a lot of it.
This guy's funny.
Rigetti, that's on your board there, RGTI, we were shooting at $19. Then in the afternoon, we added more. And this morning we covered.
Yeah.
Great gains.
Yeah.
Right? And so every day there's an opportunity in these stocks.
How much do you think it's worth it to try and buy dips on stuff that had explosive moves? I mean, there's going to be folks who try and hold the line here, right? These were penny stocks, a lot of them, just months ago.
Right.
So do you think folks will look at a stock like a QUBT, it was 35 cents, October, and go, all right, $10, I got to try it there?
Yeah, people will do that. So we went short on QUBT,
Okay.
We made good money on it. We'll be out here. And QUBT, if it runs up again, like maybe 15, 16, we'll short sell it.
Okay.
I would not buy QUBT, but among these stocks, INQ, I'll take a shot at it from the long side.
Why that one?
Well, so in Consumer Electronics Show CES, there's a panel tomorrow on quantum computing, and INQ is participating. I'm hoping somebody asks them a question on their address. Is Jensen right?
There's no R and Q.
15, 20 years.
What did you think of those comments?
IONQ.
He said, look, this is like 2 decades out for real practical purposes, or has he got his own kind of book to protect at the moment?
You're smart. No, he's right, but you got to parse his words. He said before they're very useful, right?
Okay, yeah.
Very useful meaning compared to what computers do today.
Okay.
And in that respect, he's right. I agree with that. But market didn't understand it because I think quantum is maybe less than 5 years away. We're going to do one thing, and that is it can start breaking encryptions on crypto. And
Okay.
think about it. So the problem with quantum is it's full of errors, right? And people don't understand this, but there are a lot of different technologies, right? Google's Willow was superconducting technology. IonQ's is a trapped ion technology. There are 6 or 7 of them, the semiconductor dot, and so on and so on. And they all have different error rates. And people don't understand it. Even Willow, as impressive as that it is, it's 1 to the 10 to the minus 3, meaning you're getting 1 error out of 1,000.
Okay.
But that's in very controlled, only one thing. I suspect in general things they're probably going to get 10-15% error. So you really can use it. Okay. But now, if you're trying to not do encryption, but if you're trying to break encryption, i.e., you want to steal somebody's crypto.
The process goes from a different direction.
And you don't care if it's not right most of the time.
Exactly. You can take as many errors, that's what it is, right?
You keep on doing it,
It's an infinite process of elimination.
That's right. So
that makes sense.
So I think there are going to be a lot of opportunities in this quantum resistant encryption and those kind of things. I think somewhere we'll see a lot of volatility in cryptos and Bitcoin because of this. And I mean, it's going to be Christmas. It's just going to be great money making opportunity.
One of them is Seals Q.
I love it.
LAES, that ticker. What do you think about them?
Okay, so CLSQ is a subsidiary of a company called WKey.
Right. WiseKey.
It's Swiss-based.
This guy's funnier
they're
heck.
developing this quantum resistance things.
Yeah. To help people protect themselves against the aggressive quantum computer.
Exactly. So from what I'm able to tell, they have a long, long ways to go. Okay, you could not buy that stock based on fundamental merits, but they have a long ways to go. We don't know if they're going to succeed or not. But the way the crowd goes with sentiment, they're good ones.
Sure.
To keep on your radar, right?
Yeah.
You buy them and they go low. When you think there's a scare of some kind of quantum encryption breaking, you buy them.
Right.
They're running it up. Sell them.
Do you think that to come back to Jensen's comment, the idea of this kind of being a way, it's interesting that there are different tech that can compete, kind of the large language model computers that are being developed for Blackwell, and then possibly these quantum supercomputers. I mean, those are probably the ones that are way off. But the market kind of thinking that it's like a knock-on AI trade, to me, is like a great deal of irony in a way. It's like, it's one thing to buy Constellation Energy or an energy provider like we talked about.
That's different.
This is more just like because one tech is having a breakthrough that this other tech's going to have a big breakthrough.
No, I think people are insane. That's why I use the word fantasy. They fantasize this is going to happen, it's not going to happen. I think from an investment perspective, so we're taking three paths, right? One path is we're educating our members about quantum because people need to learn, right? And if we start seeing big corrections, we'll start taking what we call a long-term strategic positions.
You think some of these do have long-term?
Yeah, I think there's a worthwhile. For example, INQ.
Okay.
It's at $30, right? If I were to see it at $5 in a big bear market,
Oh, sure, you're gonna love it.
I'll love it, right? The Gaddy, if I see it at $2, I'll probably take on a position longer term, right? And hold on.
You think they can have volatility like that, kind of like some of the stocks we've seen? Go all the way back down to where they were early December?
Absolutely. And in the meanwhile, we trade for our members both from the long side and the short side, right? So I don't know why people just trade only from the long side. I mean, make money from both sides.
Yeah. And I know that's what you like to do, try and hit it on both. Okay, so looking for IonQ tomorrow at CES. From the scientific mind, if I could tap into your science mind real quick, what is, in your mind, the main limitation beyond the cryptographic prowess that we might be able to, because to your point on the cryptographic stuff, if you can house a quantum machine in whatever facility that has the environment it can function, you can just run it on infinite to try and crack a code.
Right.
But to have an application similar to what today's silicon-based semiconductors do, or what LLM machines will do, what is that limitation that quantum doesn't have right now?
Error rates. Errors are a lot.
Okay, so too many.
Right. And there are different ways to solve the errors. And what you're doing is you're bringing in more qubits to correct the errors. You're also bringing in faster conventional computers to correct the errors. So the errors is a problem. I think Jensen is right. We're probably 10 years away before the errors are reduced so much that you say, yeah, I can use it. Right? Okay. But for some niche applications, sure. And the crowd psychology, sure, let's play it.
It sounds like maybe the effort required to harness this great power of quantum is not worth the payout at this point.
Not yet. You got to have a very, if you're investing, not trading, investing, you need to buy these stocks at a rock bottom price, which we may get. Okay. It may take a year, right? We may have a big bear market, and these are the kind of stocks that lose 95% of their value.
Yeah.
And that's when you buy them. So, but the key is you have to be educated before that, right? So that's what we're doing with our members. We're educating them on quantum, we're helping them with trades, but we're also educating them so that if these stocks fall, we're talking about 80-90% from where they are, we want to buy.
Okay, so looking for more downside to enter for most of them, an exception being IonQ to watch for tomorrow around CES.
Sounds good.
Love to catch up. Happy New Year, Nick. Thanks a lot.
Happy New Year, Oliver.
Yeah, good stuff. Hang on tight. Nick Aurora, founder of the Aurora Report. A nice conversation on quantum stocks and a give back today after a big rally. When we come back, Options Corner. We're looking at some flows as the S&P tries to go positive here with a half hour left.
When it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
No can do.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
S&P trying to go positive here. 59.11 would be a small advance if we could hold this level.
Trying.
Join us, Manager of Trader Services at Charles Schwab on the options beat today. Shane, good to see you back, sir. What do you think about this flat line for S&Ps today? A small little victory for bulls or a draw?
I call it a draw. I'm a little uneasy about which way this thing's headed.
Yeah.
And we'll get into that here momentarily. But I would say right now, I think this is still uncertain. And I almost wonder, too, if the, unprecedented holiday tomorrow, or I shouldn't say holiday, but day off, due to the passing of President Carter, has anything to do with the sort of flatness of today, given that knocked out an expiration in the middle of this week.
Okay. So tell me how that affects the expiry. Are we seeing bigger volumes around that or what?
So given that tomorrow's expiration is now being cut short, when you think about it, anybody that had positions in options for Thursday's expiration in any of the indexes, well, Thursday's not really going to trade anymore. So that's now something that is kind of a wrench in some people's books potentially. I don't think it's enough to necessarily drive a ton of movement, but at the same time, what you might be seeing now is a combined hedging of both today's expiration and what would have been tomorrow's expiration here all at once at the end of today, if that makes sense.
Okay. The big positioning, is it skewing negative? Tell me why you sound a little bit ominous in your tone out of the gate there.
So with the rest of this week, today, it's pretty hollow with where we're at. Between 5,900 to 5,950 is likely the range for the rest of the week. However, if this 5,900 level gives today or Friday, this 58.70, 58.75 seems almost like a hit to the downside there if that level breaks and holds. Whereas, if it can stay the course, kind of keep running flat, the term some people love, never short a dull market, if nobody else comes in with much selling pressure, it's very possible we can flow back up to 59.50, and that's the bull's ideal close for the week. Get back up to 59.40 to 59.50, and then go into next week's expiration, which is a pretty big one. January 17th is essentially monthly option expiration, and it is accounting for about, I believe, 20%
I don't know why you
of
see
interest right now in SPX, roughly. So, looking further out, there we're seeing 5,900, 5,950, 6,000 seems to have a solid balance of volume and appetite, we should say. This is gamma for this Friday that we just saw there. But volume we're seeing today and the monthly contracts for January, there's a lot.
50 SMA, that's what he's talking about.
Going on at 58.75.
Okay.
Depending on how that goes, if that's enough to draw this thing below 5,900, that's where we could see, okay, 58.75 starts to stick. Now all of a sudden 58.50 is a little bit closer. And the reason why I'm so uneasy on this is because I'm not seeing as much activity to the upside, or in the calls, I should say, as I'd like to see. And simultaneously, there's that gap from the election, right, down near 5,800. And I think that that's been something most people have pretty much forgotten about since that happened. So where I think there's a lot of attention should be focused on is 5,800 essentially fills that gap. 5,700 is then the sort of base below that we established prior to the election. So if for some reason we continue to drift lower and that gap becomes more and more likely to fill, you're really going to want to keep an eye out on the 5,700, 5,800 expirations in the coming weeks and monthly expirations going into February and March. If we see below it, it's very possible if those levels give, we've turned across a big level. Not great for bulls.
Yeah, it doesn't seem like, other than that election gap, there's a lot of strong positioning to create covering from shorts, whereas to the upside with 5,900
SPX at 125.
Line in the middle, sticking with the Friday gamma up.
SPX Lotto 59.15 at 125. $180. $210, $220.
$875 potentially could touch again on the day. If it can break above 59.10, we might get some leakage to the upside towards 25.30. So, I wouldn't put out a potential 10, 15 point movement here in the next 20 minutes, depending on what happens here to the close.
All right, thanks. 59.08 right now. I guess an okay place to get stuck for the day, but kind of a scary bit of a cliff we're looking over as far as positioning goes below 5,900, with the exception of a few little spots there you mentioned in the mid 58s. Thanks, Shane. All right, sounds like looking for a decent move here by Friday. Coming up, we're going to talk some commodities, looking at crudes give back today, but gold hanging in there pretty solid, and some more on Ally Financial today as the developing story. Will take a look at a few moves they're making, closing down a sizable portion of their business. This is coming on the heels of them wrapped up in their Carvana story.
Trading at Schwab is powered by Ameritrade. bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
125 to 265. Boom, baby.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25
What did
stocks.
Carvana do today? Didn't do it.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades and full hour of trading insights. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market.
There's a lot of cars that got bulldozed down in California in them fires.
Ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I remember them using that excuse with the hurricanes. Said the used cars would go up because of the hurricane that we had, and all them cars got drowned. With a bunch of cars got bulldozed in California as they try to go through the streets to fight them fires.
Is causing a little bit of at least short-term selling pressure and the stronger dollar. But, you know, we did see crude pop up to that 75 level before this reversal early in the morning. It really came after the release of the EIA report for the inventories, and not so much in the crude space, but when you look at the, gasoline as well as the diesel, big builds there, and also I think just the overriding theme here that crude has had this nice run higher, but in the face of a stronger dollar and concerns about potential supply moving forward. But when you see a number like today, I think that at least short term, it's alleviated some of the concern regarding, supply from a global perspective, and that's why I think we're seeing the selling pressure work its way through the market this afternoon.
Okay. Crude showing enough strength the last 2 weeks to interest you in buying the dip today or not?
Not really. No, I mean, I think that, there's still the long-term, when you look at global supplies and some of the areas, particularly Russia now, with the natural gas theme unfolding earlier this year, as it does appear now, at least for the time being, that another route of natural gas to Europe has been eliminated. That I think that's working its way through the energy space over this first week, and that's probably helping to lift the prices in the crude markets. But I think longer term, unless there's some major unrest or some shifting dynamic as far as supply coming out of the Middle East, I think this is just a short-term reaction to some of the other themes in the market. And with a stronger dollar holding here around 109, it's going to be a pretty good headwind for crude to maintain this 70 to 75 level. I could see us drifting back down, at least short-term, to 71.5.
Okay. Yeah, it looks like, there might be something to think about considering how long it traded, basically with $70 at that kind of, pivot point, a couple bucks below and above that. Also, this sell-off allows you to draw a pretty clear diagonal line all the way back to $88 from April, so much of it could be argued in trend.
Absolutely, yeah, and again, we're peaking ourselves. You're seeing a shifting dynamic within this trends over the last couple of months. But to me, I think right now, based on what is from a fundamental standpoint,
Oliver. I think that the market is getting a little bit ahead of itself. I think it's also, again, being dragged higher because of concerns about natural gas supplies moving forward, and maybe that will uplift crude demand globally. But the other dynamic is China continues to languish, and that's another factor into the push-pull mechanisms in the market. And we're not seeing that demand really increasing as the market had anticipated just a month or so ago. So, and as long as China continues to struggle, and from a global demand standpoint, it does appear that the market's well supplied, unless there's a situation where we see a disruption in the Middle East.
All right. Natty gas, an easier dip to buy, given how freaking cold it is?
That and the pipeline being shut down. It's not surprising. We did see quite a reaction. I think it's going to remain volatile as we move through January, particularly with the cold snap here, and also Europe experiencing some pretty below normal temperatures. So that could certainly help support the market, at least short term. And we'll see, if there's any resolution or if there's any shifting dynamic as far as supply being brought back online from some of those pipelines, particularly the one from the Ukraine, that would shift the dynamic. But right now, another distribution center for Europe being cut off is enough to keep the prices, I think, continuing to move higher.
Okay. Good analysis, helpful on the commodities. Thanks, Dan. Appreciate that.
You got it, Oliver.
Good stuff. Managing partner KKM Financial. And gas catching a bid after a couple soft days, but crude oil weak in the session. Let's go to Jenny Horn with a developing story. Oh, she's right here.
I'm back.
Hey, Jenny.
I think I've been here a lot today.
Love to have you. Let's talk Ally. Last time we were discussing it was that they were kind of giving the all clear to the Carvana loans. Turns out, though, they're a little pressured for business right now.
They are, but I think the headline would make it seem worse than what the story is.
Yeah.
I initially saw the move and I was like, well, wait a second here. We're not really reacting at all. So laying off less than 5% of their workforce, sure. So, I mean, that's modest, though, as well as exiting their mortgage origination business, which I will say they earned about $27 million from that on their last earnings. So it's not huge when you look at their various aspects of business, but they did say they're also looking for some of these strategic alternatives for their credit card business now as we kick off the year. Part of this is really their efforts to right-size the company, and adding that the layoffs are not really specific to any various business segment or location. The CFO did give some comments. I mean, earlier, back in 2024, actually, where it's borrowers, they said we're struggling to keep up with loans because of the high cost of living. But this should not be a new narrative. I mean, we're saying that inflation is easing. That, I mean, as far as like economic standpoints go, aren't we talking about improvement? And I feel like this name has actually weathered that storm quite well. Despite that, I think many of us said we were more skeptical on these companies with such exposure to, I mean, loans, and the fact that their net losses
exposure.
are also surprised. But
Boom, baby, again. Brought the 200.
The strength of the U.S. consumer, which frankly has surprised many. I see this name as one that actually could see it for further comeback here, frankly, especially when you look at its actually valuation is so cheap right now, relatively speaking.
Yeah, fair enough. Definitely gotten hit over the last couple weeks. I've got to be honest, I'm more interested in the story from yesterday or the other day about...
With Carvana?
Yeah, about them basically, renewing their relationship with Carvana because, I don't know, kind of sounds like, maybe there's some incentive to get into some of the more edgier type of loan stuff right now, if that's what Carvana's doing, in a time when they're getting out of the mortgage origination business, when they're laying off people, when they're having a little bit of difficulty, then maybe that might incentivize them to stretch a bit for some of the Carvana stuff, but I might be stretching there. So.
And also, I think lessen the exposure on like a consumer-to-consumer basis. Like I like the relationships with these corporations. I think it shows signs of a more mature Ally Financial, which frankly is still I look at as a relatively newcomer in the space.
Yeah. Okay. All right. Fair enough. Ally down over the last couple weeks, but not terrible today. Thanks, Jenny. Appreciate it. When we come back, big picture discussion. Our Schwab team taking us into the bell. Be right back. Got 7.5 minutes left.
Trade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
We're hanging on to the smallest of gains here. Heading into the last few moments, Joe Mazzola joins us for a chat. He's head trading derivative strategist at Charles Schwab. Joe, great to see you this afternoon. We got VIX right now 17.6. It tried to move higher this morning, came back down. So maybe a little fear from yesterday dissipated.
Yeah, it's traded on both sides of unchanged today, Oliver. So I don't know. I think the markets are kind of positioning themselves. Tomorrow markets are closed in observance of the passing of Jimmy Carter, former President Jimmy Carter. So if you can't trade on a day, right, it's no use paying that time decay. So I think that's part of some of it coming out. Let's think, as NVIDIA kind of turned around midday, that gave a little bit of a bounce to the market. But I think you have to look at this market throughout the multiple sectors today, because if you're starting to see some of those high beta names get absolutely clobbered. Today was quantum. We saw a little bit of that in some of the sub-nuclear space as well too. Anything that is kind of driving that need for additional energy, really took a shot from Jensen Huang's comments.
The potential for data on Friday to rile us back up again. How high is that in your mind?
The jobs data, the last couple figures that have come out, whether it's claims, ADP, or even job openings, are pointing to a market that's still fairly strong in terms of jobs. So, when we got those data points, and I'll even add the ISM data from yesterday as well too. A lot of those points really kind of took the wind out of the sails of the multiple Fed cuts this year. Basically pricing down to one, without any cuts really coming until near July, or at least that's what the odds are showing right now. So I think the market is going to have to kind of recalibrate and figure out, okay, what will it take to kind of push to new highs if that Fed put isn't there? And what's that going to be, Oliver? It's going to be earnings. And so next week we'll get our first look at the financials. I would assume that those would be pretty good, kind of given the backdrop that they have. Steeper yield curve, a lot of optimism around changes in terms of regulations, and then changes in how that might affect M&A activity. So there's going to be optimism there. I think where the rubber meets the road is going to be once we start hitting the tech earnings. I think that's where the market's going to either reprice or continue to move up. Okay,
that's where we bring in Michelle Gibley to give us some global perspective on what other bond markets are doing too. Michelle, I see headlines around what's happening in England, and I thought we were in a very different position than them, but it seems like their yields are moving higher anyway. So what's the story kind of?
Do you want me to go down there and check to see if the fixtures came in and put them in the utility room in case they do show up early, or you want to wait until the business is open? They will be closed tomorrow.
Difference between us and them, I guess maybe I was oversimplifying for a while, because I didn't think that their economy sort of had the ability to generate higher interest rates, when it seemed like a lot of ours have been connected to better than expected economic data. Is there any positive way to spin what's happening across the pond? Because here there's a pretty easy way to spin a positive. We could say, hey, rates are going up. yields are going up again, but our economy is really strong. It doesn't quite sound like we can do that for the UK.
Yeah, I think it's a little bit of a concern in the UK. I would say in general for Europe, sentiment overall is pretty low. And in terms of stock investors, that might be a good thing. We're seeing the MSCI EFA index, overall developed international stocks, outperform since the Fed meeting in December. The dollar's up 2%, that's a headwind. And yet, even despite that, international stocks are outperforming. And the MSCI EMU index, that's the Eurozone, trading at just 40% of the valuation of the S&P 500. So, what matters more than good or bad for stocks is better or worse. So if we can get some kind of improvement from the worst case right now, that could be good for stocks.
All right.
All righty. Well, today was definitely a good day. Now, one guy said something interesting about people had expirations due on Thursday, so they had to maneuver and get out of them today, which I hardly ever keep the same expiration date anyway. I'm usually out before that day comes. So I don't know exactly what he was trying to say there. I don't think it would affect it that much. We've had a real good sell-off. That's a fact, Jack. Just looking at the SPX on the 20-day. And we've had these delicious bounce backs up. So we could be due for another one back up to the upside. We got a little head and shoulders right here. We came down and hit that head and shoulders. A two-headed snake. Whoa. So we got the left shoulder and the right shoulder, and we came down and hit it. Kind of like a symmetrical flag off these two engulfing candles we had here. We got a gap right in there we'd have to break. And that's probably at 59.20 area. So we'll find out Friday. I want to wish everybody a good day. Thanks for your help today, Mike, Randy, and Bob. Magnificent. I seen y'all were working pretty hard when I was gone today, so thank you very much. And that's about it. Thank you, Mike.